Yes, guys, good morning. How are you all? Thank you. Yes. Okay, guys, so let's quickly revise yesterday's discussion and then move on to today's discussion, that is house property. So, yesterday we saw the new default, the regime, the entire thing, up to 3 lakh, 3 to 7 lakh, 7 to 10, 10 to 12, 12 to 15, more than 15, all that we saw. Yeah, and of course, then we understood that if your birthday is on 1st April 1965, you will be completing 60 years at what age? 31st March 25. 31st March 25. Even though it is 1st April 25, it is deemed to be 31st March 25. Then we understood the concept called surcharge, which is extra tax. So it is 50 lakh to 1 crore is 10%, 1 crore to 2 crore is 15%, 2 crore to 5 crore is 25%, and more than 5 crore is 37% in the old regime, 25% in the new regime. Health and education cess is 4% on tax. Rounding off all these things. Then we saw a few sums and all those things. Then yes, surcharge on specified income on the other hand, that is dividend and capital gain, because it was earlier taxed in the company, now suddenly it is now being made taxed in the hands of the shareholders. So because of which the surcharge maximum limit is 15%. Then we saw the tax rates for companies. For domestic company incorporated in India, 30%. And if the gross receipts or turnover in the year 22-23 is less than 400 crore, then it is 25%. And the other two companies where it's like, some conditions you need to follow, then it is less, 22% and 15%. Surcharge for domestic company, if it is 1 to 10 crore, 7%, more than 10 crore, 12%. On the other hand, for foreign company, it's 2% and 5%. Tax rate for firm, LLP, local authority, yes, 30 flat rate. Then we understood the concept of marginal relief in the old regime. So what, old, new, both are the same only. So what should we do in the old regime, new regime? So it is up to, basically it is ultimately whatever I am earning on the, whatever I am paying on the limit where the surcharge is shifting, that plus anything extra that I am earning, I need to give. That is called marginal relief. So first is you should calculate the tax on the total, and then you should calculate the tax on the surcharge limit, and then the difference between total income and the surcharge limit, and that extra you need to pay. That is marginal relief, that also we saw. Then rebate. We understood the concept of rebate. For the old regime, rebate used to be up to 5 lakh. There is obviously rebate, 12,500 or tax, whichever is less. But in the new regime, limit has been increased to 7 lakh. So rebate is tax or 25,000, whichever is less. And if it is 5 lakh 1,000 in the old regime, there is no rebate. But if it is 7 lakh 1,000, 7 lakh 2,000, there is definitely rebate, similar to marginal relief. So first I need to compute the total income minus 7 lakhs. And next is compute the income tax payable on total income. Then if 2 is greater than 1, then rebate will be 2 minus 1. This is what we saw. So we understood the concept of rebate. Then diversion of income, application of income. Diversion is diverting from the source itself. And application is whenever I get the money, if I shift it somewhere else, it is called application. Did you read the notes yesterday? Yeah. Any doubts? Anybody couldn't read? Be honest. Anybody couldn't read? You, what is your name? Soumya. Did you read? Understood your name? Did you understand? Did you read? Sure? Okay, then. Income recognition, don't read it. We will see it along with the other things. Okay? Cool. So, yes guys, now we will go into a very, very interesting topic. Let's write down income from house property. Income from house property we will see. So, this is income from house property. Come on guys, let's write down. This is a very interesting topic. Income definition we will do along with the other classes, because for that we need to know a little bit of PGBP. Others, did you study any problem? Any problem? Yeah, did you read? Yeah, last, what did you read? Yeah, what about you? Yeah, you? Yeah, cool. So write down guys, income from house property. Income from house property. Generally the income tax will be finished off in some 100 hours. but we will be taking 130 hours, right? We'll be solving extra sums, etc. That's why I need your help in writing fast. That's the reason, we are little writing fast, that you have to develop. I don't know whether in BCom or other things you have developed that art, but here we need to develop. So every teacher will be making you write fast. There's no choice. We have to, learn that. That's the art that we have to learn in CA. No problem. Okay, guys, income from house property. First of all, whether what is taxable, what is not taxable, etc., we will learn in a section called as the charging section. So first of all, let's come to this. It comes at 6.1, guys. The income from house property 6.1. Sir, why are we doing house property first? Because it's kind of easy. Once you finish the easy one, then we can go to the other areas. First is only easy, and then we will go to PGBP, slightly difficult ones, and then come back to the easy one. So in this income from house property, first and foremost, I am understanding something called as chargeability of annual value, section 22. So whenever that income is taxable or not is always decided by something called as a charging section. What section? Charging section. For house property, charging section is 22. Page 6.1, my friend. Got it? Sikta? Chargeability of annual value. So I am repeating, whenever income, whether it is chargeable to tax or not, it is given by a section called charging section. For every head of income, there is a charging section. For house property, it is 22. For PGBP, it is 28. For capital gain, it is 45, like that. Whenever we come to that particular area, we will see. But for now, we are sticking to which one? House property. So house property, the charging section is 22. So in this chapter, what all we'll study? We'll study about charging section. We'll study about concept of called rent. Rent, on what amount will you pay tax? Because you are getting rent. Then if there are co-owners, what is the tax? Like me and you jointly own one property, and we are getting 50,000 rent from that property. So will I take 25,000? Will you take 25,000? How it is taken? All that we'll see. Then concept of deemed owner. Then if the property is self-occupied, should I pay any tax? I have bought one house, living in that house. Will Nirmala aunty ask tax in that also? Don't know. You never can trust her, no? We don't know. We'll see. Right? Then what about if I let out the property? If I let out the property, means I have given it on rent. So should you pay tax? Yeah, maybe you can say, there you can pay tax. I have two homes. In both the homes I am living. Right? One my parents are living, in the other house I am living, both owned by me only. Is it taxable? Will Nirmala madam tax that also? Where I am only living, I am not earning anything. Right? We have to see all that. What if I have three homes? What if I have three homes? Is it taxable? All that we will learn in this particular chapter. Then I will pay maintenance when I'm renting out a property. I'm the owner of the property. I'll also be getting maintenance charges. Correct? So if you are living in an apartment or a house, they'll charge you some rent. Then say if it's an apartment, they'll charge you maintenance for a watchman, lift, all those things. Maintenance they will charge. That also is your income or not, we have to see. Because if I am the owner, I am getting maintenance, is it my income? I need to check that. Then does this property only include residential property or commercial property? I need to see. So all these things we will have to check in this particular chapter, which is an interesting chapter. Okay. So one by one. So first write down, guys, what is the first one? Charging section, section 22. What is the charging section? It is 22. We need to understand the charging section. So I will take you through the charging section. You need to read and tell me what all, important points. I will only tell you that these are the important points in that charging section. So in the charging section, you need to see what is the scene. Let's see. I will open section number 22. Income from house property. Just a sec. Yeah, check it out, guys. So, guys, what is the dialogue? Do you see anywhere say the word rent here? Do you see anywhere the word rent? Please read. Do you see anything called rent here in the sentence? Is rent there? No. What is there? One dialogue called annual value. Annual value of the property consisting of any building or land appurtenant there. You have to understand all this, of which assessee is the owner. Other than portions of such property as he may occupy for the purpose of business shall be chargeable to income tax. So they are trying to tell here is tax is not chargeable on rental value. Tax is chargeable on something called annual value. If I am receiving 20,000 rupees rent per month, tax is not chargeable on that. Tax is chargeable on something called annual value. So in my entire chapter, I need to compute annual value. What is annual value? We'll see. And what is property? Is it residential property or commercial property? Is it given here? It says consisting of annual value of dash. What dash property? Is it residential property, commercial property? Given or not? Not given. So which means what it is? It is either residential or commercial, both. Consisting of any building or land appurtenant thereto. Appurtenant means attached. Building or land appurtenant thereto. Appurtenant means attached to the land. Means you will have a house, in front you will have a small garden. Is that garden also part of the house? Yes. That is the meaning of building or land appurtenant thereto. Okay. So like that we have to understand. Of which assessee is the owner, and most important thing is who is the owner? Assessee is the owner. Assessee will be the owner. So what are the points, guys? Let's write down. What are the points of income from house property? One by one. Second one. Two important conditions. Write along with me only. Two important conditions. Now you can write along with me. Wherever I show the material, you can listen and then copy. But wherever I feel I should write, I will write. It's like that always. Two important conditions. Two important conditions. First of all, there should be what you saw now only. There should be what? House property. They have told one dialogue. Annual value of property. That property means house property. So first of all, there should be house property. First of all, there should be house property. Now, is it residential or commercial? Both. Did it say anywhere residential property? No. So next interpretation is it can be residential also, or it can be commercial also. House property, residential or commercial. Second most important thing that you saw there is of which he is the owner. Correct? You see here, of which he is the owner. Assessee is the owner. So you should be the owner. Otherwise, you cannot. You don't have to pay tax under income from house property. Second condition is what, guys? Owner. Owner means what? You should have the title. Title means what? Ownership. Charging section 22. Two important conditions. First one, house property. Residential, commercial. Second one, owner. Third one, tell me, tax is chargeable on rental value or what value? Annual value. Tax charged on something called annual value. So I've sent you the PDF of the Q&A. Just the Q is there. A is not there in that. A I will send later. Q we will solve few questions. But the printed material that I'm going to give you is something else. That is previous year's question paper. This whatever material I've given you is all concept capsules. All important concept capsules taken from institute material and also from previous year's questions. But full-fledged problems, one more material I'll give. In that one or two will solve, remaining will be your homework. That I will give you next week. Almost ready. I'll print and give you. You can keep it with you, can tick, you can solve, okay? Yes. Tax is charged on what value? Annual value. So this concept capsule will do in class, few sums will do in class, remaining is your homework. Just stick to this two, this and my material and the running notes, your tax is sorted, okay? Tax, first of all, two conditions, house property and owner. Next, tax is charged on what value? Annual. On what? There is one dialogue. House property means what? building or land appurtenant thereto. Appurtenant means, what is appurtenant? Attached. So next point, building, it is either building or land appurtenant thereto. Appurtenant means attached. Appurtenant means attached. So guys, you will have a normal house with no land anywhere. This is also section 22. You will have a house with some nice garden. This is assume grass. This is also section 22. Yes. This is land appurtenant means attached to the land. First example, second example. Just for your knowledge. Third example, guys, you have a plot of land. You just have a plot of land. You have not built anything on that. You will give this on rent, maybe for parking or anything for that matter. Is this house property? Answer. Is this house property? There is one plot of land, next to there is a plot of land. I'll give it off for parking. Yes, it is given that the land should be attached to the building. Is there a building here? No. So is this house property? No. That's the beauty. It is building or land appurtenant to the building. Here if I build one kutti building, then will it be house property? Yes. One watchman room I will build. Is it house property? Yes. Crazy. So if I simply sell the land, is it house property? No. Not sell, sorry. Rent. Not sell, rent. If I simply rent the land out, will it be house property? No. But if I build one small house there, then will it be house property? Yes. Then it will be building or land appurtenant thereto. Building should be a permanent structure or any structure with four walls and one roof. What is building? There is no definition of building. Income tax also. There, even though there is, if you have to see other things called RERA and all that, Real Estate Regulation Act, if you see all that, no, building can be a temporary structure also. Asbestos sheet, 4 asbestos sheets and one roof if I build also, that is a building. Imagine, as per income tax or as per RERA also. So, if I want to convert land to house property, what should I do? Just build one small room, that's it. That will become a building. So if I just rent a land, then the money that I earn, will it be house property? No. Will it be PGBP? I am not doing it as a business. I have one plot, I am just giving it. Where will it come then? Where is it? Is it not taxable only? Are you understanding my question? If I just have an extra land, I rent out a land, it is not house property. Is it business? No, I am not doing it as a business. I am working somewhere else. This is just some side hustle. I have some extra land, I am giving it for parking. I am getting some 40,000 rupees per month. Is it taxable or not taxable? 100%. Nirmal aunty will not leave anything. It's not salary, it is not house property, it is not PGBP, it is not capital gain. Where will it come then? Income from other sources. Whatever doesn't come under the forehead will go to other sources. So just land without, what do you say, building. This simply one land without any building. Is it house property, guys? No. What is this then? This will be not house property. If I am running it as a business, if I have many lands and I am running parking business, then it is PGBP, or it could be IFOS, depending on what I am doing. If I have many lands and many lands I am giving it on rent, that is only my business, then PGBP. Otherwise, in my example, what I told you, I am having one more business, I have something else. There is like one side thing I am doing. Will it be PGBP or IFOS? IFOS. Got it? So just land, is it a house property? No. Everybody understood? Yes. So these are the keywords, guys. First, what you should remember: house property must be there, owner must be there. Second, what value? Annual value. Third, what all is covered? Building or land appurtenant thereto. Just land? No, just land is not there. Just land is different, right? Yes. Then what about this, guys? What about fourth point? What about this? That also they have given in the law only. Correct. There are 3 floors. Ground, first, second. Ground floor, I will use it for residence. First floor, I will use it for my office. Second floor, I will rent it out. Tell me. First floor, I am using it for my office, for my business or profession separately I am using. Ground floor and second floor residence, second floor rent. House property includes 2 things, self-occupied property, let-out property. So this will be SOP, self-occupied. This will be LOP. Office purposes. Am I getting any rent from it? No. But I have some expenses, no? I'll be using the electricity, all those things. Can I claim it under house property? No. In house property, you should have let out, or you should occupy it for residential purposes. Am I occupying for residential purposes? No. Have I let it out to somebody? No. Can you say I have let it out to myself? Like that if you tell mental hospital. I have let it out to myself, right? Yes. No. So this one will not come under house property. The expenses etc. can be claimed under PGBP. Correct? It will not come under. So how can you tell confidently? All is telling in charging section. Where is it? Tell me. Whatever I told now, it's there here. Where is it? See, other than. What is house property? Other than portions of property which he occupies for business. Correct? What is house property? Full building. But other than which he occupies for business. Which one? First floor. Other than means what? Except only, no? Except. Other than means except. Except that one floor which I am using it for business. Everything else is house property. Guys, are you understanding? Yes or no? So in this only so many things we interpreted. One is what? Annual value. Second one what? Property. Property will be what? Residential house property, commercial also, no problem. Then what do you want? What is it charged? Buildings, land appurtenant to building. Means there should be building though for sure. And you should be the owner. And it should either be self-occupied or let out, that we saw. And if you occupy that property for the purpose of business or profession, then it is not considered as house property. That's all. And it is always chargeable under the head. All other things will be chargeable under the head income from house property. Assessee must be the owner. Can you be a joint owner? Yes, they never say that you need not be a joint owner. You can be a joint owner, right? Possible? Definitely yes. Till here everyone got it? Yes, write down the next point. Fourth one, did you write? Yeah, write along with me only, guys. You have to be fast. Please develop that speed from day one. I am telling you, we have 6 subjects. It is equal to 8 subjects. And everything should be done within 900 to 1000 hours. And it is humanly not possible. The rest of us are called CA students because we are superhumans, right? So we need to develop that speed from the day one. I will not give you, let's see, slowly we'll do. No, slowly. You have to develop. You forget what you learnt in BCom. You forget how you were in BCom. You have to, attune your mind to the new methodology. It will be like this only. Everybody will do like this only. It will be fast. You will have to, pick up the speed fast. I mean, I'm going slow only, but what I'm trying to tell is the writing, etc. should be fast. Slowly you will pick it up, don't worry. Then 5th point, guys. Mr. A, he's the owner. You can write along with me, no problem. Then writing only you can understand. Mr. A is the owner. Owner of what? Owner of a house property. He rents it out to Mr. B. Rents it out to Mr. B. Mr. B is called what? Tenant. Yes, tenant. Tenant fellow is giving the owner 20,000, 22,000 rupees rent. For the owner, is it income from house property? Yes. Mr. A, owner of house property, is giving the thing on rent to Mr. B. Mr. B is paying him 22,000. So is it rent for him? Yes. Now this fellow, no, Kiladi fellow, what he has done? He has further rented it out to Mr. C. Possible. Now that extra one space is there, I will give it out to some other academy. I'll make one room and I'll give it out to somebody else. Possible or not? Yes, that is called what? There's one word for that. What is it called? What is the word? Owner gives to you on rent. You further give it to rent to somebody. What is that called? What is it called? Renting the rented property is called dash. Starts from S. Subletting. Have you heard? Sublet. One is let out. Let out of let out is called sublet. So I will sublet the property. Sublet to Mr. C, who also is a tenant. Mr. C will give to the tenant 30,000 rupees. Now tell me guys, Mr. B, that 30,000, for him what is it? Is it house property? He is not the owner. Perfect. So for Mr. B, what is it? Is it PGBP or IFOS? Is he in the business of subletting? No. One extra space he had, he gave, that's all. Is KSA Advait in the business of subletting? No. We are in the business of torturing you. Correct? So now if I leave some space, if I give it to somebody, assume, then is it like, what do you say, subletting? Yes. And is it PGBP income? No. What is it? IFOS. It is income from other sources. Everybody understood? It is income from other sources. So for this fellow, what will it be, guys? IFOS. Income from other sources. Why? Because I am not in the business of subletting. Here only actually this is combination of KSA and KSA Advait and Lakshara. Lakshara is for CMA, CS, foreign courses and all those things. So it is owned by, I mean it is rented out by KSA but sublet to Lakshara. Actually it happens because that portion, one room, if CMA classes are going on, that proportionate rent will be borne by Lakshara, and the both are separate legal entities, both are different, both cannot be mixed. So who will pay rent? Lakshara will pay some rent to KSA, and for KSA it will take it as what? Income from other sources. So it happens in Chennai, everywhere it happens, because that's how it is. So one room, anybody else taking, that's how you should look at it. So Mr. A, owner, given to Mr. B, tenant 22,000, sublet to Mr. C 30,000, IFOS. Clear? Done. So guys, next one, 6th point. In the year, let's say 24-25, Mr. A is the owner of the building. So wherever there is important points like this, I will only write. Basics and all was everything chiller. So there are some points where I will show you, some points where I will write, but ultimately what I am trying is to develop the speed. So Mr. A is the owner, is giving the some house on rent for 1 lakh rupees per month. 1 lakh rupees per month to the tenant. No problem. Mr. B. This fellow 10 lakh he paid, 2 lakh is still pending. Still pending. And on 10/4/2025, Mr. A sells the building. How much is receivable for him, guys? 2 lakh. So next year, 10th April, sells off the building. 10 lakh is received. He has taken it as what? IFOS. 2 lakh not received. On 10/6/25, Mr. B pays Mr. A balance 2 lakh. On 10/6/25, what happens? Mr. B pays Mr. A balance 2 lakh rupees, he'll pay. Question to you is the 2 lakh taxable as house property income? Because, why? I am asking the question because Mr. A is not the owner. On 10th June, am I the owner? No. So since Mr. A is not the owner anymore, Mr. A is not the owner anymore. Tell me, guys, what do you think? Taxable or not taxable? Everywhere it's taxable only, but is it IFOS or a house property is what I am asking. This was the question. Is it IFOS or house property? It went to court. Ownership should be seen as on the date of previous year, or should I see in assessment year? Previous year, right? So previous, this money pertains to which year? Previous year 24/25. This money pertains to previous year 24/25. Even though you received the money in the assessment year, that is 25/26, the money pertains to previous year 24/25. The court said you should see that taxability based on the previous year. In previous year you should have received 12 lakhs, but you received 10. Even though you received it later, it's okay, but when is it taxable? 24/25 means it is taxable. Okay, you may pay tax in 25/26, that's okay, but is it taxable? Yes. Ownership should be seen on which day? Previous year. That money pertained to that year in which you are an owner. That's all is matters. That money actually belonged to that year in which you were the owner. Even though you received late, that's okay. Receiving late is called arrears. You received it late, no problem. Outstanding amount was there, you received it late, that's okay. But the year you were supposed to receive, are you the owner? Yes, you were the owner. So taxable under house property or IFOS? House property. This court decided, okay? Court decided. Understood? Everyone understood? Yes? Yes or no? Yeah. So write down next one. Ownership should be seen. Ownership should be seen or checked, whatever, in the previous year, guys, and not in assessment year. Ownership should be seen in previous year and not assessment year. Taxable under section 22, no mercy. So what all we saw till now? Tax is paid on dash. What value? Annual value. And you should be the dash owner. The tax is paid on dash building. Land appurtenant thereto. Perfect. Right? And if you have PGBP, that you should not consider. PGBP will be under which section? PGBP. Right? And if only land and all you are renting out, it will be under which section? Income from other sources. Income from other sources. Perfect. As I told you, it is not at all on rental value, it is on annual value. So I need to understand what do you mean by annual value. So we need to understand that what is annual value. One by one we should see. First one, guys, annual value. Annual value, is it rent? Or is rent only small part of annual value? It is a small part of annual value. Something else is there, we will see. So let's say Mr. Ramesh is the owner of the property. Mr. Ramesh is the owner. Ramesh is the owner. And what is your name? Ashraf. Mr. Ashraf is the tenant. Where do you stay, Ashraf? Yashwantpur. Let's say he is taking a house in Yashwantpur. So Ramesh owns a house in Yashwantpur. Ashraf is the tenant. Ashraf is paying 20,000 rupees rent per month. Now, I need to understand how much tax Ramesh has to pay. Is the owner. Ramesh will he pay on 20,000 into 12. Is it as straightforward as that? No. Ideally speaking, Ramesh is getting how much? 20,000 per month. So what tax he will pay? 20,000 into 12 minus some expenses. On that he will pay tax. It's not so straightforward. Income Tax Act says other things. Income Tax Act first says, first point, they will say check the municipality value. What is municipality value? The value in the municipal records. Every area will have municipal records. Go there and ask, sir, what is the value of this property here? In Yashwantpur, what is the value of this area? They will tell you. Municipality records will have some value. As per municipality value, assume it is 15,000 per month. So as per municipality value, he should have received 1,80,000. Correct. Second, lawmaker says compare this with the fair rent. What is the fair rent? Rent payable in and around that area. In and around his house. Market value basically. Don't you think so? Rental value keep on changing. Yes, sometimes it is more, sometimes it is less, depending on the demand and supply. One is see the municipality records. Will it be given in the exam? Yes. Fair rent, will it be given in the exam? Yes. What is fair rent? What is fair rent? It is the rent, market value of the rent. In the sense, in and around his house, what is the general rent? If you will ask Yashwantpur, what's the rate generally for a 2 BHK, 3 BHK? Approximately you will know. That is market value. So this also they will give in the exam. Assume market value is 18,000 rupees per month. So it is 2,16,000 rupees. Now guys, I am not even bothered about the actual rent. If I were to take only municipal rent and fair rent, Nirmala madam will tax the higher amount or lower amount? Is it Nirmala aunty we are talking about? Higher amount or lower amount? Obviously higher amount. So third point, 1 or 2, whichever is higher, I have to take, which will be 2,16,000. Then she says, point number 3, whatever you get, no, you compare it with one more thing. Point number 3, whatever you get, you compare with one more thing. That is called standard rent. Standard rent. What is standard rent? This is the maximum rent payable. As per Rent Control Act. I will write RCA, you will write Rent Control Act. Guys, because people were charging whatever they felt like charging, there is one law called Rent Control Act. In Rent Control Act, they are telling for this area, this is the maximum you can charge. You cannot charge more than that. If you charge more than that, it will be illegal. Why? It's protecting the tenants. Guys, if 20,000 property, can you sell at 60,000 rupees per month? No. So, it will always be generally more than the market value. Always. Market value is 18,000. Rent Control Act will be reasonable. Rent Control Act will fix a upper cap. Beyond that, you cannot go. Let's say as per Rent Control Act, it is 30,000. This also will be given in the question. As per Rent Control Act, it is 30,000. So, maximum money you can get is 3,60,000. Guys, this is in a rare circumstance. If you want to really charge a lot of money, you can maximum charge how much? 3,60,000 rupees. Now, you only tell me, guys, point number 3, you already got. Point number 4, it's the maximum amount. Nirmala madam should charge on the higher or lower? You tell me. Is it fair to charge on the, which is a very, rare occurrence, point number 4. Point number 4 is rare. Only if you want to charge the maximum, you should charge 30,000 rupees. Will everybody charge that? No. Very, very few people charge that, except only when there is super demand, they will charge. Otherwise, nobody will go to that. That's like the maximum limit that they have told. Correct? So, if you're, if anybody is smoking cigarette, the doctor will tell, okay, how many packs were you smoking? Sir, 5 packs a day. Then that fellow will tell, boss, reduce it slowly. Please keep it maximum 2 packs a day. If you do it less than that, very good. No, you are doing 1 pack a day, 1.5 pack a day. That 2 is the maximum you can do as per the doctor. Now, that is a rare circumstance. You need not always follow that. No. My question is, you only tell me, logically speaking, Nirmala madam will charge 3 or 4, whichever is less or whichever is high? Whichever is less. That 4 is only rare. I cannot make it whichever is high. Then it's unfair. I am getting 2,16,000 normal market value I am getting. You are charging, making me pay tax on 3,60,000. How is it fair, guys? Is it fair? No. So, 5th point, guys, 5th point will be all logical, no mugging up. 3 or 4, whichever is low. 3 or 4, whichever is lower. 2,16,000 or 3,60,000, whichever is lesser. Obviously, 2,16,000. And this, my dear friends, is called as expected rent. Called what? Expected rent. Point number 6. I have to take the actual rent. I have to take the actual rent. Actual rent, how much I am getting? Paying. Ashraf is paying how much? 20,000 into 12. 2,40,000 is paying. Which means Ramesh is getting 2,40,000, though the expected rent is just 2,16,000. Finally, annual value according to you will be 5 or 6, whichever is less or whichever is high. Whichever is high, obviously. Isn't it logical? Did you mug up anything? No. So, 6th one, 7th one, last but not the least, annual value. That is the value on which you pay tax. Will be 5 or 6, whichever is higher. That is 2,40,000 rupees. 5 or 6, whichever is higher, is how much, guys? 2,40,000 rupees. Understood? So, first what did I take? Revision. Municipal value given in the question. What is municipal value? Value as per municipality records. That I will compare with fair rent. What is fair rent? sutta mutta rent, whatever is there in and around me, market value. Both will be given in the question. Fair rent or municipal value. Whichever is higher or lower, obviously higher. And that higher I will compare with something called as standard rent. Standard rent is the maximum rent chargeable as per Rent Control Act. 3 or 4 I will take whichever is lesser or higher, lesser. And whichever is lower, that is called as my expected rent. That's the expected rent. Expected rent I will compare with actual rent. And obviously I should take whichever is higher. Because here, no, the normal expected rent is 2,16,000. But actual rent, Ashraf is paying just 2 lakhs. 16,000 less he is paying. Nirmala madam will say, I don't care, you should pay tax on 2,16,000. Because Nirmala aunty has a doubt. When the market value expectation only is 2,16,000, how is he taking less? How is he taking 2 lakh? Which means Nirmala madam is assuming 16,000 Ashraf would have paid cash. You understand the logic? No fool will charge rent lesser than the expected value, obviously. Expectation in the market is 2,16,000. You are charging 2 lakh, not possible only. 16,000 cash you are taking. Nirmala madam will tell what? Actual rent or expected rent, whichever is higher, pay it on higher amount. What is higher amount? 2,40,000. Understood everyone? So tell me once again, first one. What value? Municipal value. What is municipal value? Value as per municipality records. Municipal value or fair rent. What is fair rent? Market value. Municipal value or fair rent, whichever is higher. That is point number 3. Then point number 3 should be compared with standard rent. What is standard rent? Maximum rent as per Rent Control Act. So that amount or maximum rent, whichever is lower, that will be my expected rent. Expected rent will be compared with actual rent, and what you will get? Whichever is higher will be my annual value. So tax is always paid on annual. Any question they ask, you make this formula, not even a formula, it's common sense. Then you will get the annual value. That's it. MV or FR, that is municipal value or fair value, whichever is higher. Debt or standard rent, whichever is lower, that is called expected rent. Expected rent or annual value, expected rent or actual rent, whichever is higher. That will be my what? Annual value. Everyone understood, guys? This is the concept of annual value. This is nothing but annual value. So basically there will be a format. Format also will be the same. Municipal value, fair rent. Then MV or FR, whichever is higher. Then you will get the standard rent. Same, whatever I have written. Then standard rent. Then after that expected. What is expected rent? 3 or 4, whichever is higher. And then actual rent. Then whichever is high. Okay, so that I will show it to you. Then you can copy that. I will first explain that and I will show you. You can copy. 1 second, I will show you here only. Whatever I have already written, I am not going to write it again. But yeah, you see, this is the format, guys. I'll give you it's there in the notes already, but I'll just give you the format. You can copy. See, first I'll explain. Hold on. Name of the assessee, previous year 24-25, assessment year 25-26, computation of income from house property. So see here, guys, one interesting thing. If I have, before that, see this chart here in the notes. All this you can see this. Come to page 6.2. Simple chart to understand the types of house property. 6.2. 3 types can be there, guys. One is called let out property. Let out means what? I have rented it. Second, self occupied. I have only living in it. Third one, property held as stock in trade, means what? I am a builder. Shobha developers, Prestige, they also have house property. Are they holding it as asset or are they holding it as stock? Stock. So Shobha developers have 10 buildings. They have given it on rent. Is it house property for them? No. They are holding it as stock in trade. It will either be PGBP or IFOS. So this one, if the property is held as stock in trade, house property will never come. House property will come only if you are holding it as a asset, capital asset. Stock in trade you can sell off that, no. It's like stock, closing stock you have for you. It's like, finished goods you have. You can sell it. For a builder, will house property come? No. What will come? Business, PGBP or IFOS. House property will never come. He will either sell that house or they will either rent it out. Okay? Yes. So that you leave. These two only I should play around. Let out property, self-occupied. Let out, self-occupied. Let out property under section 23(1). Let out property is always taxable. It is always taxable. How should I tax? We just saw now. Municipal value, fair rent, whichever is that same dialogue. Self-occupied property, SOP. If you are using it for residence, one thing. If you are using it for business, I told you, first floor, ignore. Example, first floor business, ignore it. It will go to PGBP. There is no income from that, but expenses will go to PGBP. Here, SOP. SOP, there are two things. One is 2 SOPs and more than 2 SOPs. 2 self-occupied property, more than 2 self-occupied property. Guys, if I have 2 self-occupied property, lawmaker says it is exempt. If I have 2 self-occupied properties, lawmaker says it is exempt. Means, should I pay tax? No. But if I have more than 2 self-occupied properties, then up to 2 SOPs it is exempt. Up to 2 SOPs it is exempt. The third SOP or the remaining SOP, lawmaker says it is deemed to be let out. It's called DLOP, deemed let out property. Sir, but I have 3 homes, one I am living, one my parents are living, one more my in-laws are living. No, I don't care. Third house will be deemed let out. Otherwise, you will have some 10 homes until everything is self-occupied. So, I don't care. Sir, but I have not got any rent only. I don't care, no problem. If you have not got any rent because you are living on your own, still I have to pay tax on annual value. Now, what is annual value? Municipal value, fair value, whichever is high. That or standard rent, whichever is less. So my expected rent I will get. Expected rent or actual rent. Actual rent will be 0 here. Expected rent or actual rent, whichever is high, that is only annual value. Even though you are not getting 1 rupee money also, you have to pay tax on annual value. That is for which house? Third house. 2 homes, SOP. Third house, is it actually LOP? No, it is assumed. That's why they use the word deemed LOP. DLOP, deemed LOP. You only tell me, guys, if it is self-occupied property, will you pay any tax? If it is self-occupied, no. Municipal value will be nil, fair rent will be nil, standard rent will be nil. I don't care, everything will be nil. Only if it is LOP, all these figures I need to type in. Because when I am living, why should I pay tax? Only if I will pay tax if I have 3 homes. If I have 2 homes, I will not pay any tax. It is called self-occupied property. Got it? So, everybody with me understood this? Up to 2 homes, SOP. More than 2 homes, deemed LOP. And any LOP is always LOP. It is taxable. And if it is property held as stock in trade, then? Property held as stock in trade, then? Not house property. Then it is not house property. Very simple. So you see now, I will show you. This is a structure, guys. This we will see later. You see structure. Already done. That's why I am showing you this. Municipal value or fair rent. Point number 3. MV or FR, whichever is higher. Agreed with me? MV or FR, whichever is higher. Then next one is called standard rent. Then expected rent is called 3 or 4, whichever is less. And then you have what? Actual rent. And then that AV, annual value, is called as gross annual value. This is what, guys? 5 or 6, whichever is higher. After the gross annual value, you should subtract the municipal taxes paid. Some tax you will pay, no, municipal tax. And after subtracting, you will get something called as NAV, net annual value. And guys, only two deductions are available. Sir, I am spending lot of money on maintenance, I don't care. Sir, I am spending lot of money on repairs and maintenance, I don't care. See, Nirmala madam doesn't give you any expense. She will say, I don't know. You have the bills, I don't care. You don't have the bills, I don't care. I am saying 30% is expense. Is it assumed? Yes. Sir, madam, but I spent 70% of the NAV as expense. I don't care. Ma'am, I spent only 10%. No problem. Good. You can take the benefit of what? Flat rate, 30%. So whatever NAV you get now, she is assuming 30% is expense. 70% is profit. Not profit exactly, income from house property. Understood? So in section 24, she is telling 30% of NAV is an expense. And what is that 30%? Standard deduction. Standard deduction is given to you whether you spend less or spend more or don't spend also. That's a benefit, and also it can be a problematic thing. If you have spent 50%, you'll still get how much? 30%. Do you need to keep any bills? No. So the one expense you will get is municipal tax paid. Obviously from my pocket I have paid. No, I have to subtract it. And then guys, standard deduction, how much? 30%. Then I went to Nirmala madam and said, madam, for this house I have taken a loan. I am dying and taking a loan here. I am paying EMI every month. At least that interest portion, please give me a deduction. In EMI, what all will come? Principal and interest. Principal, is it an expense? No. Principal, I am giving the money back. What is my real extra what I am paying? Interest. Ma'am, please, I am a middle class fellow. Please give me that interest deduction. Can Nirmala aunty say everything is covered in 30%? No, madam, that 30% is that maintenance. Then I have to keep a watchman salary, plumbing, electricity, all that is electricity charge and all I have to pay. That 30%, okay ma'am, extra you give ma'am, for what? Interest only, if I have taken a loan. So yes, under 24B is interest on loan subtraction. Ultimately what I will get in the end guys? Income from house property. And friends, if it's a self-occupied property, no, everything is nil. I will only get one deduction. What is that? Interest on loan. So can I say, when everything is nil and interest is subtracted, can I say if I have a self-occupied property and I have taken a loan, there will be loss from house property, yes or no? Everybody guys, if it's a self-occupied property and I have taken a loan, there will be loss from house property, yes or no? Yes or no? Yes. Why? Because there is only one subtraction. Everything is nil. Correct? So that loss, can it be set off against some other profit? Yes. So what is a good tax planning? Take a loan, and for us, this is not a tax planning, it is benefit given by government. Every middle class person dreams of a house, and we will not have our own funds, we will take a loan. So she is saying, if you are living in that house, no problem, I will give you extra tax benefit. Whatever interest that you are paying, you can take it as a subtraction and you can claim that loss. So two benefits you will get. Your tax also will reduce because this subtracted amount will be, loss will be subtracted from the total income. That is one benefit. Second benefit, you get to live in your dream house. Benefit or no benefit? Benefit. Right? So every middle class person can plan this. Take a loan, build a house or buy a house, and interest you will get the deduction. So you will get two benefits. Interest deduction also you will get. Then you will get to live in your own house. Everybody with me on this? Yes. But for other things, all figures will come. That is LOP, DLOP. LOP, DLOP both are the same. DLOP is what? The third SOP is called LOP, DLOP. The third SOP is called as the DLOP. For LOP and LOP, everything is the same, no change. Only for SOP, what is it? Last one only. We have already done till here 2 extra steps. Less municipal tax paid will be my net annual value. From net annual value, 2 deductions. What are 2 deductions? Standard deduction 30%. Then interest on loan. That same thing is given in the notes here actually. See here. The same thing is given. But still guys, please copy. Either from the notes copy or copy from the screen. Important, copy. Everyone understood before? Yes or no? All of you? Yes? Write down. This is the structure. You should remember the structure. Chapter over. Now in the entire chapter, what all I should study? What is municipal value? Given in the question. Fair rent? Given in the question. Standard rent? Given in the question. Actual rent? Given in the question. But actual rent has some components. You need to understand. Municipal tax has some components. Interest has some components. These 3 things if I read and some extra stuff if I read, chapter is over. Now only you feel it easy, no? Very easy chapter, don't worry. Copy. Everyone write down guys, because I've already discussed, but please write. Coolly you write, no problem, no hurry. Copy down. Try to revise and copy down, rather than blindly copying down. Revise and copy. Guys, any doubt? Understood everyone? Everybody doubt? So municipal value they'll already give, fair rent they'll already give. Nothing there in that actually, they'll give everything. They'll give all these guys. Then standard rent they'll give, expected rent we should calculate obviously, actual rent they will give, but in actual rent no, we need to study more. For example, they'll say actual rent is for how many months? 12 months. They'll say he paid 10 months, 2 months he ran away, then what to do? Right? Or he joined only 3 months later. So basically he was only in the house for 9 months. So then the expected rent, standard rent will be for 12 months. This will be for 9 months. How to compute that? Some additional things. Then that's what, 2 months, 10 months I paid rent, 2 months I didn't pay only. There is a concept called unrealized rent, which I could not realize because you did not pay. Bad debts. That's little bit adjustment, we have to understand actual rent. Then municipal tax is paid. Should it be paid by the owner or paid by the tenant? Owner, obviously. And what if I have paid some advance, what to do? What if some municipal tax is outstanding, what to do? We'll see everything. Those are the adjustments there. Then in interest on loan, interest is taken from the year I took a loan or the year I started living in that house, because it's for SOP, no? When the house is constructed, from that year will I get, or from the day I took the loan I will get? Guys, because the house may be constructed 2 years later, I will take the loan today. So from today only can I claim, or when the house is ready I can claim? House is ready I can claim. After house is ready, I can obviously claim every year till for how long? If it's a 20-year loan, will it be allowed for 20 years? That I need to see. And also, if the construction is happening 2 years later, these 2 years I would have paid some interest, no? Will that ever be claimed or not? Because you only told me it is claimed after house is constructed. Let's say I am taking a loan in 2025. House is constructed from 2027. From 2027 is the interest allowed? Yes. 2027's interest is allowed in 27. 28's interest is allowed in 28, like that. What if the house is for, loan is for 20 years? Will it be allowed for 20 years is one more question. But what about the interest in 2025 and 26 which I paid from my pocket? Because the house is constructed only in 27. From 27 it's allowed, I know. But what about these 2 years interest? These 2 years interest is called pre-construction interest. What interest? Pre-construction interest. Is that allowed or not? I need to see. So these are the adjustments in house property. If these adjustments are done, chapter only over. Other things they'll only give. Actual rent we have to figure out. Municipal taxes you have to figure out. Interest on loan we have to figure out. Then some extra things. Joint ownership, how to do. Then what do you say? Composite rent, how to do. Means I will give this entire furnished accommodation. Have you heard? Furnished accommodation means what? 2 BHK, 2 bedroom house, kitchen, everything you have to take on rent. In that house also I will give, furniture also I will give. So will furniture value also come under annual value? That we have to see. Because guys, actual, your standard rent etc. will it be for a Kali house or will it be for a furnished house? Will it be for a empty house or a furnished house? Empty house, no? Fair rent etc. will be for what house? Empty house. Now if I am giving you a fully loaded house, cots are there, almirah is there, washing machine is there, full, end to end, you just have to move in, that's all. You bring your clothes and start living. Understanding? So there how to do. Those are the adjustments you have to understand. Everything else is over. Easiest chapter ever, right? So open your Q&A, just open in your phone only. Question number 11, guys. Or I will put the question on the screen, don't worry. For your knowledge, you can see it later. There you go. Question number 11. It's in the screen. Nani owns 5 houses in Bangalore, all of which are let out property. Compute GAV of each house from the information given below. So you need to make how many columns? These many columns only. Particulars, house 1, house 2, house 3, house 4, house 5. Then you should write the structure that I have already given. First one, municipal value. Second one, fair rent. Third one, step 1 or step 2, whichever is high. You should write that figure. Fourth one, standard rent that they have given here. Fifth one, expected rent. Expected rent will be what? 3 or 4, whichever is less. And then sixth one, actual rent. Seventh one, gross annual value. What is gross annual value? 5 or 6, whichever is high. Will you solve? Right now, try. Please try, all of you. Did you understand? Same, you column same. Particulars, house 1, house 2, house 3, house 4, house 5. But the structure, what you will write? Point number 1, municipal value. Copy. Second one, fair rent. Copy. Third one, 1 or 2, whichever is high. That you should take higher. For example, in this 81 and 92. In the third row, what will I do? Step 1 or step 2, whichever is high. What will I take? What will I take here? 92. That is point number 3. Point number 4 is what? Standard rent. Copy given here. Fifth one is called expected rent. That is 4 or 5, whichever is what? Less. And lastly, sixth one is actual rent given in the question. Same structure only. In this first column, the same structure you write down till GAV. Here, house 1, house 2, house 3, house 4. Try, guys. Please try it out. Then I will show you the answer. Please try. Because I have drawn the structure, I am asking you to try once. In the examination, you can draw all the columns, etc. with a scale so that it will be neat. Should I use pencil? In the examination, not needed. Pen only you can use, no problem. Ours is not Rangoli competition. Ours is a CA exam. They don't care whether you use pen, pencil, etc. Don't use red ink and all. That will not look good. Please don't use any other ink. I'm just telling you in the exam. You use pen only or pencil, no problem. For the columns. I have given the question in front of you. Anyway, in the notes, the PDF also I have given you guys. But try it out. All of you try it out. I'll then give you the answer later. Very simple. Just put the figures and write the structure. That's all. Municipal value, fair rent. Step 1 or 2, whichever is higher. Then standard rent. That is given in the question anyway. Then expected rent. 3 or 4, whichever is lower. Then actual rent given in the question. Gross annual value 5 or 6, whichever is higher. So ultimate answer will be 92,000, 72,000, 60, 30, 78. Everybody got it? Yeah? Everyone? Any doubt? Any doubts? They will never ask in this exam. It is simply for you to understand the concept. That's all. So whenever there is not applicable, you can ignore it. So if it is like 3 or 4, whichever is lower, you can ignore that not applicable thing and just say 92,000. 60 or 75, whichever is lower, then obviously 60. Then the fourth column, 25 and not applicable, obviously 25. You can't say 25 and not applicable, whichever is lower is not applicable. No. Correct? Not applicable, not available, whatever it is. So that you should ignore. In the exam, what will they give you in the question? Municipal value, fair rent, standard rent. Now, if nothing is given, what will be GAV? Actual rent. If nothing is given, they will not give municipal value also, fair value also, standard rent nothing they'll give. My actual rent only will be my GAV. Simple. Many questions they don't give only actually. So what will you take? Actual rent only is GAV. And nothing, everything is 0, 0, I don't know. What will be my GAV? Actual rent, right? When we see the questions, you'll come to know. These type of questions will not come, but just for practice, we are discussing. What did I tell you? Municipal value, they'll only give. Fair rent, they'll only give. Standard rent, they'll only give. Expected rent, they'll only give. We need to understand actual rent concept. Because I told you in actual rent, some bad debts and all will be there. And we need to understand municipal tax concept. Because after GAV, if you subtract municipal tax, you'll get NAV. Municipal tax we have to understand. Okay? Yes. Next, let's write down, guys. Continue. Everyone with me? Understood? Yes or no? Any doubts? Little bit? Sure? There, first bench. You understood? Any doubt? Sure? Because I am seeing your, I am 15 years experience, I know. Little bit doubt also if it is there, I can figure out. So, sometimes if you don't show any expression, it's either you have understood or there is confusion. So, those who have understood, I can see by your face. Some people don't have any expression. So, for them I am asking. You? Sure? Sure? Clear. What about you, first bench? Okay, done. Others I know you have understood. Cool, guys. So, this is regarding rent. Next, write down. Let's write down, guys. Next one will be R. Now, I told you, no, one by one we need to discuss. Now, what we have to discuss? Actual rent. We have to discuss actual rent. One by one, because those are the things. Sorry. Yeah, concept of actual rent. Actual rent, you can write along with me. Actual rent is equal to rent received plus rent receivable minus unrealized rent. Rent received plus rent receivable minus unrealized rent. So, same example, Ashraf is paying 20,000 rupees per month into 12 months at 2,40,000. Let's say he only paid for 10 months, 2 lakh. 2 months he did not pay. So, for Ramesh, rent receivable was 20,000 into 2, 40,000. But what is bad debts? What he could not realize only? He could not get that money, 20,000 into 2. So, what is the value? He has to pay tax on 2 lakhs. Sir, why like this, sir? I can simply say rent received and close it. No, why is it rent receivable minus unrealized rent? Guys, some people will take deposit, yes or no? Most of them will take deposit. Won't the rent be adjusted against the deposit? Yes. Won't the rent be adjusted against the deposit? Yes. So, my question to you is 20,000 into 10, 2 lakh plus 20,000 into 2, 40,000. In 40,000, I have recovered 30,000 through deposit, assume. So, what will be the unrealized portion? Only 10,000. So, in that 40,000, 30,000 I have already recovered through deposit. 10,000 only will be my unrealized rent, which means now it will be 30,000 which I actually recovered from the deposit. 40 minus and 30. Don't I have to pay tax on 30? Yes, because that deposit now is converted to rent. Deposit, is it taxable? No. If you just give me deposit, it is a capital receipt, not taxable. But when I am converting that into rent by recovering 30,000 from that, then that will be taxable. That's why that is 40,000 minus 10,000, 30,000. So, what is taxable today? 2 lakh whatever Ashraf has given plus 30,000 deposit which I have now converted it into rent. So, this year it will be taxable. That is why this formula, rent receivable minus unrealized rent. If it is 40 minus 40, I can simply say rent received, but it will not be 40 minus 40. It will be 40 minus, after realization, whatever remains will be unrealized rent. Unrealized rent is like bad debts. So Ashraf had given 30,000 deposit. What is receivable from Ashraf? 40. Deposit is now converted to rent. So 30 will be taxable. 10,000 is bad debt. Will I pay tax on that 10,000? No. 3 years later, Ashraf comes back and pays me that 10,000. Will it be taxable that year? Yes. We'll see all that later. 3 years later, he'll come, sir, sorry, I had not paid, sir, 10,000, please take. Yes. Is that 10,000 taxable? Yes. Later, not now. Okay. This is unrealized rent. Rent receivable. What is the formula? Rent received plus receivable minus unrealized rent. Minus unrealized rent. Very, very simple. Rent receivable, it's received now. Receivable minus unrealized is received only, no? So it will be deemed to be received. So receivable is 40,000, but what is unrealized? Since I've recovered 30, unrealized is only 10. So automatically this 30 will be taxable because of this formula. 40 minus 10, 30 is taxable. So it will become 2 lakh plus 30,000. Rent receivable minus unrealized will eventually become received. Because how did I receive it? I received it through adjustments. I was supposed to receive 40. I did not receive 10,000, which means I actually received 30. Understood? So that will become rent received eventually. Because that is the main reason why this formula is there. Otherwise not needed only, no. I can simply say rent received. So now rent received will be actually equal to rent actually received plus rent adjusted. Adjusted. How will I adjust it? Receivable minus unrealized. Understood? So that's about actual rent. That's all. Next. Write down, guys. Municipal taxes paid. I will dictate, write down. Municipal taxes paid. Actual rent, that's all, nothing else. Rent received plus receivable minus unrealized. Municipal taxes paid, write down. It is the tax recovered by, step point wise. Point number 1. Tax recovered by municipal authorities. It is a tax recovered by municipal authorities, comma, local authorities, local authorities, comma, gram panchayat, etc. Panchayat also can recover, gram panchayat, etc. Next one. Guys, any name can be given. It's also called. Next point, it's also called. In the exam, they can ask any of these things. Local tax, comma, property tax, comma, house tax, comma, water and sanitation tax, etc. Anything they can ask, guys. Everything is deemed to be what? Municipal tax. Next point. Amount will be given in the problem. Don't have to worry. Amount will be given in the problem. Amount will be given in the problem. Last point. If percentage is given, apply the percentage on municipal value. If percentage is given, apply percentage on municipal value. Example, in the question they would have said municipal value 10 lakhs. In the question only they will say municipal value 10 lakhs. Municipal value 10 lakhs. Municipal tax 8%. They just gave percentage. Municipal tax 8%. So what should you do? 10 lakh into 8%, how much? 80,000. So municipal tax will be 80,000. Ideally, they'll give you tax amount or they'll give you percentage. If they give you percentage, always apply it on municipal value. Apply it on municipal value. Some examples. Example number 1. Municipal tax payable 50,000. Municipal tax paid 30,000. Municipal tax outstanding 20,000. Because obviously in payable 50, I have paid 30. What is outstanding? 20. We'll answer everything together. Write down all the examples. This is first example. Everything, all adjustments that come in the exam, I am showing. Municipal tax paid in the year 24-25 is 60,000. The 60,000 is 40,000 for 24-25, 20,000 23-24 outstanding has been cleared now. Outstanding has been cleared. Last year some 20,000 I had left it. This year I have cleared. Correct. Next, example number 3. Previous year 24-25. Municipal taxes paid is 50,000. $30,000 is 24-25. 20,000 is 25-26 advance paid. Example number 4. Municipal taxes paid 50,000. 30,000 owner paid, 20,000 tenant paid. Different examples I am giving. Owner paid 30, tenant paid 20. Now question to you guys is, in each of these examples, what will be the municipal taxes that I should take in the question? Answer rather. After GAV I should subtract what? Municipal taxes. What will I subtract? One by one, tell me. You think about it and tell me what is the answer. Example number 1. 50, 30 or 20, what should I take? 50, 30 or 20? 30. Okay. Guys, the dialogue you see here in the note, I mean here also we have seen here, check this. And in our structure we had written down, no, it is municipal taxes paid or payable? Paid. So answer is this one. 30. The dialogue is not municipal taxes payable, it is municipal taxes paid. So what should I take? 30,000. Right. Example number 2. Municipal taxes paid for 24-25 60,000, of which 40,000 is for this year, 20,000 is last year's outstanding which I have cleared this year. 60, 40, 20. What should I take? 60. It is always municipal taxes paid, not payable or I don't care. It is paid. Whatever amount has gone from my pocket, I should do. Perfect. Very good. Next. Example number 3. Whatever I have paid is 50, but 30 belongs to this year, 20 belongs to next year. 50 only. It's always paid basis. Paid. Example number 4. Municipal taxes paid 50. Owner paid 30, tenant paid 20. It is always municipal. When will I subtract? If I have paid, I will. Who will subtract all this? Owner. Owner will subtract only if he has paid. If somebody else has paid, why will I subtract? It's always municipal taxes paid by owner. 30,000. It's logical, no? Tenant has paid, why will I subtract? Why should I reduce my tax when I only have not paid? Isn't it municipal tax? Isn't it like an expense? Yes. I will subtract this as an expense if I have paid it. Have I paid it? No. Correct? So it is municipal taxes paid by owner. Municipal taxes paid by owner. So if you say, write down guys, municipal tax is allowed. Next, so basically conclusion. Conclusion, write down. Municipal tax is allowed. Municipal tax is allowed. First, on payment basis. Municipal tax is allowed on payment basis. Municipal tax is allowed what? On payment basis. Second point. Year of accrual should be ignored. Year of accrual should be ignored. Year of accrual should be ignored. Obviously. Third one. Only paid by owner is considered. Only paid by owner is considered. Only paid by owner is considered. Next, if paid by tenant, allowed or not allowed? Not allowed. If paid by tenant, not allowed. Paid by tenant, not allowed. Next point, please ignore. Please ignore. Please ignore municipal tax paid on SOP. Please ignore municipal tax paid on SOP. Why? Because it will not get, you will only get one deduction, that is loan. Take it only for LOP and DLOP. Take it only for LOP and DLOP. So please ignore municipal tax paid for SOP. Take it only for what? LOP and DLOP. Guys, any doubts? Easy. So we understood what? Actual rent. We understood what? Municipal taxes. But in actual rent, we did not understand rent receivable. Rent received plus receivable minus unrealized rent. What is this unrealized rent? We need to delve more into it. We are going step by step. What is unrealized rent? We need to check. So unrealized rent, I told you, is like bad debts. When will it be bad debts? When you have actually run away, or you have just left this house and living in my other house. Is that running away? No. Unrealized rent will come when actually you have run away. Because guys, I am subtracting it from the entire amount. When I am subtracting it, lawmaker Nirmala madam tells, have you tried realizing the rent from him? Yes, yes madam, I have done, but he has not paid. Is he available or he ran away? Is run away. Are you sure that you have not given one more house for him to stay? No, he ran away from my house, I don't know where he is. Have you taken all necessary steps to recover the money? Yes, I have taken, but is not there only. Only then they'll allow me to reduce. There are some conditions when they will allow me to reduce from my rent, because when I am subtracting unrealized rent, am I not subtracting my income? Yes. Will you pay tax on this? No, because you are subtracting the income. So randomly I will not allow you to subtract. There has to be some steps that you would have taken. What are those steps? First of all, did you have a valid agreement between the tenant? Yes, I had. Second, has he run away? Yes. Have you tried all legal steps to recover? Yes. I hope he's not living in one of your other houses. No, he's gone. I don't know where he is. Then only Nirmala madam will allow you to reduce it from your rent. Otherwise, no. So these 4 conditions that I told you are very, very important to understand unrealized rent. So any question on unrealized rent comes, we need to write these 4 points. What are these 4 points? Write down, guys. Come on, I'll dictate. Next heading, write down unrealized rent. Unrealized rent. Each is a different concept. Municipal tax was a concept. Actual rent was a formula. In that rent received we know, rent receivable we know. What we don't know? Unrealized rent. So we are discussing unrealized rent. How is house property? Easy, difficult? Very easy. Nothing is there in this. Like that everything is easy. PGVP is also easy because we are going step by step, point by point. Okay? Write down, guys. Unrealized rent. You can say this is similar to bad debts. This is similar to all point wise, similar to bad debts. My notes will be like a running notes one day before the exam for you. Very, very simple. But you need to study my notes in the exam. In the home. The other actual notes you have to study at home. And then my running notes for revision. Once you study my actual study material tax was, then you should only stick to the whatever you are writing now. That's it. Because that will be, I have spoken to so many rank holders and come out with this methodology. Trust me, you will thank me one day before the exam. One day before the exam, you will not get the time to sit and study everything. So what will help you? The book that you are only writing will help you. So I didn't do anything. I'm just guiding you what to do. Whatever you are doing only will help you clear the exam. The real deal of clearing the exam is what you do one day before the exam. Right? Those of you who have done foundation, was it easy or difficult to study one day before the exam? Sometimes you'll be like, you don't know what to do, no? In foundation it works, not in inter. You need to have exactly what to do in the exam. You need to have a plan. That plan only we are doing. For DT will do, IDT sir will do, everybody will do. For costing you have a separate last minute revision chart book which will be giving you. For law you have a last minute revision chart book that will be giving you. So we are actually, this has to be done by student only, but we know you will not do it. It's okay, no problem. So we are helping you do that. But your in what do you say, effort is in going home and studying the textbook, and then only sticking to the running notes. Right? So this is the last minute revision thing that we are doing. I mean, whatever we are creating now is for your last minute revision. We are explaining everything and creating something for last minute revision. Then when you study the material, you will understand everything. And then you can only stick to the last minute revision. These points are more than sufficient. So write down, guys. Unrealized rent is the next concept. First one is what? Similar to bad debts. Next one, should not get confused with. Should not get confused with. Should not get confused with vacant rent. That is one more concept later, we'll see. Vacant rent. Guys, vacant rent means what? I am trying to find a tenant. Tenant only is not there. On the full year, 4 months tenant only didn't come. He came only for 8 months. Is it unrealized rent? No. Unrealized rent is bad debt. Vacant rent means what? I am not able to get a tenant only. So, in vacancy, vacant rent, I will pay only tax for how many months? 8 months. But in unrealized rent, I will pay for 12 months and I will unrealized portion I will subtract only if I could not recover the money. In that question, I recovered some money from Ashraf through a deposit. Is it unrealized rent? No. 40,000 was receivable. What is unrealized? Only 10,000 because I recovered 30,000. In vacant rent, that fellow only is not there. I am searching for a tenant desperately. I didn't get a tenant. Is vacant rent unrealized rent? No. That's why I told you should not get confused with vacant rent. Vacant rent we will discuss later. Okay. So next, the four important, next point you can say, four important conditions. Four important conditions. Four important conditions for unrealized rent to be valid. Four important conditions for unrealized rent to be valid. Four important conditions for unrealized rent to be valid. Condition number 1. It should be a bona fide tenancy. B-O-N-A-F-I-D-E. Bona fide tenancy. Bon means good. Fide is faith. Means genuine. It should be not some scam fellow. It should be a genuine tenant. Should not be something on paper. I cannot say rent receivable is 2 lakh. Unrealized rent 2 lakh. He ran away. I cannot create a new person and say he ran away. It should be an actual rental agreement, actual person. What is it called? Bona fide tenancy. Within bracket, genuine or good faith. Means there should be a proper agreement. These four conditions you have to write in the exam whenever they ask. One is what? Bona fide tenancy. Second one, tenant has vacated or absconded. Tenant has vacated or absconded. Absconded means what? Escape without paying. Tenant has vacated / absconded. Third one, tenant should not occupy. Tenant should not occupy any other property of the owner. This property left, some other property is chilling, my property only. How is it unrealized then? Correct? No. He should actually be gone. I don't know where he is. So next point is what, guys? Tenant should not occupy any other property of the owner. First condition what? Bona fide. Second is actually absconding. I don't know where he is. Third one, he should not be in my other property. Then how can I claim it unrealized? He's there only, no, I can claim from him. Understood, guys? Last point. Fourth point, all available legal steps. All available legal steps. All available legal steps have been taken by the owner. Have been taken by the owner. All available legal steps have been taken by the owner to recover the rent. To recover the rent. Correct, no? Tell me four important steps that you have to write in the exam for unrealized rent. First one, he should bona fide tenancy. Second one, he is absconding. I don't know where he is. Absconded. Absconded means escape, vacated. He is vacated those and gone somewhere. Third one, he should not be living in some other house of mine. Then how can I claim that subtraction? Fourth one, I have taken everything. All steps I have taken. I have asked on legal notice I have sent. I have called him so many times. I have mailed him so many times. All those things. Next one. That's all. Four conditions. Now last point. If any security deposit is taken. If any security deposit is taken. If any security deposit is taken, comma, that will be added to the rent received. If any security deposit is taken, that will be added to the rent received. That will be added to the rent received while computing unrealized rent. It will be added to the rent received while computing unrealized rent. Example, rent received 3 lakh. Rent received 3 lakh. Deposit 50,000. Rent received 3 lakh. Rent received 3 lakh. Deposit 50,000. Rent receivable 60,000. Rent receivable 60,000. Unrealized rent 60,000. Unrealized rent 60,000. Now actual rent is equal to, actual rent is equal to, tell me guys, what did I tell you? Deposit should be added to rent received. So actual rent is equal to 3 lakh plus 50,000. Correct? 3 lakh plus 50,000. This is what the rent received, because deposit also I should count. Plus, what is the rent receivable? 60,000 minus unrealized rent 60,000. So ultimately, it's the same thing that we discussed that time. Ultimately, I have recovered 50. Correct? No, I have recovered 50. What is the unrealized portion? 10. So ultimately, 60 minus 10 is 50 only eventually. I also did the same thing, but you should do it in this way. 3 lakh plus 50,000 plus 60 minus 60. What is the ultimate tax payable? What is the income? What is the actual rent? 3 lakh 50. So 60,000 was could not be recovered, but in that deposit only was 50. So what is actual unrealized? 10,000 only. The 10,000 will be subtracted. That's all. So from 3 lakh and receivable 60, 10,000 will be subtracted. So what is the tax I should pay? 50,000. What is 50,000? Deposit. Deposit is now converted to rent. Deposit is converted to rent. Everybody understood this? Yes or no? Everyone clear? Yes. So we understood all these concepts. Tell me. The extra amount. Yes, if you have converted that, yes. Otherwise, you will have to give back to that fellow. If that fellow is not there only, absconding, that you can take it as rent. You can, because see, you would have vacated for so long, no? Then you can take it as rent. But in this question, is telling, okay, he's asking in this question, recovery is to be recovered is only 60,000. But deposit is 1 lakh. That's a good question. Deposit is 1 lakh, to be recovered is 60,000. Extra 40,000, what to do? Is it income from other source? No. Is it income? Good. Write down, guys. Write down. Good question. In the same question, if very good man, please keep asking questions. Very good. Even if it is stupid, if you feel stupid, it is not stupid. In the above, if 1 lakh was the deposit, in the above 1 lakh was the deposit, tell me now what will happen. If 1 lakh is the deposit, then what to do, guys? You have to return a tenant. That fellow is not there only, is telling. 1 lakh, so extra will be how much? 40,000. The extra 40,000 should be returned to the, write down, the extra 40,000 should be returned to the tenant. The extra 40,000 should be returned to the tenant. But if he is not traceable, he is never traceable, what to do? Is it rental income? No, because rent only was still for 12 months. Then you have to actually renew the rental agreement and all that. What to do with that? That 40,000 is a capital receipt, not taxable. Guys, it's still a deposit only, no? So it's 40,000 is capital receipt, not taxable. Understood? 40,000 is capital receipt, not taxable. Is it an income? You cannot say IFOS. It is an income. Is it income? No, it's a deposit. Whenever it comes, I'll see. If it doesn't come, swaha. That's all. I'll enjoy that 40,000. It's ultimately deposit. In that deposit, 1 lakh 60,000 I recovered towards rent. 40,000 is with me only. I have to give you. Is there my obligation to give you? Yes. But if you didn't come, if you don't come, I don't know where you are, gone. Can I use that money? Yes. Should I pay tax on that? No. Is it income from other, what source? There's no source here. It's a deposit. Deposit is never taxed unless it is converted to rent. Understood? That's all, guys. Easy. Yeah. So we'll take a break. After the break, one more interesting concept which is actually very important. What is that? Interest on loans. Actual rent we did. Municipal tax also we did. In that 30% deduction, what? There's nothing to do. Then interest on loan. There we have to understand some interesting things. You only told me interest on loan is from which date? From the day you construct. But what about date of the loan till date of construction? What happens to that interest? That is called as pre-construction interest. How do I treat that? Is it allowed or never allowed? We'll have to see. Okay. Easy, no? House property, very easy. Easiest chapter ever. Easier than this is salary actually. Salary is fine. So once this is over, guys, we'll start off with PGBP, capital gains, IFOS, and then come back to other areas. And that remaining 10 chapters will get over in 20 hours. Heavy duty stuff is PGBP, capital gain, that will take time. Okay? Yes. Thank you, guys. Take a break. Okay, guys. Done. Let's continue. So, till now we have discussed what all. We have seen everything. We have seen actual rent and all those things. Now, interesting concept. Write down, guys. Interest on loan. Interest on loan. Tell me, what is your understanding of the word loan? Liability, borrowing. Okay, I'll give you money, you will give me money back. Is that loan? Yes. May or without interest maybe, no problem. I'll give you my Honda Activa. I'll loan you my Honda Activa and take money from you every month. Is that a loan? Think about it. Third example, I'll give you money and after 4-5 months I will take your Pulsar, your Bajaj Pulsar, or Hero Honda Pulsar, I will take that Pulsar from you. Is that a loan? Fourth one, I'll give you my Activa, I'll take your Pulsar. Is that a loan? So 4 things I'm telling you. This, whatever I'm asking, went to Supreme Court, imagine. Because loan is not defined anywhere. Nowhere loan is defined. So people started asking, what is the loan? So lender is one thing. Then received from borrower. What you received from borrower is the other one. Lender. Lender gave money. Borrower also, I received from borrower also money. Second, lender gave Activa. Received from borrower money. Third one, lender gave money. Received from borrower Activa. Fourth one, lender gave Activa. Received from borrower Pulsar. Tell me, guys, what is loan? This issue went to Supreme Court, imagine. Supreme Court case this is, because loan is not defined anywhere. What do you think? So Supreme Court, first you copy this, copy. Write down along with me, lender, borrower. I am lending money, I am taking from the borrower later money. I am lending my Activa, from the borrower I am taking money. I am lending money, taking Activa from the borrower later. Lastly, I am giving my Activa, getting the Pulsar back. So what would be loan? So Supreme Court told, first of all, there should be a lender-borrower relationship, which obviously is there in this. Second case, interest may be there, may not be there. Interest may be there, may not be there. That is not a part of loan. Interest is not essential for loan. I can give you 10,000 rupees, I can recover 10,000 rupees from you, that is also loan. Interest component need not be there, right? Third one, Supreme Court has told, guys, I am not telling. Third one, Supreme Court has told, lender can give in cash, lender can give in kind, no problem. Lender can give in cash, lender can give in kind, no problem. Fourth point, borrower. Borrower should always return the money in cash only. Borrower should always return the money back in where? Cash. Means tell me in 1, 2, 3, 4, which is the loan? 1 and 2, perfect. So whenever I say interest on loan, what is a loan? Generally, what is the meaning of loan? I give you money, you give me money back. I give you something in kind, you give me money back. Third one is like recovery of loan. I will give you money, you did not pay the money back, I recovered your activa. Fourth one is barter system, exchange. That's not a loan. Okay, for this is what you mean by a loan, that's okay. What is loan as per this section 24 now? 24A is 30%, that is your standard deduction. 24B is my loan, right? This loan will be what? For our section 24 purposes, what is the loan? Only the first one, yes or no? Only the first one. They gave me the loan to construct a house and now I am giving back the money, that's all. But anyway, generally what is a loan? These things is a very general point. What do you mean by loan? 1 and 2. Borrower, lender can give both in what? Cash or kind. Receipt should be in cash, not in kind. Everybody with me? Understood? Yes. That's the first part. Next, guys, write down for this section. First is you can write what is loan. First one, what is loan? Heading you can write for this, what is a loan? What do you mean by loan? I don't know. First one is called what is loan. Second one, purpose of loan. Purpose of loan. Tell me, guys, why will I take this loan? In-house property. Why should I take? Only for buying? What about renovation? Can I take the loan for renovation also or only for buying? Only for buying or renovation? You see, section 24 only talks about the loan, correct? 24A is standard deduction, 24B is loan. See, where the property has been, see these dialogues. Acquired means buying, constructed means construction, repair, renewed, reconstructed. So guys, for everything you can take a loan. Understood? Any doubt you have, you can check the Bare Act, you will get the answer. Just for your future reference, I am telling. Now it's okay, I will make you write everything, but in the future if you have any doubt, you can open the Bare Act. Understood? Write down. So what is it? Purpose of loan. Second point, first point was what is loan. Second point, purpose of loan. Point number 1, acquisition. acquisition. Point number 2, repair. Point number 2, repair. Point number 3, renew. Point number 3, renew. Point number 4, construction. Point number 4, construction. Point number 5, renovation. Point number 5, renovation. Point number 6, reconstruction. Reconstruction. Point number 6, reconstruction. Point number 7, you can use one more dialogue if they ask in the exam, refurbishment. Refurbish is also another word called renovation. Refurbishment. Right, refurbishment. Everything is what, guys? Purpose of loan. Everything is what? Purpose of loan. Okay, I can take it for anything. Third one, sources of loan. Sources of loan. Can I take loan from my friend and then claim interest, or only from the bank? What do you think? I want to claim interest, no? In the 24 I have to subtract interest. That loan should be taken only from bank, or can I take from my friend also? Money lender also? Again, wherever you have a doubt, see the Bare Act. Has been reconstructed with what? Have they told with borrowed capital from bank or financial institution? No. What have they told? Borrowed capital, that's it. Where can you borrow? Anywhere. See, that and all they'll ask in the exam. They'll say he has bought it from friend, then full doubt for you. Oh, friend, is it covered or not? Generally, we will know loan who will give, bank. So we will write our own Income Tax Act. January 26 batch, own Income Tax Act, amended daily. Daily amendments. So in the exam, you'll be thinking, I think, friend loan from friend not covered. I feel it is not. So our thinking and feelings we should control. We should only see the act. Correct? Does it say anything you see here, guys? Does it say borrowed capital from bank or financial institution? No. Correct? So we are not mugging up. We are seeing the act only and answering. Are we mugging up? No. Borrowed capital. That's it. So next, write down, guys. Sources of loan. Next heading. Sources of loan. First one, bank. First one, bank. First, second is purpose. Third one is sources. Bank. Second one, financial institution. Second one, financial institution. Third one, related party. Related party means all your relatives put together. Any other company in which you are director, all those things. Fourth one, friends. Friends. Next, family. Family also, any family member. Last one, money lender also, guys. Setu will be there, no? It's called Setu in Kannada, right? Money lender, etc. Money lender also you can borrow. No, lawmaker doesn't make anything. But in some other sections, no, they have clearly given loan taken from bank or financial institution, like that they have given. Not here, some other section. So there, can you take family loan and all? No. So you should read the Bare Act and tell what all is allowed, what all is not allowed. There is a section called 43B, which we will see in PGBP. There they have clearly mentioned loan should be from bank or financial institutions. Here what have they told? Just they have told loan. Borrowed capital. Can I borrow from anywhere? Yes or no? Yes. Very simple. You can take it from anywhere, guys. Absolutely no problem. Next one. Fourth one. Fourth. Write down the example. One house is there. Loan amount is 2 crore. Taken from Tata Capital. 12% interest. That happens to many people, guys. First they'll take loan from some high rate of interest. Then they will say, "Ayo, this is too high." Another branch will approach. Another bank. Let's say ICICI Bank will approach. ICICI is ready to give loan at 9%. I will take, first I have taken Tata Capital loan for 2 crores to buy a house. Now ICICI is offering at 9%. RBI allows you something called balance transfer. What it means? I am taking one loan to repay one more loan. I will take ICICI loan, will repay Tata Capital loan, and ICICI loan will now replace Tata Capital loan. Understood? I will borrow from ICICI Bank and pay the loan from Tata Capital, and after ICICI pays Tata Capital, ICICI will now be in place of, it will come in place of what? Tata Capital. Which means now housing loan will be given by whom? ICICI. This process will take 2-3 months. Because now what I should do? I should use the ICICI loan, then put it in, use the money into Tata Capital. Tata Capital will exit slowly, and then ICICI will now be the actual house loan provider for me. Many people do this. It's called BT. BT means balance transfer. I would have taken some loan at high interest, and suddenly a new bank will come with lower interest. I will say, okay sir, I want to now shift because interest is 3% less. For shifting, sir, I don't have money to repay this loan. Sir, instead of that, sir, you please pay that loan. That fellow, let him go. Then you stand there. I will pay you from now on. At what rate? 9%. Understood? Now, this process will take 2-3 months. For those 2-3 months, no, I will have to pay this 12% also, 9% also. No choice. Yes or no? That loan is also running. This loan is also running. This process of me giving to Tata Capital absorbing it, closing the loan will take 2 months. For those 2 months, both will be charging interest. My question to you is this allowed? When I am computing my interest, is only 12% allowed or 12 plus 9 allowed? Only 12, only 9, you understand. Only 12 is allowed, and later only 9 is allowed. I am asking for that 2-3 months. 12 plus 9 is allowed, or only 12 or only 9? What do you think? So here you see, guys, you check here. If you see here 5 years and all those things, property is acquired, no deduction shall be made under the second proviso unless the assessee furnisher written, all that is okay. You see, conversion of capital borrowed which remains to be repaid as a new loan. See, new loan here. New loan means whole or any part of the loan taken by the assessee subsequent to the capital borrowed for the purpose of repayment of old loan. New loan, old loan, covered or not? Yes. So will you get that amount or not? Yes or no? Interest paid on loan from ICICI Bank to repay another loan. Allowed or not allowed? Allowed. It is allowed. Correct? So that is also allowed. They have given the definition of new loan. New loan means old loan, a new loan taken to repay old loan. Interest allowed or not? Yes. So write down, guys, write the answer for this. Interest paid on loan from ICICI Bank. Interest paid on loan from ICICI Bank. To pay another loan. To pay another loan. Taken from Tata Capital. Taken from Tata Capital. Is allowed as a deduction. Allowed as a deduction under section 24B. Is allowed as a deduction under 24B. Next point. This is the, so how many points you have written? This is which point? This is four done. Next, fifth point. Interest due for 24-25. Interest on loan, that is. Interest due for 24-25 is 1 lakh. Interest due for 24-25 is 1 lakh. Interest paid for 24-25 is 80,000. Interest paid is 80,000. How much is allowed? 80 is paid, 1 lakh is due, 20 is outstanding. That year 1 lakh I have to pay, 80 I have paid, 20 is outstanding. But when I am subtracting in my 24B, I will subtract 1 lakh or 80,000. Just similar to I am talking about municipal taxes. Municipal tax was what? Municipal tax paid. No. Here also same question I am asking. Payable is 1 lakh, paid is 80,000. How much will I subtract? Sorry? In the format you see, municipal tax you have written paid or payable? Paid. Interest what have you written? Paid or payable. See the format? Interest is paid or payable, or you have written paid? Right? Municipal tax what have you written? Paid. Interest what have you written? Payable. So simply I will write on my own. No, you see here. Where the property has been acquired, constructed, repaired, renewed or reconstructed with borrowed capital, the amount of any interest, Bare Act only says payable on such capital. Payable will include paid. That's why I have written paid or payable. Whereas for municipal taxes they have used the word paid. See, one word also is important. Are you understanding, guys, all of you? Yes or no? So answer. 1 lakh is allowed. 1 lakh is allowed. 1 lakh is allowed. Since Act uses the word payable. I am not telling, you are not telling. Act is telling. So you should follow the Act. Since Act uses the word what? Payable. Everybody understanding, guys? Yes or no, please? Yes. Yeah. Is payable or paid? Municipal tax? Paid. This one? Payable. Next point, right? 7th point or 6th? 6th. Interest rate as per bank 12%. These are all adjustments. What I have done is taken all the adjustments, making you write all the adjustments. One day before the exam, flip. Okay. Interest as per bank 12%. Interest as per bank 12%. Owner may default. Owner may default. Penalty 1% more was charged. Penalty 1% more was charged. Penalty 1% more was charged. Tell me, guys, this penal interest of 1% more allowed or not? Penal interest like a penalty, because you delayed it, 1% more you pay. You see here, borrowed capital along with interest, anything given? No. Along with penalty, anything given? No. It just says borrowed capital. What is the interest on borrowed capital? 12. That 1% extra is like punishment. For punishment, if you are paying something, if I allow that to subtract, will it be a punishment? No. Which means if I make a punishment, I will pay less tax. Oh, is it fair? No. If I am not paying you interest and you will charge me 1% extra interest as a punishment, and if I allow that to be subtracted from the total tax from my income, it is like giving some benefit for a punishment. Allowed or not? No. Are you understanding common sense and the logic? No mugging up. Yes or no? Answer. Penal interest of 1% not allowed. Penal interest of 1%, no mugging up, guys. Penal interest of 1% not allowed. Logic I told you. I am not going to subsidize the punishment. I am not giving any benefit when there is a punishment. Penal interest of 1% allowed or not? Not allowed. Next point. They will give these also in the adjustment. Bank charges. Bank charges / commission. Bank charges / commission / brokerage / processing fee. Processing fee. Bank will charge all these things. These are not allowed, guys. Not allowed. It just says borrowed capital. It doesn't say borrowed capital and fees and all that. Allowed or not? Not allowed. Not allowed. Next question, guys. What if I have taken loan from abroad? Here you see, is there anything said borrowed capital from India? No. Can I take loan from abroad? Yes. Next point, write down. Interest on loan. Interest on loan. See, so many adjustments they will give in the exam. Interest on loan taken from outside India. Interest on loan taken from outside India is allowed only if TDS tax deducted at source is deducted and remitted. TDS is deducted and remitted. What is TDS? Tax deducted at source. So guys, if I have to pay interest outside India, I have to deduct TDS. If I pay interest out, let's say you are outside India, I have received loan from you, now I am giving money to you. If I am giving money to you, isn't it your income? You are in USA, I am giving money to you, isn't it your income? Yes. Your income, where are you deriving it from? In India or outside India? Your income you are deriving from where? In India or outside India? In India. But where are you receiving it? Outside India. But you are deriving where? In India. Won't Nirmala auntie want tax from you? Yes. From you. You are the lender. Won't Nirmala auntie want tax? Yes. She will ask you, will you pay tax? You will tell yes. Nirmala auntie promise, you will tell. She will not agree. So what does she tell me? Borrower. Borrower, when you are making payment to lender who is in USA, what you should do? Cut the TDS and remaining portion you pay. So if Nirmala auntie says you want to take that full loan amount as a deduction, right? Interest amount as a deduction in 24, I will allow you to do that only if you cut TDS and pay the lender. Makes sense, no? So if I have to pay you, let's say 2 lakh interest, I'll ask Nirmala madam, ma'am, that 2 lakh can I subtract from my house property income? She said, yes, I'll allow, but one condition. Money is going outside India. I cannot catch that fellow. So what will you do? Cut the TDS and then pay the interest. Then you can take. If you don't do this, then I'll not allow here also. Is it fair or unfair? Fair. Nirmala and madam has to protect herself. This is not there for resident fellow, because then she can go catch there. No. If I take a loan from my friend in India, should I deduct TDS? Not needed. Because anyway is there. No. I can go catch. Problem is outside India. I cannot catch. Correct? So TDS is deducted and remitted, and then what? There should be an agent in India also, guys. Tomorrow if any problem happens, I should go catch that agent. So you should have an agent in India. And we have already discussed that agent is called as what? Assessee in default. If anything happens, who will be charged? You, I mean, you are abroad, I cannot charge you. Who will be charged? Agent. Okay, so write down, what did you write down? TDS is deducted and remitted plus there has to be an agent in India. There has to be an agent in India. And if things go wrong in the future, the agent will be called as deemed assessee in default. If things go wrong in the future. If things go wrong in the future, agent will be called as deemed assessee in default. Deemed assessee in default. Because I cannot catch you, you are abroad. I should catch only the agent. Got it? You only tell me, guys, interest is allowed from which day? From the date of construction or from the date of taking the loan? Interest is allowed from the date of taking the loan or construction? What do you think? Taking the loan or construction? From the completion of construction you will get. But what about pre-construction interest? That is different, right? So write down. Interest is allowed when? Interest is allowed from the year of construction. Interest is allowed, from the year of completion. Interest is allowed from the year of completion of construction. Interest is allowed from the year of interest is allowed from the year of completion of construction, slash acquisition slash renewal. Right, it is allowed from that. Which day? From the year of construction. Right? Now my question is, what about that pre-construction period? What about the pre-construction period? So let's take an example. What will I do with that? Let's take an example. See, in 2024, let us say construction is completed. From 2022 only loan is taken. Every year 1 lakh interest, assume. So 2022 to 23, 23 to 24, 22 to 23 1 lakh, 23 to 24 1 lakh. From 24 onwards construction is completed and you can move on. 25, 26, 27, 1 lakh, 1 lakh, 1 lakh I am paying. Now the question is, what did we discuss now? When is the interest allowed, from which year? 24, 25, from the year in which the construction is completed. So for 24, 25, that 1 year, my question to you is, this 1 lakh, is this post construction or pre construction? Post or pre? Post. What is pre construction? This one. Pre-construction interest is how much? 2 lakh. So you know for sure in 24-25 this 1 lakh is definitely allowed, no doubt about it. Yes or no? Yes. Then for the next year 25-26 1 lakh is allowed, 26-27 1 lakh, that you know. So for the year 24-25 post construction interest 1 lakh will be allowed, that you know. What about this 2 lakhs? Will it never be allowed or will it be allowed? What do you think? Lawmaker says pre-construction interest of 2 lakh will be allowed from 24-25 in 5 equal annual installments. 2 lakh divided by 5 is 40,000. 40,000, 40,000, 40,000 every year. It will be allowed for how many years? 5 years. Which interest? Pre-construction interest. Pre-construction interest. So, pre-construction interest 2 lakh divided by 5, 40k is allowed. So in the year 24-25, how much interest is allowed? 1,40,000. 1 lakh is post-construction, pre-construction 40,000. Understood, guys? Copy. So means once again here basically, guys, this 40k. So tell me the interest of every year then. 24-25, 25-26, 27-28, 28-29, 29-30, 30-31. So for 24-25 it is 1 lakh plus 40k, 1 lakh plus 40k, 1 lakh plus 40k, 1 lakh plus 40k, 1 lakh plus 40k. There ends pre-construction ends. Correct? From the year of which year? From the year of 24-25, 25-26 or 26-27 I missed out, sorry. 26-27, 1 lakh plus 40k. This will not come. 5 years. 1, 2, 3, 4, 5. From 29-23, 29-30th onwards, 1 lakh only. So pre-construction interest will be allowed from the year of construction in 5 equal annual installments. Yes or no? Understood? Yes. Please copy, guys. 1 second. There. Alright guys, so that is called the what interest? Pre-construction interest. Pre-construction and post-construction, it is what called pre-construction interest. Understood? So pre-construction interest and post-construction interest. Now this interest which is allowed, is there any restriction or any amount is allowed? I have taken 2 crore loan, 20 lakhs I am paying. Is 20 lakhs allowed? You know, every year I am paying, let's say 10%. 20 lakhs I am paying every year. Is 20 lakhs allowed? How much is allowed then? That depends on whether it is a SOP or LOP. I told you in SOP will there be a loss or a profit? In SOP always there is a loss. So Nirmala madam will tell, if you take 20 lakh loan, then if you take 2 crore loan, what is the interest? 20 lakhs. So what you will be doing? You will be subtracting 20 lakhs every year and using that loss and setting it off against any other income, thereby tax department will not get any tax from you. So you as a finance minister will restrict the interest on SOP, or you will restrict the interest on LOP? Which is better? Which is makes more sense? Restrict the interest on SOP or LOP? SOP only have to restrict. So guys, very simple. For SOP, whatever interest you pay, I don't care, maximum allowed is only 2 lakhs for SOP. For LOP, is there any restriction? No, because you will take municipal value, annual value, all that you are taking anyway. Is there any restriction allowed for LOP? No. For SOP, 2 lakhs. SOP, 2 lakhs. LOP, nil. Nil means no restriction. So right, we'll write down. Come on. Restriction on interest allowed. Restriction on interest allowed. For deemed let out property / let out property. For deemed let out property / let out property, full amount of interest is allowed. Full amount of interest is allowed. Then for self-occupied property, case 1, case 2. For self-occupied property, that 2 lakh also, no, there is, in one case it is 2 lakh, in one case it is 30,000. Which case it is 2 lakh, which case it is 30,000, we will see. For DLOP guys, full amount of interest. Why full is allowed? Because I have municipal value, fair value, anything, everything is anyway covered, no? So full is allowed. But for self-occupied, 2 conditions. First case, loan must be taken after 1499. Loan must be taken after 1499. Second one, loan must be taken for construction or purchase. Third one, construction should be completed within 5 years from the end of the financial year in which loan was obtained. All the 3 conditions must be satisfied. Then guys, maximum 2 lakh is allowed. Maximum 2 lakh is allowed. Maximum 2 lakh is allowed. So guys, first of all in the question you should see loan should be taken after when? 1499. It should be taken only for construction or purchase, not for renovation and all. and construction should be completed within 5 years from the end of the financial year in which loan was obtained. Give me a random date when loan was obtained. Let's say in the year 2021, give me a random date. Tell me on date, no, in 2021, random. Which one? 5th October. 5th October 2021. What is the end of the financial year? 31st March 2022. From here, 5 years. Construction should be completed on or before 31st March 2027. So, if you want to claim 2 lakh rupees, construction should be completed on or before 31st March 2027. 5 years from the end of the financial year in which loan was obtained. 5 years from the end of the financial year in which loan was obtained. Okay, let's take, instead of 19, no, let's take 2018 I took the loan, then it will be easier for you to understand what I am trying to tell. 2017 I'll take. What is the end of the financial year? 2018. What is 5 years? 31st March 2023. Which means if the construction is happening before 31st March 2023, then only I can take how much? 2 lakhs. Which means from construction is completed this year, no? What is the next year? 1st April, basically 23, 24, 24, 25, 25, 26. All these years, how much I can take? 2 lakh. I may be paying 5 lakh interest. How much is the load? 2 lakh, because it is SOP. I may be paying 1.5 lakh. How much is the, what can I claim? 2 lakh or 1.5 lakh? 1.5 lakh. It is maximum 2 lakh, guys. Loan must be taken after 1499. Loan must be taken for construction or purchase. Loan must be taken. Construction must be completed within 5 years from the end of the financial year in which loan was obtained. This is case 1. Other than case 1 then, guys, other than case 1. Other than case 1. That is what? Renovation, repair, construction, more than 5 years. Means construction took more than 5 years, or it is renovation, repair, etc. Then in this case, guys, crazy. Maximum is 30,000 only. Maximum is what? 30,000. What is the maximum? 30,000. Got it? So, whenever they ask you pre-construction, you should write all this. Loan, not pre, generally, interest amount. How much is the loan? 2 lakhs. How much? Loan should be taken after 1499. It should be taken only for construction or purchase. Construction should be completed within how many years? 5 years from the end of the financial year in which the loan was obtained. And guys, when will you get the interest calculation? It is from the year of completion. It is from the year of completion. Everything put together 2 lakhs, that's all. Installments, 5 equal installments of last year, the 1 equal installment plus this year's interest, everything put together 5 lakh. Pre-construction interest is available for both SOP and LOP, right? There is no change in that calculation. I am only talking about restriction of interest. Pre plus post put together for SOP, how much maximum? 2 lakh. That's all. Interest allowed is 2 lakh. You will do pre and post calculation for everybody. Guys, if the construction got over on 31st October 2024, right, will you take pre-construction interest from 1/4/24 to 31st October 24? Construction completed here. When is the Pre-construction interest allowable from the year of completion of construction. When is the construction completed? 24-25. My question to you is, this obviously will be post-construction, that's okay. This one is actually pre-construction technically. But my question to you is, will you take this 6 months interest, 6-7 months interest and then make it pre-construction or not? What? This can be one more question, that then the question they'll ask you, 31st October construction got over. So will you take 1/4/24 or 31/10/24 as pre-construction period or what? Answer is no. You should assume that the construction got over in 24-25. Date does not matter. If the construction got over on 31st October, we should ignore the pre-construction period of 1/4/24 to 31/10/24. My pre-construction period ends on 31st March 24. That is the pre-construction period. I should not calculate this at all. Because why? Because this is the year of completion of construction. Year of completion of construction will not be counted for pre-construction. Correct? If they say 31st October 2024 I have completed my construction, you should take the construction completed as on 1st April only. So my pre-construction is how? Till when should I calculate pre-construction? 31st March 24. You accumulate everything and take it. So just write down the example, I will tell you. Loan was taken on 1st April 2020. Loan was taken on 1st April 2020. Construction got completed on 31st October 2024. Construction got completed on 31st October 2024. Tell me now. Pre-construction period will be from 1/4/20. I told 1/4/20 only, no? 1/4/20 to 31st March 24. 31st March 24. Correct? 1st April 2022, 31st March 2024. Yes, 3 years. 31st March 2024. Even though, next one, even though the construction got over in October 2024, even though the construction got over in October 2024, the period from 1st April 24, the period from 1st April 24 to 31st October 24, period from 1st April 24 to 31st October 24 should not be considered as should not be considered as pre-construction period. Pre-construction period. Got it? Everyone understood, guys? Yes or no? Yes, simple. So take 5 minutes now, fully revise till now, from beginning, running notes you read, then we will do sums. What sum will do now? In pre-construction interest sum will do, but from beginning, house property from beginning till end, coolly on your own you study. I will be here only. If you have any doubts you can ask me. So come to the material, guys, the Q&A book. In that, let's see question 18. You see, interest on loan. Renuka had taken a loan of 7 lakh rupees for construction of property on 1/10/22. Interest was payable at 12% per annum. Construction was completed on 36/24. See, in the middle of the year. So what did I tell you? Pre-construction period will be anything before the year of completion of construction. So 1/4/24 to 36/24 is also technically pre-construction, but I should ignore this. So I should take the pre-construction period from 1/10/22 to 31/3/24. Everybody with me on this or not? Correct? The pre-construction period should be from 1/10/22 to 31st March 24. Why? Because this 1/4/24 to 36/24 should be taken or not taken? Not taken. We just told that has to be ignored. We just wrote also. It has to be ignored. So the interest will be allowed from which year? From 24/25 only it will be allowed. What interest will be allowed? Whatever you pay that year plus 1/5 of this year. This entire bulk, 1/5. 5 equal annual installments. No principal repayment has been made till 31st March 25. Compute the interest allowable. Interest is how, guys, they are telling principal has not been repaid, which means you should always calculate on how much? 7 lakh only. So how much? So for how many years? One by one. For 22, what is the pre-construction period? 22/23 and 23/24. Yes or no? Only 2 years. Pre-construction. Interest portion is how much? 7 lakh into 12%. No, you see, when did I take the loan? See, when did I take the loan? 1st October 22. October, November, December, January, February, March. Only 6 months I should take. Silly mistakes we cannot do. 6/12. Correct? 42,000. Everybody understood? I am talking about the pre-construction interest. 7 lakh into 12% into 6/12. 23/24 how much? 7 lakh into 12% will be 84,000. So what is the pre-construction interest? 42,000 plus 84,000. How much? 1,26,000. This will be shared when? How many years? 5 years. Anyway, what is the post-construction interest? Post-construction is very simple. 7 lakh into 12%, 84,000. Even by mistake also don't think post-construction is from, because 30th June construction got over. Don't take post-construction 1st July. July, August, September, that is all overthinking. Please don't take. I already told you, ignore the year. That full year assume to be constructed all. Even though it got constructed on 30th June, I will assume it is got constructed on 1st April. So that full year is what? Post-construction interest. 84,000. 84,000 is post-construction. And what is pre-construction? Yeah. So what is allowed in the year 24/25? 84,000 is anyway allowed plus 1,26,000 divided by 5, because that pre-construction interest is allowed over how many years? 5 equal annual installments. How much will it be? 25,200. Guys, everybody understanding this? All of you? Yes? Yeah. So 84,000 plus how much? 84,000 plus 25? 25,200. Totally 1,09,200. That's all. 1,09,200. Common mistake is you will compute post construction interest from 1st July and all. No. Just because it got over on 30th June, you cannot compute post interest from 1st July. It is the full year. Even if the construction got completed on 30th March 2025, assume, one day before the completion of New Year, still you should take as if it got completed on 1/4/24. Even if it got constructed on 30th March 25 also, you should take it to be constructed on 1st April 24. It should be the year of construction, not date of construction. Year of construction. What is year of construction? 24-25. Anything till the year of construction is pre-construction. Anything till the year of construction is what? Pre-construction. Got it? Very simple. So 84,000 plus 25,200 is how much? 1,09,200. 1,09,200. Got it, guys? Simple. This is one question. Loan taken for construction of house 10 lakh on 1/6/2017 at 12% per annum. Loan repaid on 1/4/21. 1/4/21 they repaid the loan 4 lakhs. 1/4/21. So guys, they repaid the loan 1/4/21. How much? So in year 2021 the interest will be what? See, 17-18, what will be the interest? 10 lakh. 18-19, 10 lakh. 19-20 also, I mean the principal amount is 10 lakh. In the year 2021, in the year 2021, you see, let me change this. Loan is repaid on 1/4/21. No, you make this 110/20. Change that to 110/20. Part of the loan was repaid on 110/20. So 110/20 will fall under the year 2021. So guys, at the beginning of beginning of 1/4/20 to 1/10/20, 6 months, 4, 5, 6, 7, 8, 9, 9 full months, correct? So April, May, June, July, August, September, for 6 months what will be the principal amount? 10 lakh, correct? No, principal amount 10 lakh. On 1st October 2020 they repaid 4 lakhs. On 1st October 2020 they repaid 4 lakhs, which means for the next 6 months what will be the interest? On 6 lakh, correct? And from next year onwards the entire principal amount will be 6 lakh only. After that there was no repayment. Construction was completed on which date? 1/3/22. So what is the year of completion? I told you, even in March 22 if it is done, year of completion will be deemed to be 21-22. Yes or no? Even though in March 22 I am constructing, Year of completion will be deemed to be 21-22. Are you with me on this? Why 21-22? Because I told you, even though actually, to be honest, 1st April 21 to 1st March 22 is pre-construction, but I should ignore it. Why? I should always see the date of construction or year of construction. Year. So year of construction is what? 21-22. So what will be my pre-construction period? 17-18, 18-19, 19-20, 20-21. 4 years, and that will be spread across 5 years. I repeat, my year of, so basically guys, you need to compute what I'll tell you. I will write this down for you, then you will compute it for me. See, I am first doing, see, 17-18 the loan was taken, 18-19, 19-20, 20-21, 21-22, 22-23, 23-24. I am only concerned about 24-25. Yes or no? Yes. When was the house completed? 1st March 22, which means it is deemed to be 21-22. So till here, do you agree it is pre-construction? Yes. After this, it is post-construction. This entire amount added divided by 5 will be applicable in equal installments from 21-22. Agreed or not? 21-22. That is first year, second year, third year, fourth year also. So I am only concerned about 24-25. So for 24-25, my interest will be that year's interest plus all these years' interest divided by 5. Yes or no? Guys, again I am repeating, for the year 24-25, what will be the interest calculation? That year's interest plus interest of 17, 18, 18, 19, 19, 20, 21, 22 divided by 5. Why 5? Pre-construction interest spread across 5 years. Guys, are you understanding? Yes or no? Yes. So you need to compute from the beginning. Here it will be 10 lakh. 10 lakh into whatever percentage, 10 lakh into whatever percentage, 10 lakh into whatever percentage. Fourth one it will change. It is 10 lakh for 6 months, 6 lakh for remaining months. And 21-22 onwards, what it will be? 6 lakh, 6 lakh, 6 lakh, 6 lakh. Yes or no? Because 4 lakh has been repaid. Did you understand, guys? All of you, try. Please try. Which one? How much? I need to check that. You solve it. Solve properly, not just because you should solve it, with properly putting figures. Answer marks is not given for answer, guys. Marks is given for steps. So please solve it. Kindly solve. Guys, in 17-18, how much interest you will take, guys? 12% you will take into 12 by 12, or how many months you will take? 10 by 12. Why 10 by 12? When is it starting? June only, correct? That is also one more important point. It is 10 lakh into 12%, not for 12 months. It is for 10 months. Hope you understood. Why 10 months? It started only on 1/6. Correct? Getting it, guys? Getting everyone? Yeah, so this is the post construction interest. So what I should do, 72,000 plus all these things divided by 5. This is just one part, second part I will show. What did you get? 1 lakh 59? Yeah, that is correct. 1 lakh 59,200 is correct. Good. But solve, you should solve like this. Direct MCQ questions if you ask that, then you can solve shortcut, but otherwise you should solve like this properly. 10 lakh into 12% into 10 by 12. 1819 10 lakh into 12%. 1920 10 lakh into 12%. 2021 10 lakh into 12% into 6 by 12. Then there was a repayment. 10 lakh minus 4 lakh into 12% into 6 by 12. So total pre-construction interest is 1 lakh plus 1 lakh 20 plus 1 lakh 20 plus 96,000. Post construction from 21, 22, 23, 24, 23, 24, 24, 25, 72,000. So in there 70, 24, 25 is 72,000 plus, add all these things divided by 5. Done, guys. So what is it? Right, and 72,000 plus 87 200, 1,59,200. Did everybody get yes or no? Done. Third bench, I think you're still doing. Do it, no problem. That side, fourth bench, done. Last, both of you here, done. You guys did second. Yeah. Third bench people, let me know once you're done. (18, 19, 17, 18, 18, 19, 19, 20, 20, 21, 21, 22. So 24, 25, I'm looking at which one? 72,000. Right? And what is it, guys? 72,000 plus 1 lakh plus 1 lakh 20 plus 1 lakh 20 plus 96,000 divided by 5. That will be spread across 5 years. From which year? 21, 22 onwards. 21, 22, 22, 23, 23, 24, 24, 25 and 25, 26 also it will come. Very simple. Pre-construction interest. Main catch is you should not see the date of construction. You should see the year of construction. So in this example, though it happened on 1/3/22, I should take it as 21/22 only. Third bench people done? Yeah, you? Sure, understood? Yes. Guys, just change this date, no? Master Georgie has taken a loan for ICICI for construction of house property on, let's say, change this to 1/12/22. Anyway, you will only have to solve this. I will show you here only 1/12/22. Okay, first change is 1/12/22 of 42 lakhs at 7%. He has paid the principal amount as follows. On 1/4/23, he has paid 7 lakh and again on 1/10/23 he has paid 4 lakh same year, and 1/2/24 he has paid 5 lakhs. Next is 1/7/24 he has paid only 2 changes, and construction was completed on 15th December. So tell me, 15 December 24 means which year will be called as pre-construction? 24/25 is pre-construction. Everybody with me? 24/25 is pre-construction. So the year 22/23 and 23/24 will be pre or post? Pre-construction. Construction is completed in which year? 24/25, which means only this part 1/7/24, because this will come under 23/24. This is 23/24. This entire thing is 23/24 actually. All the three will come under 23/24, and this will come under 22/23. So 22/23 and 23/24 pre-construction. Coolly think and solve. then I'll show the answer. Cool. You need to solve, guys. See, there's no point in me solving because you will copy down and then go and do something. You need to think. After you think, if you stuck somewhere, I will help you. Will you try genuinely? Yes. So here, hint, it started on 22-23. So in 22-23, how many months interest I should take? I got the loan only in December. 4 months. Perfect. And in 23-24, too many things happened, guys. In 23-24, beginning of the year, 4 lakh was paid. So that 4 lakh you should subtract, sorry, 7 lakh was paid. 7 lakh you should subtract initially only. And that will go on till October. October, one more round it was subtracted. And that will go on for 4 more months. October, November, December, January. Then February, March. February, one more payment was made. That February, March, one more payment will come. So coolly think, no problem, coolly do it, try. Please try, guys. Without trying, it won't work out. This is an examination question. This is not, this is a 100% exam question. Try, all of you try, come on. What I should do, on 1/12/22-23, I took the loan, no? So for the first year, 22-23, how many months interest? 4. December, January, February, March, okay? That's fine. Now on 1/4/23, what has happened? In the beginning of the year only loan was repaid. So that was from, so basically guys, 42 lakhs minus 7 lakh happened at the beginning of the year only. 42 minus 7, that is 35 lakh. That continued till which month? October. So April, May, June, July, August, September, 6 months. Correct, no? 6 months. And then immediately next year what happened? 35 lakhs became 31 lakhs. So that 31 lakhs is going on from October, November, December, January, 4 months. Then that 31 lakhs has become minus 5, 26 lakhs. 26 lakhs is continuing for February and March. Everyone did it? February and March, correct? Everyone did this? Yes. Then the next year what happened? The 26 lakh, 26 only, no? 26 lakhs is continuing from April, May, June, 3 months. And from July onwards, 19 lakhs. Perfect. That's all. That's all you had to do. Tell me the answer. How much will it be, guys? How much? 2 lakh. 24-25, how much it is? 26 lakh for how many months? 3 months. So first from beginning, 22-23, first one line by line you check. 42 lakh into 7% into 4/12. Everyone got it? 42 lakh into 7% into 4/12. How much? 98,000. Everybody got 98,000? Yes. Second one, 23-24. Beginning of the year only how much was repaid? 7 lakh. 42 lakh minus 7 lakh. Correct? Into 7% into 6/12. Why 6/12? April, May, June, July, August, September. Then October to February. How many lakhs? 35 lakhs minus 4 lakhs. October to February. October, November, January, February. 4 months. October, November, December, January. Sorry. October, November, December, January. Because 1st February again I repaid. So what is it? 35 lakhs minus 4 lakhs. 7% into 4/12. Plus 31 lakh became 26 lakh. 31 lakh minus 5 lakh. 26 lakh into February and March. So did everyone get 1 lakh, 2 lakh 25, 166? Yes or no? Very good. 2 lakh 25, 166. Next. In 24-25 what happened? For 3 months it was there. Correct? April, May, June. So 26 lakh into 7% into 3/12 plus 7 lakh was repaid. 19 lakh into 7% into 9/12. That gave me 1 lakh 45, 250. Everybody got? Yes. What is the pre-construction interest? Only 2 years. 98,000 plus 2 lakh 25, 166. Everybody got this? So total pre-construction interest is how much, guys? 3 lakh 23, 166. Everyone got this? Yes. The interest of 3 lakh 23, 166 will spread across 5 years equal installment. So 3 lakh 23, 1 by 5 is 64,633. Everyone got this also? Yes. But interest allowed in the assessment year 25-26 will be how much, guys? Because this will in 24-25 only I should see, no? 1 lakh 45, 250 plus 64,633, which will give me 2,09,883. Everybody got this, yes or no? Who didn't get this? Any confusion? Any confusion, anyone? Simple. So this is an examination question. Understood? Exam question. It will come like this. What is the interest allowed under 24B, guys? 2,09,883. Everyone got answer? Yes, superb. That's all. Very simple, guys. Very, very simple. So this would be my expense with respect to which one? Pre-construction interest. Next heading, write down other expenses. Next heading, other expenses. Write down other expenses. First one, repair and maintenance. Other expenses. First one, repair and maintenance. Second one, parking charges. First one, repair and maintenance. Second one, parking charges. Third one, insurance charges. Insurance charges. Next one, electricity and water charges. Electricity and water charges. Next one, society charges. Society charges. Put one flower bracket, full big flower bracket from 1 to 6. 1 to 6 or 1 to 5. How many are 5 or 6? 5. 5 items, 1 to 5 flower bracket. Allowed or not allowed? These expenses are allowed or not allowed? Obviously not allowed. Everything is already covered in which one? Standard deduction of 30%. So you can say not allowed. Not allowed. Already covered in 30% standard deduction. Whether I spend or not, already covered. Not allowed, already covered in 30% standard deduction. Already covered in what, guys? 30% standard deduction. It is covered already in which one? 30% standard deduction. So in standard deduction they will cover that part. So it need not be taken into account at all. It's already taken in which one, guys? 30% standard deduction. So yes, repair, maintenance, parking charges, insurance charge, electricity, water charges not allowed. Why? Already taken where? In 30% standard deduction. 30% standard deduction. So many concepts we studied. So many concepts we studied, right? So we started from municipal rent. What is municipal rent? As per municipality. Fair rent as per the, what do you say, in and around market rate. Then whichever is higher I should take. From that I should compare with standard rent. Standard rent is the rent control act, maximum rent. So that or this, whichever is lower, I will get my expected rent. Expected rent I will compare with actual rent. So I will get whichever is higher, I will get my annual value. GAV, gross annual value. Gross annual value minus municipal taxes paid. So many adjustments we did in paid. Then I'll get NAV. NAV minus 30% standard deduction and interest on loan. Interest on loan also so many things we did. Ultimately what I'll get? Balance will be my income from house property. In that we also saw in-depth concept of unrealized rent. Concept of unrealized rent we saw in between. Yes, unrealized rent. Cool. So that is the thing, guys. So now I don't want to do vacant rent concept because it is little tricky. Since you have already done so many today, let's not do that. But I can do easier ones. Next concept, write down, guys. Write down the next concept. We can do. There is vacancy rent we will do tomorrow, not today, no problem. Next one, guys. Next concept, partly let out property. Partly let out, easy ones will do today, no problem. Tomorrow we can finish this off and probably start off with something new also. That's easy this chapter is. Easy or difficult? So easy, guys, nothing is there in this chapter. Right? Yes. So next one concept, partly let out property. Partly let out property. Within bracket, area wise. Within bracket, area wise. Partly let out, area wise. Means I am now letting it out, what area wise I am letting it out. Partly let out property, area wise. So let's write down what are the examples of that. Example number 1. So for example, one is SOP first floor, then it is business, and then it is LOP. Already discussed, LOP is income from house property, SOP income from house property will take, business will be ignored. Area wise, full house only, one area LOP, one area SOP. Middle one ignored. Why? It's used for business. This is first example. So if they ask you in the question, 3 floors are there. I mean ground plus 2 is there. Ground is SOP. First is LOP. Sorry, second is LOP. First one is business. Business you should ignore. Then second one, they can ask this also. 60% is SOP. 40% is LOP. So for calculation I should compute it as 2 houses or 1 house. So you only tell me, guys, municipal value, fair rent, etc. Will it be there for the full house or for 60% of the house or 40% of the house? No, I am just saying municipal value of the building will be for the building or for that particular unit. No, what I am asking is, when you go to the market and find out what is the rent or what is the municipality value, it will be for the full building or only that unit? Obviously full building. Correct. Fair rent also will be for the full building. I need to convert it to that part. That's what I am trying to do. Your answer was correct only. What you are trying to tell is you should calculate only for that part. That's what you told, no? Correct. But what I am asking is, what will be available data for the full building or only for that part? Full building. So I need to compute only for that part. Correct? We'll see. When you see sums, you will come to know. So write down for calculation purposes. So how to treat these things? For calculation purposes, consider it to be 2 homes. For calculation purposes, consider it to be 2 homes. First home is SOP. Second home is LOP. Right? Then write point. So what is the first point you wrote? Consider it as 2 homes. First home SOP, second home LOP. Next point. MV, that is municipal value. MV, comma FR. FR is fair rent. MV, comma FR, comma SR, standard rent, comma municipal taxes. I should divide area wise. That's what I asked you that time. Won't it be for the full house? Yes. What I should do now? Guys, for SOP anyway it is nil. For LOP I should take full. Everyone with me? For LOP I should take, for example, in this example, if they say 1 lakh is the municipal rent for the entire building, SOP 60k, LOP 40k, and this 60k anyway will be taken as nil. If you remember the structure, everything is nil. So what I should take in municipal value? Only 40,000 rupees. Only 40,000 rupees. That's what I am trying to tell. They will give you municipal value of the entire building. You should convert it to that area, okay, in the sum. So MV, FR, SR, municipal tax also. Municipal tax also I'll pay for the entire building only. No, why will I pay for that floor? I'll pay for the entire building. So it should be divided area wise. Next point, third one. Municipal tax for SOP. Municipal tax for SOP should be taken in consideration, should not be taken. Municipal tax for SOP, will you take or not? No. Municipal tax for SOP. Municipal tax for SOP. Municipal tax for SOP should not be taken into calculation. Should not be taken in our calculation. Municipal tax for SOP should not be taken into calculation. These are some of the points that you need to note. Guys, actual rent will be divided or not divided? Municipal tax, is it clear? Yes. Actual rent, will you divide or not divide? Actual rent will do 60/40. Guys, actual rent is the rent received for LOP only, no? So will you actually divide 60/40? No, that is only 40%, no? Actual rent is what? Rent received from the tenant. How much is occupying? 40%. So in the exam, in that Josh, people will do it. What they will do? Actual rent they would have given 1.5 lakh. You will assume 1.5 lakh for the entire building. No, actual rent is what? For the portion you are staying. So write down, just for your knowledge and for your alertness in the exam, actual rent will never be divided. Yes or no? Yes. Actual rent will never be divided. What about interest? Interest I am paying for that one floor or full building? Full building. What do I do now? Interest also I should divide area wise, correct? So first I should calculate full interest and then divide area wise. So write down, full interest for the building should be calculated. Full interest payable or paid whatever for the building must be calculated and divided area wise. Interest should be divided, full interest for the building should be calculated and divided what? Area wise. Area wise. And then split into LOP and SOP. And then split into LOP and SOP. Then split into LOP, SOP. For LOP, no limit. Write down, for LOP, no limit. For LOP, no limit. For SOP, 2 lakh / 30,000. Either 2 lakh / 30,000. For SOP, it is 2 lakh / 30,000. Example. Interest paid 5 lakh. Interest paid how much? 5 lakh. Interest paid 5 lakh. SOP is to LOP. SOP is to LOP is 60/40. SOP is to LOP is 60/40. Yes, so interest SOP at 60% 3 lakh, LOP at 40% 2 lakh. Correct? SOP 60% how much guys? 3 lakh. Then SOP 40% 2 lakh. Next point, 2 lakh is fully allowed. Yes or no? Why it's LOP? 2 lakh is fully allowed. Guys, everybody following? Yes or no? 2 lakh is fully allowed. Why? LOP. Correct? 2 lakh is fully allowed. But On SOP, 3 lakh is not allowed. Yes, it's restricted. On SOP, 3 lakh is not allowed. On SOP, 3 lakh is not allowed. It is restricted to. It is restricted to. It is restricted to 2 lakhs. It is restricted to 2 lakhs. Within bracket, if conditions are fulfilled. It is restricted to 2 lakhs. It is restricted to 2 lakhs. Within bracket, if conditions are fulfilled. What are the conditions? Loan must be taken after 1499. Then it should only be for purchase or construction. Third one, it should be completed within 5 years from the end of the financial year in which loan is taken. So what did you say? Restricted to 2 lakh within bracket if conditions are fulfilled, or restricted to 30,000, or restricted to 30,000. If conditions are not fulfilled. If conditions are not fulfilled. What conditions are not fulfilled? Construction happened 5 years later, or I have taken the loan for, I have taken the loan before 1499, or I have taken the loan for reconstruction, or I have taken the loan for rather renewal, or what do you say, renovation. Yes. Write down example, guys. Example. Point number 1. 2/3 LOP, 1/3 SOP. Sorry, 2/3 SOP, 1/3 LOP. 2/3 SOP, 1/3 LOP. Example for this I am telling. 2/3 SOP, 1/3 LOP. MV, next point. MV means what? Municipal value, 3 lakhs. MV, 3 lakhs. FR, fair rent. FR, 2,70,000. FR, 2,70,000. SR, 3,30,000. 3,30,000. FR is how much? 2,70,000. 70. SR, standard rent, maximum rent chargeable, 3,30,000. Municipal value, 3 lakh. Municipal value, 3 lakh. FR, 2,70,000. SR, 3,30,000. AR, actual rent, 8,000 rupees per month. 8,000 rupees per month. 8,000 per month. Next, municipal tax. Municipal tax, 10%. Municipal tax, 10%. Interest. Interest, 1,20,000. $1,20,000. So guys, now when you are computing, you should do particulars, SOP, LOP. Particulars, SOP, LOP. Then first write the full structure. Then we can fill it up. Just write the structure first. Particulars, SOP, LOP. In particulars, the full structure you should write. What is the structure? First one, municipal value. Second one, fair rent. Third one, 1 or 2, whichever is higher. Fourth one, standard rent. Fifth one, 4 or 5, whichever is less, which is expected rent. Sixth one, actual rent. Seventh one, this or this, whichever is high, that is my GAV. Less municipal taxes. NAV. Less standard deduction, 30%, less interest. Full structure. You already know it. Come on, right. Then we'll start filling. We are all doing CA now, guys. No more spoon feeding. You should put in the effort and do it. Any help, we are here, but spoon feeding days are over in BCom. Chapter close. So for a few days you may find it difficult to adjust, but eventually you will come and adjust. Don't worry. No faculty will do any spoon feeding. You have to start practicing on your own. We'll do everything. Sums and all will solve. Sums will solve. Different types will solve. Definitely yes. We'll tell you what to write also. Please change your mindset from BCom to CA. Things are changing now. No, don't be in BCom mindset. Slowly, no problem. There will be lot of writing for you. I will also write all the important areas, otherwise I will dictate like this, so that both of us are writing together. That structure should be even at 12 AM. If I wake you up in the midnight and ask you that structure, you should tell. Correct? MBR, FV, FR, whichever is high, then that or standard rent, whichever is low, and that or this, whichever is high. Just write the structure, then we will fill up. 3 columns, particulars, SOP, LOP. SOP, everything will be nil, 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 full nil till the end. Only interest we have to calculate. SOP, no tension. SOP 2/3, LOP 1/3. Which one? No, it is nil. It is nil. Why 3 lakh? Only 3 lakh. 3 lakh into 1 by 3. That only you asked, correct. I hope. It's not 3 lakh you shouldn't put. 3 lakh into 1 by 3 you should put. Why 1 by 3? LOP was how much? 1/3. Tell me guys, municipal value 3 lakh into 1 by 3 we should do. Fair rent 2 lakh 70 into 1 by 3 we should do. Standard rent 3 lakh 30,000 into 1 by 3 we should do. Municipal taxes paid 1 lakh into 10%. Try it out. Did you understand the logic? SOP side everything 0, 0, 0, 0, 0, 0, only interest will come. LOP side everything divided by 1 by 3 except actual rent. Guys, actual rent don't divide. Actual rent is a rent you have received for 8,000 rupees per month into 12. That is received for LOP only. Don't do 1 by 3. Marks also will be 1 by 3. Correct? Yes. Understood? Right. Start. Finished also? 8,000 per month. No, I told 8,000 per month. Those of you have finished, check the screen. Those of you are writing, please write. Guys, in this class, some will be slow, some will be fast. Don't worry. I am equal to everybody. I will give time to everybody. Do not, do things urgently. Coolly do it. No problem. CA is like an ocean, guys. Till today, you are swimming in the swimming pool. Once you join CA Inter, suddenly you are thrown in the ocean. First 10 minutes you will be like, what is happening? That 10 minutes will be like 5-6 days. 5-6 days for you will be like, what is happening? What is happening? I am drowning. But you will not be drowning. You will be able to manage. Don't worry. I only request you to come out of that BCom mindset. In BCom mindset, now your teachers will be mixing the rice, mixing the sambar, adding ghee, adding palya, adding papadam, mixing everything, opening your mouth, feeding. Here nothing. I'll tell buffet is there, you take. I will tell you what all items is there, you only take. That is CA. Everything is like this only in CA. You should adapt. Will you adapt? Yes or no? Yes. Sir, what you are telling, God only knows. You are not? Okay. Let's see others. I don't know the answer. This I had solved like 2 days ago. I had solved and kept, because I want you to solve, then I want to show. That's why I've solved and keep before coming to class. I don't know the answer. 2-3 days ago I had done it. So municipal value how much, guys? SOP, LOP. So instead of doing in class, I do it at home and come, so that I want you only to solve. Then you can see the answer, right? It's all about, I'm throwing you in the ocean, teaching you how to swim. That's all. I am here. If I'll not let you drown, don't worry. Municipal value SOP nil. Everything nil 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 till interest, correct? And LOP how much, guys? Municipal value. One by one line you check. Municipal value 3 lakh by 1 by 3. 1 lakh everyone got? So first line is nil and 1 lakh. Everybody? Yes. Fair rent nil and 90,000. Everybody? Yes or no, guys? Tell loudly yes or no? 2 lakh 70 into 1 by 3. Correct. Next 1 or 2, whichever is higher. What is that? 1 lakh or 90, whichever is higher. Which is higher? 1 lakh. Don't do in calculator and all. Directly you should. I'm just saying. Yes, next. Fourth one, standard rent. Everyone got 3 lakh 30 into 1 by 3? Yes. 0 and 1 lakh 10,000. Expected rent is 3 or 4, whichever is less. 1 lakh or 1 lakh 10, whichever is less. Which is less? 1 lakh. Point number 6 is actual rent. What is actual rent? 8,000 into 12, 96,000 rupees. Everyone got it? Yes. Next, gross annual value will be 5 or 6, whichever is higher. 1 lakh or 96, whichever. Everyone got 1 lakh? Yes. Less municipal taxes paid. Municipal taxes paid is 10% of municipal value. What is 10% of municipal value? Municipal value found out here only, no? 1 lakh. So 10% of 1 lakh. How much is it? 10,000. Sir, I want to do another way. Okay, 10% of 3 lakh you take, 30,000. Then do 1 by 3. Same only will come, no? Yes or no? 10% of 3 lakh is how much? 30,000. 30,000 into 1 by 3. Same only will come, 10,000. You can do whatever. Mathematics. You can do whatever way you want. What is the net annual value? 0 and 90,000 rupees. Yes. Less deductions under section 24. First one, standard deduction at 30%. Here it is nil only. Here it is 90,000 into 30%. How much, guys? 27,000 rupees. Interest on loan. 1,20,000 is split between 2/3 and 1/3. What is 2/3? 80,000. What is 1/3? 40. Everyone got till here? Yes. So what is the income from house property? 80,000 loss, 23,000 gain. Will it be set off? Yes. What is the net income from house property? 57,000 rupees. Yes or no? Got it? Yes. Anybody wants to copy? You can copy. Anybody wants to check? You can check. I'll scroll. Check it, guys. Correct. So enter is where both of us will have to work. You will have to solve lot of sums here on your own. I'll give you time. Then super confidence you'll get. When you see the answer, no, superb, yes, awesome. Some adjustment you went wrong, oh, you will never forget it. If I write and you copy, no, then there's no point. I am not like that. I am not going to do. No teacher will do it here. They will give you time. You should do, and then you can check. Okay. Because here we are making you practice in the class itself. Blindly copying and then going and writing in the exam, there something else will come. So we need to solve together. You need to solve first here. All the chapters will be like that only. So you will build your speed, build your accuracy, build your problem solving ability, and wherever you make mistakes, you will never forget now. Because that you will realize, oh, there I took off full 3 lakh instead of 1 by 3. I'll never make that mistake again. Right? That interest portion, how did you feel? You solved on your own interest. Was it nice or bad? It was awesome, no? You solved on your own the interest portion. Felt nice. So those small wins every year, every day, small wins is what we are looking at. Right? Yes, guys. Last concept of the day, write down. Partly let out. Easiest, partly let out. That's the last concept, then you can leave. You guys are actually very fast, guys, very awesome. I should congratulate you. Last batch, I was taking this longer duration. You guys are grasping very fast. Good or bad? Good, very good. You are grasping very fast actually. Good. So next concept, guys, partly let out. Partly let out. Sir, this also partly let out. No, this is what area, previous one was area wise. This one is time wise. Partly let out, time wise, whatever you are writing now, time wise. Partly let out, time wise. What is time wise? 2 months LOP, 10 months SOP. Same house only. 2 months I only lived there, then I went somewhere out, I gave it for rent. On the other hand, 11 months somebody had gone for rent, I threw him out, I only came and occupied. I told him, sir, I am shifting now, sir, you please leave. So in that case, what to do? Any idea? Time wise. Should you create for months or what is it? See, area wise, no tension, 60-40. Here, should I do it for months? Nirmala madam, when she was framing, she's like, ayo, who will sit and do all this? Let's make it simple. That's why very simple this is. She said, even if you give it for LOP, even for 1 day in the entire year, it is LOP for the full year. Deadly. Actually, months only we should do. Nirmala madam got bored. Who will do month, 8 months, 2 months, who will do? Leave it. For time wise, what did she say? 1 day also if you give LOP, I will assume it to be full year LOP. Crazy. Means everything you should take for full year except actual rent. In the last step, expected rent or actual rent, whichever is high or low? High. So what you have to pay tax on? Higher only. Understood? So it is very stupid to give rent for part of the year. You should give it for full year or take it for full year. SOP. Middle if you do, everything is LOP. Even if you receive 20,000 income, that only you should take, but your expected rent is come 2 lakhs. So that calculation you will do now for the full year. So you should pay tax on 2 lakh or 20,000, whichever is higher. You end up paying tax on 2 lakh. So it's very stupid to ask somebody to shift in the middle of the year. It is very smart to tell by 31st March you vacate. That year I will take LOP. Next year SOP. Understood, guys? Like one of my office people now, our landlord has asked her to shift by 31st March. They have given a deadline. By 31st March, please shift. Makes sense or not? Very good point, no? She knows her taxes actually. Otherwise, it is a problem. Understood this, guys? All of you? So write down. Treated as LOP for full year. Deadly point. Treated as LOP for full year. Treated as LOP for full year. Next. MV, FR, SR. What is MV? Municipal value. FR, fair rent. SR, standard rent. Municipal taxes paid. Interest. Everything to be taken at full value. Don't divide number of months and all here. It is full value. Next. Actual rent is to be taken only for the months or days it is let out. Actual rent. Actual rent to be taken. Actual rent is to be taken. Actual rent is to be taken only for the months. Only for the months / days. Only for the months / days it is let out. Only for the months / days it is let out. That's all. Easy. So if they give area wise, divide area wise. If they give day wise, everything is LOP. Easy. So in tomorrow's session, we have to do concept of vacancy. Like for example, I tried a lot, but 6 months the room was vacant. What to do? 6 months rent I got, 6 months vacant. Everything else I am taking at 12 months. Vacancy I am taking at 6 months. Obviously, what I should pay on 12 months only. Then I will go to Nirmala madam and say unfair. I genuinely tried, I did not get any person. So please do give me some relaxation. So some relaxation is there for vacant rent. Then we have to do something called arrears of rent. What is arrears? It is not paid now. 2 years later, somebody will come and pay. When he comes and pays, is it taxable that year? Yes. 2 years later, bad debt fellow, today has run away. I have subtracted as unrealized rent. 2 years later, he comes and pays that money. So should I tax that year? Yes. That is concept of arrears of rent. So we have arrears of rent, we have those things, all those things, co-ownership, joint ownership, composite rent and all that. So guys, today when you go home, you need to study the material, my dear friends. Kindly go through the material, page number 6.1, 6.2, 6.3, 6.4, 6.5, everything we have done, don't worry. 6.6, 6.8, 8 till here. Vacancy we have not done now. 6.8. Vacancy will do, arrears will do, others will do. Other concepts and all tomorrow we'll finish off. 8 pages. And also in 6.10, in 6.10, 1 and 2. In 6.10, 1 and 2. Okay. So how many pages? Till 8, till vacancy. And in 6.10, 2 points. Tell me, after solving so many examples, so many problems and understanding concept, house property easy or difficult? Easy. Basics easy or difficult? Basics only was tougher than this. That marginal relief, that all that stupid things were there. That only was tricky. This is so easy. Like this, nursery rhymes questions will come, guys, for inter. 4 marks, 3 marks, very easy. But yeah, PGBP is standard, capital gain is standard. You will enjoy a lot because there are so many sections. Each section we are going to divide like this only and teach. Okay, one section, area, everything you will write. So please develop the habit of writing. Whether I'll dictate, whether I'll show, whether I'll write, you don't care. You please start writing. As I told you, till day before yesterday, you were swimming in the swimming pool and you thought one bigger swimming pool will throw you. But unfortunately, you are thrown where? Ocean. I will never let you drown. That is my promise. But you only have to swim. If I spoon feed everything, in the exam you will be like full writing and nothing will be flowing. From now only, if you practice where you apply and even make mistake, I don't care. That is the methodology, guys, right? So I have taught 1 lakh plus CA students, and it is, I am not a fool to follow some other methodology. Blindly follow me, 100% you will clear, right? So from now all teachers will be like that, no spoon feeding. Because problem with spoon feeding is, if I spoon feed everything to you now, in the exam you will be like, don't know what to do. Thinking ability only will not come. So the ability to think should be developed over the next 6 months. Then exam will be very simple. So will you study the 8 pages? Yes. Tomorrow will you ask me doubt if you have any? If you have doubts, ask. If you don't have doubt, tell I understood. Any point if you have doubt, I am here for you. Okay. See you guys. Thank you so much. You sat throughout 5 hours. Awesome. You guys are really good. And I know that because of the way you are doing, we will be able to solve the questions also properly and everything. Yes. Happy morning, guys. No, Josh, what is this? Good morning. Good morning. Thank you. Yes, boss. So, did you study yesterday? Any doubts? No? How many didn't study? Be honest, it's okay. How many didn't read? How many of you didn't read? It's okay, be honest. I'm not going to blast you and all. Don't worry. Everyone read? Superb, guys. Very good. Please study that day's class that day only. Let's do a quick revision, guys, shall we? So, from beginning, 5 minutes, full revision. Yes, what is the charging section? 22. 2 important conditions for house property. One is there should be house property. Then obviously second one is you should be an owner. House property can be commercial or residential. So in here, in and around like this building only, for that fellow, if he is not into this business of renting, then it is house property. If you are into the business of renting out, then it will be PGBP. Okay. Next, tax, whatever is charged, it's on something called as annual value. And on what it is charged? Building or land appurtenant thereto. Appurtenant means attached. Then we saw, if I only rent a land, it will be either IFOS or it will be PGBP depending on what I am renting. But for house property to happen, there should be at least a building or building should be there, plus land appurtenant to the building must be there. So yeah, what about subletting? Subletting will come under IFOS, that is not house property, because in subletting I am not the owner, right? Yes. Then we understood, even if you receive the money later and all those things, no problem, because ultimately I need to see when I was the owner. If I receive the money when I am not the owner also, it's okay. At the time of the rental agreement, I should be the owner. Only then, and I can receive the money anytime, no problem. But it depends on when I am entering into that agreement. So then money receipt is not the concern for what do you say, house property, it should be ownership. Annual value, yeah, and we understood the entire concept of format. First one, municipal value or fair rent, whichever is higher. Then whatever that figure comes with the standard rent. Standard rent is the maximum rent chargeable. So point number 3 or point number 4, whichever is lower will be my expected rent. And expected rent I'll compare it with actual rent. And whichever is higher I will compare, that will be called as gross annual value. And I will subtract that from what? Municipal taxes paid. I will get NAV, net annual value. Then deductions, 24A, 24B. 24A, 30% of NAV, and 24B, interest on loan. Income from house property I will get. That is what we had seen. Then one by one we have to discuss what is actual rent. Rent received plus rent receivable minus unrealized rent. Unrealized rent is bad debts. So bad debts, we will see that later. Next, municipal tax. It is a tax recovered by municipal authorities. It can be called local tax, water tax, sewage tax, whatever it is. Amount will be given always in the problem. Percentage also may be given. If percentage is given, what I will do? Apply percentage on what value? Municipal value. That's all. Then apart from that, guys, we saw it is always on municipal taxes paid, not payable. So whether I have paid next year's, whether I have paid last year's, I don't care. Whatever the paid amount I should take. Paid by tenant or paid by owner? Paid by owner. Perfect. It is always on payment basis. Year of accrual ignore. Paid by owner. Paid by tenant not allowed. I should ignore municipal taxes paid on SOP. I should only take it from LOP, obviously. For SOP, everything will be nil, 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 nil. Only in the end, interest you will get. Next, we understood the concept of unrealized rent. Unrealized rent is similar to bad debt. Should not get confused with vacant rent, which we are going to do today. Vacant rent is where I could not find any tenant only. Unrealized rent is the that fellow ran away. It was a proper deal, he ran away. 4 important conditions must be there to claim unrealized rent. Condition number 1, bona fide tenancy. Condition number 2, tenant has actually vacated or absconded. Condition number 3, tenant should not occupy any other property of the owner. And lastly, all available legal steps should be taken to recover the rent, as we saw. And if any security deposit is taken, that will be added to the rent received while computing unrealized rent. So rent received, deposit, receivable, unrealized rent. So I will add that and close. Interest on loan. What is a loan? There are 4 types, basically lender can lend money or cash, cash or kind, whereas receipt from, when I am taking it back from the borrower, it should always be in cash. Only that is called as loan. What is the purpose of loan, guys? Anything can happen. Acquisition, renewal, repair, construction, whatever it is. And the beauty is, I showed you the Bare Act. Source of loan also can be through anything. Bank, institution, related party, friend, family, anything for that matter. If I take one loan to repay another loan, so for 2-3 months double interest I'll be paying. Is that also claim? Can I claim that also? Claimable? Yes, claimable, no problem. Then interest, municipal tax is on payment basis. Interest is on due basis. So it is interest due or interest paid. I should take a accrued interest. Interest due I should take. So if there is any penal interest, 1% extra, 2% extra, penal interest and all is not covered. Bank commission, brokerage, processing fee not allowed. Interest on loan taken from outside India, I will allow it. I told you the logic, but Nirmala madam will say that for that fellow it is income, and once the moment money goes there, he will never give back to me. So you should deduct TDS, and then you give, then you will take the full interest, no issues. Nowhere it says interest borrowed capital from India, borrowed capital from bank. Only what dialogue I showed in the Bare Act, borrowed capital. Correct? It can be from India, outside India, from friends, from banks, no problem. Right? Then and interest is allowed from which year? From the year of completion of construction, not from the date of construction, from the year of construction, completion of construction. So if my property is built in October 24 also, I will not take any pre-construction interest till October. Full year 24-25 I will take it as construction year. Even if I build my building in March 25 also, I will consider 24-25 to be construction year. Construction year, got it? Yes. So you leave the year of construction. Any interest you paid before the year of construction, any interest you paid before, that will be called as what? Pre-construction interest. That pre-construction interest will be accumulated and spread across how many years? 5 years. So full you add divided by 5, every year you apportion that interest. Very, very simple. We saw that. Yes. Next is restriction on the interest allowed. Yes guys, for LOP and DLOP full amount is allowed, whereas for SOP it depends on 3 conditions. Condition number 1, loan should be taken after 1499. Loan should be taken only for construction or purchase. Third one, construction should be completed within 5 years from the end of the financial year in which the loan was obtained. If all conditions are satisfied by SOP, 2 lakhs. Otherwise 30,000. Means if the loan is taken before 1499, if the loan is taken or if the loan is taken for renovation, then all that interest and all I will not give you full, I will give you only 30,000. Or if the construction happened some 6 years later, 7 years later, yes. In Bangalore that's the problem. All these small builders, they promise something and they will give you some 6-7 years later. So many cases are happening that you also know. So because during COVID they lost the money and then they are not able to, and in these real estate fellows do a lot of money rotation. You will give it to me, I will put it in some other project. That fellow will give, I will put it in this project. Money rotation keeps happening. They will not allot it to this project only. That is the problem, right? So 2 lakh will be allowed for what? Case 1. Case 2, any other reason, renovation, repair, blah blah blah. For that how much it is? 30,000. Yes, we saw that, and we saw a couple of sums. You correctly solved everything yesterday. Yes, that we saw that, guys. Then other points. Repair expense, parking expense, insurance expense, nothing of these things are allowed. Everything is covered under 30%. Today we have to do expected rent, but before that we also did 2 things. Partly let out property. Area wise if I have let out, then guys, for example, if I let it out for business, that I should ignore. SOP and LOP I have in the same floor. So what I should do? One part should be taken as SOP, other part to be taken as LOP. So if there is SOP and LOP, I have to, for calculation purposes, I have to consider it to be 2 homes. And then everything I have to divide. Municipal value, fair rent, standard rent, municipal tax, interest, everything to be divided in that proportion, except actual rent. Actual rent is not for the building. Actual rent is only for that part. So actual rent will not be touched. And interest will be divided also, split like this. Total interest I will take, and if it's LOP, no limit. And for SOP, only 2 lakhs. We saw the examples and all those things. And then we saw if it is partly let out, what wise? Time wise. Time wise, very easy. 1 day also if you let out, it is deemed that entire year it is let out. So there is very easy it is. So even if 1 day you let out, 365 days let out is what I have to assume. So that's all very simple. So did you read the notes, all of you? Yes. So any doubts? Now is it easy? I told you that notes is like whatever we do in class only, but little extra masala and all will be given. In the exam, whatever we have written down here, that only you write in your own language, using that language more than enough. Are you expected to write bare act language? No. Are you expected to write section number? When automatically when you are studying only, you will come to know section number. Do not ever write the wrong section number, you will lose marks. Sir, I am not able to remember only, no problem. So the difference between if you write section number and don't write section number, overall, in all laws put together, DT, IDT, law, everything put together, maybe you will lose around 8 to 10 marks. I am telling overall. All subjects put together, you will lose 8 to 10 marks. So it's okay. It's still better than writing wrong section number, right? So if you can remember section numbers, not everything. Like for example, charging section, you know, which charging section? 22. That at least you will know, no? And deduction, you know, that standard deduction, 24A. Like that if you write, enough. I am not saying 3514, 3515, like that not needed. Okay, basic section if you write, it's okay. If you don't write section also, it's okay. but try to write the important ones. Charging section 22, standard deduction 24A, 24B. That much I am sure while comparing, writing, reading only, you will figure it out. Nothing to worry. So since we are doing it from the beginning, we will try to remember as much as possible section numbers. If we can, great. If we don't, then we will see. So there is no need to write the legal language. Nobody expects you to write legal language. They will expect you to write the law in your own simple language. That is what we are writing here. We are writing it in simple language. For example, those 4 conditions, if you write, more than sufficient. Which 4 conditions? When can you claim 2 lakh rupees as interest? 3 conditions constructed after 1499. Those 3 points, whatever we have written, if you write that, full marks you will get. You can write in your own simple English language. No legal language needed. No Bare Act needed. Bare Act I am going to see, I am show you only when we are explaining. After that you forget about it. You just stick to our notes. Same thing is given in my textbook also, if you have observed. With some extra masala, better language it is there. That also not needed. Just follow this. So my intention is, when you go home, you will study that. More clarity you will get. Maybe some 1 or 2 extra points if you find there, you can put it in the book also. Okay, extra points if you find, oh, this is extra, immediately put this in the running notes. Then you, what happened? Restarting. Okay, it's restarting. Let's go. So ultimately, guys, what you should do is that you forget about everything. Ultimately, what you need to understand is simple. You need to just follow the, what do you say, concept, and then it is easily you can score the marks. Do not worry about it. So all you need to do is just think about the concept. That's all. Device ran into a problem. Okay, let it restart. Cool, guys. So next concept. Let's see what is the next concept. Write down. We have to do the vacancy, but before that we'll do something else, so that until this restarts, I don't want to waste time. Hold on. So it's simple, guys. You just follow that particular whatever I told you, more than sufficient. You need not sit and do so many things. It's very easy. Law is very, very easy. Tax is very, very easy. Just need to follow the rules and regulations. Okay, actually write down vacancy only. I'll dictate until it restarts, guys. Write down. Concept of vacancy. Concept of vacancy. This is a new concept. Till everything we are writing concept wise only. This is new concept. Concept of what? Vacancy. What is vacancy? Tenant is available or not available? Not available. So write down. When no tenant is available. When no tenant is available. When no tenant is available, then vacancy arises. When no tenant is available, when no tenant is available, then vacancy arises. And we need to compare 3 concepts. And we need to compare 3 concepts. We need to compare 3 concepts. 3 concepts we need to compare, guys. What? First one, expected rent. Expected rent. Second one, actual rent. Expected rent, actual rent. Third one, vacant rent. Third one, vacant rent. Vacant rent. Yeah, one by one. Okay, so what are the things I should do? Expected rent, then Actual rent, vacant rent. Examples you write down, guys. Example number 1. Example number 1. Example number 1 will write down. So this is basically vacant rent also means what? If it was not vacant, how much I would have earned? That also I need to compare now. First one, guys. First one. Example number 1, right? Yes. Expected rent is equal to 3 lakh per annum rent per month. 30,000 vacancy 3 months. So what is the actual rent? 30,000 into 9. 2,70,000 rupees will be my actual rent, correct? 2,70,000. What will be my vacant rent, guys? If at all it was not vacant, what would have been my rent? 30,000 into 3. So 90,000 I would have got. Overall I would have earned 3,60,000. Overall I would have earned 3,60,000. Example number 1. Right? One example number. I'll explain this, why I am writing this. Second one, example number 2. Expected rent 3 lakh. Rent per month 20,000. Vacancy 1 month. Vacancy 1 month. Actual rent 20,000 into 11. 2,20,000. Vacant rent 20,000 into 1 is 20,000. Overall 2,40,000. Expected rent 3 lakh. Rent per month 25,000. Vacancy 4 months. Actual rent 25,000 into 8. 2 lakh. Vacant rent 25,000 into 4. 1 lakh. Guys, got it? Check here now. First, one by one. Is this clear, everyone? It's simple. I'm just writing down the stuff. That's all. Here you see first one. You see, the thing is, I obviously have to take only actual rent, right? What I have received is 2,70,000, and what is expected rent is 3 lakh. Correct? So Nirmala madam is telling, ideally it is always expected rent or actual rent, whichever is high. What is high? She said pay tax on 3 lakh. I am asking Nirmala madam, in case it was not vacant, I would have paid how much? I would have got how much? 3,60,000. So 3,60,000, I would have paid tax on 3,60,000 only, obviously, whichever is higher. But I am unfortunately earning less genuinely because there are no people for 3 months. Why are you punishing me for a genuine reason? Yes or no? He's telling, madam, actually, if you see, if I just compare the expected rent and if I compare this actual rent and vacant rent together, So expected rent is 3 lakh. Actual rent and vacant rent is 2 lakh 70 plus 90, 3 lakh 60. I would have anyway paid more in case I filled up the house. Since I could not fill it up, I have no choice but to, go with 2 lakh 70. If that 30 extra had come, I would have paid 3 lakh 60. Why are you punishing me for no fault of mine? Why should I pay 3 lakh rupees when on tax on 3 lakh when actually I earned only 2 lakh 70? And I am a genuine guy. If 3 months rent I had got, I would have paid you more only. Happily I would have paid 3 lakh 60,000 on that. I would have. I don't have money now. I lost 90,000 already, and you are again on top of it charging me on 3 lakh. Unfair. So please give me some relaxation. So she said, okay. She said, if I add annual actual rent and vacant rent, and if the expected rent happens to be less than, is it less or more? Less only, no? 3 lakh is less than 3 lakh 60. Then I feel that you are telling the truth. Because if you add the vacant rent, he would have actually earned more. And you would have definitely happily paid more. It's a genuine reason. So you know what she said? She said, if this is the case, if ER is less than AR plus VR, she said, you can take this only as the gross annual value. Ideally, you should have taken this, but no problem. Don't take this. Take AR on. Isn't it fair? Yes. So she said, if ER is less than AR plus VR, she said GAV will be the AR only. This only will be GAV. Is fair or not? Fair. Write down, guys. Write down. Logical, very logical. She's talking very logically. Correct now, guys? Understood? So AR is what? Sorry, ER is less than AR plus VR. Now tell me here, guys. Here you second example you see. If I take expected rent and AR plus VR together, what is expected rent? 3 lakh. AR plus VR together also will be how much? 2 lakh 40. So you will go to Nirmala madam and say both put together also 2 lakh 40. Nirmala madam say if it was 2 lakh 20 also, 2 lakh 40 also, anyway you would have paid how much? Tax on 3 lakh only. So don't play around with me, you are actually cheating. You are showing 2 lakh 40, but I am sure you will be taking some cash later. Because this is what you are showing in the books, but cash will be taking nicely inside. So you cannot go and have this logic here. Previous logic you cannot have, because if you add AR and VR also, it's less than expected rent. So Nirmala aunty will give you one counter question. Assume all 12 months you got rent. How much you would have got? 2 lakh 40. And how much you would have paid tax? Same AR and ER and AR, whichever is higher. You would have anyway paid on 3 lakh. No, what's the difference? Please pay on 3 lakh. Logical? Yes. Yes or no? So this ER, if it is greater than AR plus VR, that is 3 lakh rupees, it's greater than 2 lakh 20 plus 20. It's all logical, no mugging up. 2 lakh 40,000 rupees. So she is telling, boss, it is immaterial. Even if you add, it's coming the same. So GAV will be what? ER. Perfect. GAV will be ER. Next you see, Third example, ER, AR plus VR. 3 lakh, 2 lakh plus 1 lakh, 3 lakh. This will be equal to 3 lakh equals to 2 plus 1 equal to. If it is equal to, how does it matter, guys? If it is equal to, she is telling you are genuine. You are genuine, because if that 1 lakh extra you would have got, you would have anyway happily paid on 3 lakh. But now you are not getting it because you have to unfortunately pay less because you are genuinely not getting it. It is vacant for 4 months, I understand. So I will give you the benefit. Here what will be the GAV, AR or ER? AR. Perfect. GAV will be the AR here. That's all. So obviously, guys, to summarize, if ER is less than or equal to AR plus VR, that is example 1 and 3, then GAV is equal to AR. This formula you remember, and actually nothing to remember, it's common sense, which we explained, but it's okay, you remember this one. If ER is less than or equal to AR plus VR, then GAV is equal to AR. On the other hand, if ER is greater than AR plus VR, example 2, then GAV is equal to ER. There's no internet. Let me call that guy once again. Guys, see the material question number 5 you solve, guys. Should open that here also. Concept capsule. Radha owns a flat since 2018 and let out a private company from the beginning. So what it let out to whom? A private company. From the beginning she gave the rent to the house to a private company. The annual value assessed by the municipal corporation was 60,000. Property was let out for 10,000 in April 21 and interest free rental advance equivalent to 3 months rent was collected. 10 plus 10 plus 10. 30,000 was collected. There is a stipulation. Stipulation means there is a condition in the lease agreement that 25% increase shall be made on completion of 3-year tenancy period. So after 3 years there is a 25% increase. So 10,000 will become 12,500, right? From April 24 the company paid given that 12,500 rupees as per the terms of the agreement. The company ran into financial crisis in June 2024 and no rent was paid thereafter. April, May, only 2 months they paid. April and May only they paid, June onwards not paid. Notice has been given to evict the company and other steps taken to realize the rent were not fruitful. They are now talking about unrealized rent. Correct? Because they are asking them to pay, they are not paying. Rental advance has been adjusted towards June, July and partly for August. Why June, July, partly for August? Because you have 30,000, no? 30,000, 12,500 for June, 12,500 for July. So 12,500, 25,000. 5,000 extra is left. 5,000 is adjusted for August. Why? They have taken no here, the 3 months deposit. That 3 months deposit is adjusted. April, May they paid. June I have adjusted against 30k. July I have adjusted against 30k. 12,500, how much? 25. 5,000 I have adjusted in August. So August instead of 12,500 I have only received 5,000. September, October, November, December gone. Right? Yes. The balance is not realizable. Ultimately, the company vacated in March 25. Assume beginning of March they vacated. So, you have vacant rent also now. How much vacant rent? 1 month vacant rent. So, April, May they paid. June, July, August this adjusted. This 5k out of 12.5k adjusted. Right? September, October, November, December, January, February is my unrealized rent. And March is my vacant rent. Deadly. Right? This is a good question. So everything is covered here. Calculate the GAV. Calculate the GAV. So how do you do it? What is the GAV here for this? Tell me guys. So you understood the concept? So I should calculate the gross annual value. Is fair rent, standard rent applicable? No. So directly expected rent only I have to take into account. So write down same question number 5. So do you agree that this is the, you see, name of the SC Radha, municipal value 60k, fair rent not applicable, standard rent not applicable. Yes. Expected rent how much? 60k. Since fair rent and standard rent are not available. Is fair rent available? No. Standard rent, is it available? No. So what is my expected rent? 60,000. What is the deposit? 30,000. Correct? Till here you copy. Then we'll solve together. So name of the assessee, Miss Radha. Previous year 24-25, assessment year 25-26. Done. Now tell me guys, what is the actual rent is equal to rent received plus receivable minus unrealized. So rent received is how much? Only April and May. Receivable will be June, July, August, September, full. Correct? So you see, I'll explain, then you can copy here. Actual rent is what? Rent received, receivable minus unrealized rent. What is rent received? 12,500, 12,500 and deposit. I already told you, whenever you get a deposit, that also has to be added to the rent received. So rent received is how much? 55,000. Then unrealized rent. Okay, you write this down, no problem. So actual rent is equal to rent received plus rent receivable minus unrealized rent. Rent received is how much? 12,500 plus 12,500 plus deposit 30,000, totally 55,000. Now, what is unrealized rent, guys? What will be unrealized rent? Why? 30,000 was adjusted against rent of 12,500 in June, 12,500 in July and 5,000 in August. Yes or no? Yes. What is the unrealized portion in August? 12,500 minus 5,000. 7,500 is unrealized in August. Then I told you what? September, October, November, December, January, February. 6 months. Vacant. Not vacant, sorry, unrealized. Not vacant, unrealized. So 12,500 into 6, September to end of February, unrealized. Total unrealized rent is 82,500. Everybody with me on this? Yes, copy down. Take your time, no problem. I had explained this already, I am just making you write, that's all. 30,000 was adjusted against rent of 12.5 in June, 12.5 in July, 5,000 in August. Unrealized amount in August will be 12.5 minus 5, 7.5 is unrealized. Unrealized from September to February, September, October, November, December, January, 6 months. 6 months is 75,000. Total unrealized rent 75,000 plus 7,500, 82,500. Right? Now tell me guys, so any doubt? Any doubt? So what is happening now? Only 1 month it is vacant rent. Which month? March. Is it that I mean, that fellow is, he vacated, no? So vacated means that portion is unrealized. What are the conditions of unrealized rent? First one, bona fide tenancy. Second one is absconding or he vacated. In this case, he vacated. Third one is even all legal steps should have been taken to recover, that they have given in the question. You see that in the question they have given very clearly, the company has taken all the steps to evict, to realize the rent also were not fruitful. Notice also has been given, so that's fine. So can they claim that unrealized rent? Yes. So actual rent is equal to rent received plus rent receivable minus unrealized rent. Rent received 55,000, we have already calculated here. Rent receivable is 82,500, unrealized also 82,500. So ultimately actual rent will be how much? 55,000. I still have to compute the vacancy portion. Everybody with me? Rent received is 55,000. What is receivable? I should have received 82,500. Did I receive 82,500? No. But that 55,000 I have added deposit also. At least deposit is getting recovered. So even though I received only April, May and 2 months rent, that is 12 and half, 12 and half. 25,000 only I received. But I have added 30,000 deposit also. Is my deposit also rent? Yes. So that's why actual rent is coming up to 55,000. It's very simple. 12 and half plus 12 and half plus that deposit also will become my rent. I told you deposit will be converted to rent. So what is my actual rent? 55,000. Assuming they vacated on 1st March, tell me now the last month will be what, guys? Vacant rent. Now I need to do this formula. ER is equal to ER, AR plus VR. What is expected rent? What is expected rent? 60,000. What is actual rent? 55,000. What is vacant rent? 12,500. So is ER less than AR plus VR? Yes. Is ER less than AR plus VR? Yes. So 60,000 is less than 55,000 plus 12,500, 67,500. So ER is definitely less than the 2, which means I am a genuine case. Hence GA will be AR. GA will be AR. So hence GA will be how much? 55,000 only. It's not 60,000. Any doubt? Did you understand now? This is how we should do. This is a very good question, exam question. Combination of unrealized rent and expected rent. Sorry, vacant rent. Assuming they vacated on 1st March, vacant rent is equal to 12,500. ER is less than AR plus VR. 60,000 is less than 55,000 plus 12 and half. So gross annual value is equal to how much? AR. Understood? Easy? That's all. Like this, the last questions, very easy. Next concept, guys. Next concept, write down. All this we have done. Next concept, write down. Arrears of rent. Next concept, arrears of rent. Arrears of rent. Guys, what do you mean by arrears? Arrears can be two things. One, bad debts recovery is also called arrears. One more is, so we just put two arrow marks and write. One is recovery of bad debts. Recovery of bad debts, that is recovery of unrealized rent. So arrears of rent can be recovery of bad debts slash recovery of what? Unrealized rent. In this example, that company did not pay for so many months, no? Then later, 1 year later, they can come and pay. Whatever, that is recovery. This time I have taken the benefit, I have subtracted it. That time I have to add it, that's all. Have I not subtracted it this time? Yes. Rent receivable minus unrealized rent. So I have not paid tax on that. But when I am receiving that money, should I pay tax? Yes. Simple. Arrears can also be one more thing. Arrears can be disputed rent. What is disputed rent? They would have told you have to increase 10% every year. But now I am not increasing that 10% because, I have not increased that 10% because, what has happened is there is some problem between me and you. I'll tell your plumbing is not proper, water doesn't come properly. Why the hell should I pay 10% extra? Both of us are fighting. 50,000 is the rent, I'll pay 50,000, 55,000 now I'll not pay. Lift is not working, always lift I will only have to get repaired. Motor is not working, motor also I only have to get repaired. You are the owner, you are not getting anything done. And now you are asking 5,000 extra, I will not pay. Like that we are fighting, 1 year over. That owner should have received how much? 5,000 extra into 12, 60,000 rupees he should have received. But he has not received. 2 years over, 1,20,000 he should have received, I have not paid. Then we'll arrive at some figure. We'll sit across the table, discuss and say, okay boss, see 1,20,000 I have to receive, but that all repairs etc. I have spent 40,000 from my pocket. So please pay 80,000 and close. When I say please pay 80,000 and close, that is called arrears of rent. Arrears of rent can be, one is disputed rent like this, or it could also be what? Recovery of bad debts. This company ran away, like 1 year later they can come and pay and close it. Okay. So what is dispute? Write down guys. Arrears of rent is what? As I told you, bad debt recovery or disputed rent slash negotiation. Disputed rent slash negotiation. Right? Yes. Now tell me, in which year it is taxable? Yes, that's all. In the year when you receive the money only it's taxable. Why will I tax it on accrual basis? Second point, write down, taxable in the year of realization slash receipt slash recovery. Taxable in the year of realization slash receipt slash recovery. So 2-3 days before every class I will make the notes. I will see the notes and make my own notes. So I'll either dictate it or I'll show you, you can write down. I will explain, then you can write down, because it will become easy for you. So I will do this effort separately so that it will be very easy for you to understand. Now 2 years later you came and paid me. Is it taxable 2 years later? Yes. But at that point of time I am not the owner. I would have sold that house. Is it still taxable? Yes. Nirmala madam says, I don't care. That time you were owner, no? So please pay. Third point, still taxable if assessee is no longer the owner of the property at the time of receipt. No mercy. It is still taxable if assessee is no longer the owner of the property at the time of receipt. Still taxable if SC is no longer the owner of the property at the time of the receipt. One logic you tell me, guys. 2 years later you received the money. Let's say I received, what do you say, 2 lakh rupees. How much is taxable? Why 1,40,000? If you had received that 2 lakh before only, would you not have given standard deduction 30%? Yes. Because what is actual rent? Actual rent, and then what is the final one? GAV. GAV minus municipal tax, okay, NAV. NAV would have included that 2 lakhs if I had received it 2 years ago, yes or no? Yes. On that, what I would have given? Standard deduction 30% I would have given. Which means that 2 lakh, in that 30% I would exclude. I would pay tax on how much? 70%. 70% is how much? 1,40,000. Yes or no? Yes. But here, suddenly I received 2 lakhs 2 years later. Have I given standard deduction for that? No. Should I not give? Yes. So, keeping the same logic in mind, lawmaker has told, next point, 70% is taxable. 70% is taxable. 30% standard deduction. No, that I cannot. Because municipal tax I will give it for the full building. That I already would have subtracted, no? For this extra portion, should I subtract again municipal tax? No. But I should subtract definitely standard deduction. Municipal tax is one amount. I would have already subtracted that. So I will not allow to be subtracted. Whereas standard deduction is a 30% discount on the full amount. Have I given 30% discount on 2 lakh? No. Not discount, expense basically. Interest already I have claimed before, no? Why will I claim again? I already would have claimed before. Full amount only I would have claimed. Is there a chance when I cannot claim? No. It will be a loss. I can still claim loss. Municipal tax interest already subtracted from amounts before. So there is no point. Only what is not done? Standard deduction. That's all. No other expense can be claimed, guys. No other expense can be claimed. And section number for this is 25A, just for your knowledge. Income Tax Act, section number for this particular section, for this particular concept, that is, what do you say, arrears of rent, 25 capital A. Capital A. Right, so if you see, same thing is given here, 25A. That's all, very simple. That is what concept, next concept of arrears of rent. So many concepts you have studied. I told you main thing only is unrealized rent, then standard deduction, interest already done. Now other concepts we are doing, arrears of rent, vacant rent, then the property which is split area wise, property which is split time wise. Now what if me and you are joint owners? Full building, me and you joint owners. So should I split municipal value into 50-50? For you separate calculation, me separate calculation. We have taken loan also on the building. So loan also will be split now. Interest I am paying 5 lakhs. So is it 2.5 lakh, 2.5 lakh? And let's say both of us are, staying. I am staying in the ground floor, you are staying in the first floor. Self-occupied property. Interest we are paying 4 lakh rupees. So what is allowed for the property? 2 lakh. So should I share it 1 lakh, 1 lakh, or 4 lakh only can be shared 2 lakh, 2 lakh? What do you think? Are you understanding? Ideally, what is the, for SOP, what is the interest allowed for that entire property? 2 lakh. How much interest I am paying? I am told you 4 lakh. Jointly we have taken loan and jointly we are paying 4 lakh. So my question to you is, in the entire building anyway allowed is 2 lakh. In that 2 lakh, both of us are saying 50-50%. So should I take it 1 lakh, 1 lakh? Or does lawmaker say, overall you are paying 4 lakh anyway, 4 lakh divided by 2, 2 lakh, each of you can claim 2 lakh. So is the 2 lakh is per property or is 2 lakh, is it per assessee? That is one more question. Per property or per assessee? Correct. Ideally, it should have been per property, but there is a relaxation given. 2 lakh is per assessee. 2 lakh is per assessee. So, what is a good tax planning? What is a good tax planning? Joint ownership you should do. If there is a lot of interest involved, no, joint ownership you should do. Got it? Yes. So, write down guys. Co-ownership, joint ownership. To be divided in the ratio of ownership. To be divided in the ratio of ownership. Income from house property is calculated normally. No change. Income from house property is calculated normally, no change. So, the last step what we should do, divide in the ownership ratio. No change, calculate normally only. In the end what I should do, divide in the ownership ratio. 2 people own it 50-50 means make it 50-50. 2 people own it 60-40, make it 60-40. Should I sit and divide each and every item? No. Calculate everything normally. Final amount only you divide. No. Income from house property 5 lakh. So divide 50-50. That's easy. Interest on loan. So did you understand? Income from house property calculated normally as if one person only is owning it. Last step, after you get the amount, divide it in which ratio? Ownership ratio. Ownership ratio. Point number 4, interest on loan. DLOP or LOP, no limit. And SOP is what? 30,000 or 2 lakh per co-owner. That is joint loan. Yes, correct. So it is per co-owner, joint loan. Because in the law, no, they have used the word 2 lakh per assessee. Law only tells that 2 lakh per assessee, not 2 lakh per property, 2 lakh per assessee. Right? So if there are joint assessees, you can take 2 lakh, 2 lakh. So better planning, tax planning this is. If at all I have taken a loan and the interest is coming up to more than 2 lakhs and it's a SOP, I want to anyway claim full more than 2 lakhs I want to claim. What to do? Better to take the house with your spouse, parents, easier. So each person can claim 2 lakh each. Correct? Nowadays if you pay, like if you take 1 crore loan and all, you will have to pay, 10 lakh interest. So in 10 lakh interest means I can only get 2 lakhs. Stupidity. So what will I do? 4 people can come together and buy the property. Joint ownership. Family members only, no tension. Each person can claim how much? 2 lakh. How cool is that, right? Good tax planning. Right? For this only people will come to you. People will come to you for this idea. They'll tell what to do, how to save tax, then you can give these ideas. Got it? So it is 2 lakh, 2 lakh. Now the question is, if you have not determined the share only, that also can be possible. 4 of us can come together and jointly will buy a property. We have not determined the share between us. That is possible. It's just family members. Out share we don't know. We have not written anything down. Then unfortunately some fight happens now in families. So I still cannot determine the share. What to do then? Income tax department says very simple. Share is not determined, then it is taxable as AOP, association of person. I will say I will combine you and charge AOP rates. What is AOP rate? Slab rate only, but it will be treated as a separate entity. That is called AOP. Separate entity for what? For tax purposes. Got it? So write down. If share is not determined, then it is taxable as association of person. Right? Yes. Next concept, write down guys. Composite rent. What is this composite rent? Very simple guys. I told you no, I will rent this entire place. Somebody will come and say, sir, can I take this entire place? I have a drama company. I want the space for rehearsal. Okay, so am I renting the bench or renting the area? Renting this area only, correct? I'll give you time to write. So this obviously I'm just renting the area. I'm not renting the entire benches. But I will say no, benches and all cannot be shifted just for you. You want to take everything. I want only this. I don't want projector. I'll not pay for projector. I'll not pay for AC. Like no, this rent hall is there. Everything you should take. Bench, everything, rent will be there. There is a one single agreement. There can be multiple things. One, I can only give the hall, then no problem. Second, I can give the hall and only few items. You want hall and benches, don't want AC, because AC is costly, no? In the sense, what I am saying is, if you use AC, rates will be high, electricity bill will be high. So, rent will be little less if you don't use AC. So, I can have multiple agreements. One is only hall, one is hall with bench, one and hall bench no AC, hall bench AC, hall bench projector and video facility. Like that, different agreements I can have, no problem. Like studios we are hiring, no, for podcast. You know, for podcast people hire studio. One they only hire studio, then they hire for studio and editing, 2-seater, 3-seater, 4-seater. Like that, different rates are there actually for podcast. So yes, composite rent is what? Rent of house property plus rent of other assets. What is composite rent? Rent of house property and rent of other assets. Is agreement separable? Yes. I'll explain. What do you mean by agreement separable, agreement not separable? If agreement is separable means the house property is separate, furniture is separate. If I can make different agreements, as I just told you, bench separate, for bench if I want to use this much money, camera if I want to use this much money, projector this much money, then only the house property, the space if you want, I'll give you space. If you want space plus other items, I'll give you other items. If its rent is separable like that, then house property rent will be house property, other assets will be under PGBP or IFOS. I want space plus camera plus technician plus editing, separate. But if nothing is separable, mine is very simple. Boss, you come here, you have to hire the studio, you have to hire the camera, you have to hire the editor, no other choice. Then what? Is it house property or PGBP? PGBP. If I am giving the space separately, then it is house property. And if I am giving other items separately, that other items are IFOS. If I am saying no, I am keeping it very simple, no too many options. Place is there, camera will be given, editor will be given, cameraman will be given. You have to take, want to take, you take, otherwise that is my policy. Then is it house property or IFOS? IFOS. Or if I am doing it as a business, then PGBP, right? Yes. Copy. Got it, guys? So that is what? Composite rent. Rent of house property and rent of other things. Now, if the house property is outside India, what to do? Guys, still you are understood? Easy? Very. If the house property is outside India, it is tax. So you see, write down next one. House property, I'll just explain and then you can write down. See, house property if it is outside India, now guys, depends whether you are a resident or you are a non-resident. If you are a resident, there are two things. One is resident, ordinary resident, resident, not ordinary resident. So for resident, ordinary resident, global income is taxed in India. For a resident, not ordinary resident, then I'll have to go to the non-resident status. There are two types of residents, guys. One is called resident, ordinary resident. One more fellow is called resident, not ordinary resident. Right? Resident, ordinary resident and resident, not ordinary resident. So, we will do one thing. We will try and understand now who is this resident, ordinary resident and resident, not ordinary resident. There is one chapter for you called residential status. Correct? You know which chapter is that? Initially only it's there, you see. So, we'll stop here slowly and try to go there to understand who is a resident, ordinary resident, who is a resident, not ordinary resident. Once you understand that, you will understand what I am trying to tell. There are three types of people: resident, ordinary, resident, non-resident. That's all. In resident, two types: ROR, RNOR. Resident, ordinary resident, resident, not ordinary resident. Because from this chapter only, I will be using so many places this dialogue: ROR, RNOR, ROR, RNOR. So we need to understand who are those people, right? So you can say house property outside India, and then you can write down concept of residential status. Write down concept of residential status, because once we do residential status, we'll then come back to this chart. You will easily understand. Okay, residential status. In that residential status, half we will do, remaining half we'll have to see later. We'll have to do only half now, remaining half we'll have to see later. Residential status. So it is what? Resident, ordinary resident, not ordinary resident, and all those things. So residential status is a very, very interesting topic, because regularly they ask in the exam. Which chapter is this? See in their notes. Which chapter? Which one? Third one. Second chapter, yes. Perfect. Interesting concept, we will see. Don't worry, I'll explain, then you can copy, guys. Don't worry, I'll give you a lot of time. So as I told you, this is the general rule which we'll just explain now coolly. Why I am doing residential status now? There is a reason, because we will use this concept in house property, we will use this concept in PGBP, we will use this concept in capital gain. So even if you do it later, it's okay, but I thought since in the flow we will finish it off. Today we have ample time, because house property is almost over. So instead of just doing something new, the linked concept we'll do. That's the only reason I'm doing. Otherwise I would have done it later. I don't want to start any new chapter today, in the sense I don't want to start PGBP, because the next 2-3 days I don't have class, you have somebody else. So I don't want to just break the flow. When I come back in the flow, then we will do it one shot. Okay? Yes. So residential status, we have individual and HUF, and for firm, AOP, local authority, company, everybody. Individual and HUF, there are two types: resident, non-resident. And for firm, AOP, local authority also, resident, non-resident. But the interesting part is, for individual and HUF, there are two types, as you saw: ROR, RNOR. What is ROR? Resident, ordinary resident. What is RNOR? Resident but not ordinary resident. General rule is, for every resident, global income is taxable. You are a resident, and for you what is taxable? Global income. You earn money in India, taxable. You earn money in USA, taxable. You earn money in Australia, taxable. Will it be taxable in Australia also, whatever you are earning? Yes. Are you paying double tax? Sometimes yes. So how to curb that from happening? There are many double tax avoidance agreements. There are double tax avoidance agreements whereby you need not pay so much tax. That we'll see later. So I am paying tax in my country also, I am paying tax in your country also. So in between the two countries there will be agreements saying that, okay, you have paid tax in my country, in the other country you will get some benefit. What benefit? You can subtract that tax. That's why Modi goes to each and every country and makes good relationship with, keeps good relationship with all people. Why? Very important diplomatic relationship. They will sign agreements. So they'll say if a USA fellow is coming to India, he will have to pay tax in USA also because he is a USA citizen. He has to pay tax in India also. Double tax. Why will he pay double tax? So India and USA will have a treaty, means agreement, saying that if he has paid in India, please give the credit in USA. If he has paid money in USA, give credit to him in India. Then we will settle later. We will sit and discuss and settle the tax. Don't worry. That's the idea. They share the tax. That's called DTA. So for a resident, no, global income is everything is taxable. For whom? Resident. For non-resident, only Indian income is taxable. For non-resident, what is taxable? Only Indian income. Which means if you are a US citizen, not a resident in India, you are earning something in India, that only is taxable. If you are a US citizen earning something in US, will it be taxable in India? No. But if you are an Indian earning in India, earning in USA, earning in Australia, is it taxable everywhere? Yes. So write down this chart, guys. Important chart, residential status. We are slowly going to that second chapter. Little bit of second chapter we'll do and come back here. The reason is this concept we will see so many places. So whenever I am explaining those concepts, you will find it very, very easy. That's why. That's the only reason I am doing. So for everything I make notes and I already keep it ready so that you don't have to waste time waiting for me to write and all those things. You can copy. I will explain, then you can copy, guys. That's all. Very simple. You write down? Awesome. Let's continue. Cool. So now the thing is resident, non-resident. Now we need to understand, you see here, this dialogue we saw, no? Resident, ordinary resident, resident, not ordinary resident, who are they? We need to understand that. Because for some it is different, some it is different. Now I told you for resident, ordinary resident, global income is taxable. But for resident but not ordinary resident, something is taxable, something is not taxable. For non-resident though, very clear. What is taxable? Only Indian income is taxable. Now, if I have to understand the taxability, I just want to show you this and then you can copy. I'll just explain once again. Sources of money. This is the scope of income. Sources. This chart is important to explain that house property. Sources, resident, ordinary resident, resident, not ordinary resident, and non-resident. First one, income is received or deemed to be received in India, that is one part. Second one, income is accrued or arising in India or deemed to accrue or arise in India. Third one, income is accrued or arising or received outside India from a business controlled from India, profession set up in India. Then income accrued or received outside India. We will see all these things. So basically, in all these cases, we will have to understand what is the taxability. First of all, income received or deemed to be received in India. So first of all, if you receive any money in India for the work you have done in India, or if you have done the work in India, even if you have received outside India also, it's okay. It is deemed to be received in India. Why? Because the work is happening in India. You provided some consultancy services in India, but you asked that person to pay in your Dubai account. Still, is it received in India? Yes, because I have done the work in India. Second, income accrued or arising in India or deemed to accrue or arise in India. I have a house property in India. That is where the connection comes. I have a house property in India. Rent I am asking you to pay to my Singapore account every month. Now, is it received in India or received outside India actually? Actually received outside India. But Nirmala madam says, boss, the source, where is the source? In India. That's why it says it is income accrued or arising in India or deemed to accrue or arise in India. If you provide services in India, receive money outside, still it is what? Received in India. If there is a house property in India, but you are asking them to pay somewhere else, I don't care. I will take it to be what? In India only. And guys, beauty is, if you are a ROR, RNOR, NR, in all the cases it is taxable. What about other case? Your house property is outside India, but money you are receiving in India. Correct? That also is possible, no? One is what? My house property is in Bangalore. Money is going to Singapore. What is it? Taxable in India. For all three people. Non-resident fellow has one ancestral property in Madikeri, Coorg. Rent, they are asking him to transfer to his place in France. He is living in France. Indian only, but all his life he lived in, France. But he has an ancestral property in Coorg, Kodagu district. So somebody has come for rent, 1 lakh rupees is charging rent, and he is asking them to transfer to the account in France. Is it received in India or outside India? Actually outside India, but taxable in India. Why? Because the source is in India. Understanding? Now ulta. House is in Singapore. That fellow is the Indian living abroad. He is telling, please transfer money to my parents who are living in Bangalore. Also possible, no? So that house property, that chart, no, was all this example only. So before we go there, we have to understand this chart. That's why I came back here. That's the only reason. Okay. Now tell me, guys, what do you think? Ulta case. Asset is the asset in India? No. So it cannot be this. It cannot be income accrued or arising in India. Why? Because it's not arising in India. It's somewhere else. But amount I am receiving in India. But asset is outside India. What to do? So that comes another last one, you see. Income accrued or received outside India. Did I receive in India? No. may have received in India, but is the source in India? No. So a non-resident Indian who is living in London, he is rented out his London house there, maybe to one more Indian fellow there, and he's saying that rent, no, it don't transfer to me, boss. You do one thing, you ask somebody in India to transfer to my parents. At least let them get 1 lakh rupees per month, they'll be happy. Now the beauty is, who's the assessee? That fellow who's living abroad. Now if he is a resident, ordinary resident, global income is taxable. Is it taxable for him? Yes. If he is a RNOR, resident but not ordinary resident, then not taxable. Similarly, if he is a non-resident, then obviously not taxable in India. His house is in UK, he is getting the money, wherever the money he may be getting, it's okay, but it's belonging to UK, right? So he has to pay money, he has to pay tax there. Only if he happens to be a resident but ordinary resident, then he has to pay in India also and in UK also. Next question is, sir, who the hell is this ROR? That we'll discuss. But I'm just saying, for a resident, you see, first column ROR, global income taxable, tick, 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 all taxable. For RNOR, everything is taxable except the last one. So that same example, you are a person in UK, you have a house in UK, you gave it on rent in UK, but money you are receiving in India. I have to see, if you are a ROR, what is it? Global income taxable. If you are an RNOR, then that is not taxable. If you are a non-resident, obviously it is not taxable. One foreigner is giving money to, is taking on rent other foreigner there in a house outside India. Money is also received outside India. Why will it be taxed in India? Not taxable. Understood? So this is the thing. So one is what? Income received or deemed to be received in India. Means I did some service in India, I am receiving in India. Even if I received that money outside India, service was provided in India, so it's taxable. Second, income accrued or arising in India, deemed to accrue or arise in India. House is in India. Wherever you receive money, I don't care, everything is taxable. Because house is in India, source is in India. One more example, source is outside India. Source is outside India, that house is outside India, money is received in India. It's only taxable for ROR. For RNOR not taxable, NR not taxable in India. In the respective country, it will be taxable. There was one more set of people, very smart fellows. They were non-residents only, or maybe residents only. Who are they? We will see. Who is the resident, non-resident? We will see. They used to come to India, especially from people from Kerala. Very smart they are. Very smart fellows. They will actually stay in Abu Dhabi, UAE, Gulf countries, Dubai. Come to Kerala for a few months. Understand what the business is here. Set up one business in Kerala only. And then they will go back. It has happened. You know this, you've seen the coconut. Coconut, on coconut there is a covering. Coconut shell. Have you seen? So first you have to remove that coconut shell, then the coconut will be there. That coconut shell which has lot of husk, they use it in coir, mattress and all, they'll use that coir. Correct? The entire coconut, first there will be two layers. No? One is the hard layer. On top there will be one covering. No? Have you seen? Yes. So first they will remove that covering. It will all be like, like a wire. Coir it is called, COIR. In India you will see it thrown everywhere. After you eat one coconut nicely, you will throw that. Correct? That coconut only which you eat, tender coconut, once it becomes hard, everything will compress into a proper coconut. But that over covering will be there. No, you would have seen, they'll cut it off and throw that covering. One fellow from Kerala, he had gone abroad to see that there's a huge market for that. He saw that somewhere else. Here they throw it on the road. There they are selling it for some 10,000 rupees per kg. He neatly went there and understood. He came to Kerala, back to his hometown. He set up business in India only. What business? Collection of this coconut shells and exporting. None of the people knew what this fellow is doing. They are like laughing at him. Stupid fellow is collecting this. He is paying us 3,000 rupees for 1 kg. Good. Let's go sell it to him. Collected everything, exported. There he is charging 10,000, 15,000 per kg. He paid 2,000 rupees per kg. See the profit. So what he did was family members only called and he said, boss, you have this business here. Where is the business controlled? In India. But where is the money received? Outside. Basically everything is exported. There only in his account he will transfer money and live life happily. That is the third category. See, income accrued or arising or received where? Outside India. Coconut shell is sold outside India. But business is controlled from India. Profession is set up in India. Nirmala madam doesn't leave them also. If you are ROR, taxable. RNOR, taxable in India. Pay money. You are making money, no? Pay. Only if you are a non-resident, then it is not taxable. Residential status in Income Tax Act, does it depend on your citizenship or your actual period of stay? Period of stay. I don't care which country you are from. An Indian citizen also can become a non-resident in income tax if he doesn't stay in India for a particular period. Got it? Did you understand this logic, guys, all the three? So, for global income, ROR, global income is taxable. For RNOR, everything is taxable except wherever you are receiving the money outside India, source also outside India. Income accrued or received outside India, this one. And for non-resident, first two will be taxable, but this example of that coconut is not taxable. You know what Kerala fellows did? They used that non-resident thing superbly in such a way that they ensured they became non-residents. And they transferred the money to countries where there is no tax. In Dubai, there is no personal tax. Some 5% it is. They transferred all the money to, let's say, Dubai. In India, is it taxable? No. In Dubai, how much is taxable? 5%. Enjoying life. Because for residential status, it's not about your citizenship. For residential status, what is it? It is your number of days lived. So they planned their stay in such a way beautifully that they will always be called as non-residents. Where have they set up business? In India only. Sorry? No, it doesn't matter. But source, is it a source in India? No, I just collected raw materials. I have transferred there. I have made the processing there only. I am exporting. Is it a house? No. I collected raw material and exported it. But I controlled the business where? From India. This was a new kind of thing people were doing. People are saying, source, where is the source? I am collecting something and doing something else. I am processing there, I am doing something else. Who are you to tell? Correct? So that will come here. People start exporting bananas also and going there and making banana chips. So is there any source? I am taking bananas from here and going, that's all. What is there in that? Understood? So that is why this thing. So for non-resident alone, not taxable. So people were very smart. They were in India for that many number of days only so that they will remain as non-residents. And all their relatives they gathered, you control business in India, you send it to me there. There is sold. In Dubai taxation is 5%. Here it is some 30%. Which is better? There. Here he bought that husk for coir for 2,000, selling at 15,000. Super money, no? Yes. Understood this logic? This is the entire chart of scope of total income. Please copy, guys. Sir, you still haven't told me who is resident. We'll tell. You should understand the structure. Now we will do who is ROR, RNOR, all that we will do. Copy. First two you copy, then. Basically, guys, this is a structure. I'll just show you. How many rows? 1, 2, 3, 5 rows. 5 rows, 4 columns. 5 rows and 4 columns. I'll show you the 3 rows first. First row is only the source and all that. Income accrued or deemed to be accrued or received in India. Income accrued or rising in India or deemed to accrue or rise in India. Written down? Next two. Written down first two, done guys, all of you? Sure? Next two. Third one is the Kerala thing. Actually it happened. It's happening regularly. Kerala fellows are very smart. Super smart there in all these things. Alright guys, yes, so we were discussing the concept of resident. So let's continue. Now moving on to the next part, resident. Now I told you resident means two types are there, resident ordinary resident, resident not ordinary resident. So what is it? Let's see. This is for the individuals. What about the companies? If you take companies into consideration, other assessees. Other assessee will be AOP, BOI, company, firm, LLP, whatever these people. Indian income, if you are a resident, taxable. If you are non-resident, taxable. Indian income. Foreign income, for a resident, it's anyway taxable. For a non-resident, foreign income is not taxable. For company, you should be incorporated in India. That's all. If you are incorporated in India, or if the control is in India, then it is called as a resident. Indian income fully taxable, foreign income also fully taxable for whom? Resident. Non-resident, Indian income obviously taxable, foreign income not taxable. So that is copied down. Taxability of income of other assessees. Taxability of income for other assessees. After this, we'll immediately dive into the other area of taxability, that is who is resident, ordinary resident, who is resident, not ordinary resident. Immediately we'll do this after you write this down. This is taxability of other. Who are other assessees guys? AOP, BOI, LLP, firm, but then company, all these. Cool guys, now moving on guys, let's see. I spoke to you now about what resident, non-resident, who is this resident, who is this non-resident. Let's see now. Come. See, if you want to be called as a resident, you have to follow any one basic condition. I repeat, if you want to be called as resident, there are two basic conditions. You need to follow at least one basic condition. Basic condition number one, you should have stayed in India for minimum 182 days in the previous year. What is my previous year? 24-25. In 24-25, I should have stayed for at least how many days? 182 days. This is condition number one. If this condition you cannot fulfill, then there is one more condition, condition number two. In condition number two, let's say this year, in previous year 24-25, you went abroad for some time. Just because you went abroad for some time, let's say you went abroad for, out of 365 days, you went abroad for 300 days, assume. Just because you went abroad for 300 days, immediately will you be called as non-resident? No. Because you should have stayed in India for how many days? 182 days. That condition you can never, it's never possible. Let's say this year you got, you got into the Indian cricket team and you traveled 300 days, you are outside India. Does it make you a non-resident automatically? No. So I need to give some benefit, no? So second condition would obviously be not 182 days. Second condition says you should be in India for at least how many days? 60 days in the previous year. Be in India for how many days? 60 days in the previous year. And how much? Overall 365 days in the last 4 preceding previous years. 24-25, 60 days. But you got into the Indian team, assume. But what were you doing last 4 years? Sir, I was in India only. Which years? 2021, 21-22, 22-23, 23-24. Did you stay in India? Yes, sir. How many days? All put together. 365 days. In 4 years, you should have stayed 365 days. Not every year. Overall 365 days. Means in 4 years, what is 365 days? 1 year. They are telling at least 1 year out of 4 years you should have stayed in India. Means overall, all years, all days counted. Understood? So first condition is what? 182 days in the previous year. Should I see anything before? No. If I cannot fulfill that condition, second condition is what? 60 days in the previous year, but I should have stayed for 365 days in the 4 years preceding the previous year. What are the 4 years? 2021, 21-22, 22-23, 23-24. Tell me guys, how many conditions should I follow? 1 or 2? 1. Minimum 1. If I follow both, okay. But if I follow 1 also, yes. That's called basic condition. If I follow one basic condition, I will be called as resident. If I don't follow one also, non-resident. That's all simple. So then what is this ROR, RNOR? That's the next discussion. Now I am only talking about who is a resident, who is a R, who is a NR. Who is a R? Who follows one or both conditions. Who is a NR? Who doesn't follow one also. Who doesn't follow one also. Right? Think about it, guys. Foreign commentators, no, they'll be in India. Almost every year, 100 days, they'll be in India, assume. They'll be covering the commentators. They'll be covering IPL. They'll be covering some match going on in India. Are they Indian citizens or foreign citizens? Foreign citizens. Tell me, would they stay 182 days in India? No. Every year 100. Since last 5 years I am coming, every year 90 days I am staying. Think about it. Will he be a non-resident or resident? Resident. Why? Did he stay for 60 days in 24-25? Yes. Last 4 years, did he stay for 365 days? Yes. Correct? Understood? 95, 100 days is staying every year. 3 months, these people will come and stay. No, IPL only is 1.5, 2 months. Then some other India tour of something will be going on. They'll be here only, foreign commentators. So foreign commentators, even though they are foreign citizens, will there be resident or non-resident? Resident. But next question is, will they be ROR or RNOR? That we have to see. That is the second thing. So now we are only talking about R and NR. You will be a R if you follow any one condition. You will be a NR if you can't follow one also. Everyone understood? Copy. Understood, guys? Simple. Very simple. They are very easy, guys. Very easy stuff. Copy this. I'll give you time. For you to be called as resident, you have to follow how many conditions? One out of the two basic conditions only. Stay in India 182 days in the previous year, or how much? 60 days in the previous year and 365 days in the last 4 preceding years. 2021, 21, 22, 22, 23, 23, 24. Done? Simple. Now, a non-resident is very easy. If you don't follow both the conditions, you are a non-resident. There ends the matter. But I follow one condition now. I am a resident. But am I a resident, ordinary resident, or resident, not ordinary resident? That depends on additional conditions. There are 2 additional conditions. But before that, there are exceptions to this rule, guys. This 60 days need not be read as 60 days. There are 3 exceptions. Means what? This, see, I am writing this as A1, that is, and this is A2. Now I am going to talk to you about A2, which is exception to A2. Means where this 60 days should not be read as 60 days. There are 3 exceptions which I am going to show you now. Yes, these are the 3 exceptions. What are these 3 exceptions? Where A2 should not be read as 60 days. Means what? In these 3 cases, no, A2 will not apply only. Or they are saying A2 instead of 60, you should read it as some other days. What are those days? I'll explain. First of all, if you are an Indian citizen, if you have come for employment, gone for employment outside India, that is including business, profession, etc., then they are saying, guys, in A2, 60 to be read as 182. Means, is there any difference between A1 and A2? No. A1 also talks about 182. A2 also talks about 182. Basically, they are trying to tell, if you are an Indian citizen, if you are going abroad for employment for the first time, A2 will not apply. Instead of telling A2 will not apply, they are telling A2 should be read as, instead of 60, you read it as 182. If I make 60 182, what's the difference between A1 and A2? Is there any difference? No. So first exception is Indian citizen going outside India for employment, including business or profession. A2, 60 will be read as 182. Stay in India must be greater than or equal to 182 days. Next one, Indian citizen, part of the crew of an Indian ship. One more is what? You are an Indian citizen. You are part of the crew of an Indian ship. Let's say there is something called Cordelia Cruise. It's a cruise company. Almost 400, 300, 400 employees are living in that cruise. They will help. It's a huge cruise. Almost 10, 15,000 people can come on the cruise. Huge. They can enjoy that entire cruise. It will go from one place to another place. They have trips to Sri Lanka and other countries, Singapore and all. They have trips in the sea. You are an employee of that ship. In that case, you are an Indian citizen, employee of that particular ship. And there also they are telling in A2, 60 to be read as 182. So for two types of people, 60 days will be read as 182 days. Who are the two types of people? One is normal person like you. After becoming a CA, you are going for employment. So the year you are going for employment, 60 will be read as 182. On the second case, you are part of the ship, cruise ship, which is taking passengers from India to abroad and again bringing them back to India. So for there also, 60 will be read as 182 days. So if you stay in India for 182 days, then you will be an Indian. Otherwise, you will be a non-resident. Because there will be some additional benefit if you are a non-resident. Okay. Then there is one more, third. Third is what? Third is one more case. This is interesting. You are an Indian citizen. This is that Kerala fellow. You are an Indian, example I gave you, no, Kerala guy. You are an Indian citizen or a person of Indian origin. What is person of Indian origin? You may have lived abroad, but your parents would have been in India, or your parents would have migrated from India. Your grandparents would have migrated from India. That is called as person of Indian origin. And you are a non-resident. Kerala guy is a non-resident, but you have come to India on a visit. Now, stay in India. You should stay in India for 180 days in the previous year. That's okay. But in A2, guys, what? 60 to be read as 120. 60 to be read as, 182. We will change that. As of now, 60 to be read as 182. So in three cases, 60 will be read as 182. First one, you are an Indian going abroad for employment. Second one, you are an Indian going abroad through a ship, but you are part of the ship actually. You are a crew. Crew member means employee of the ship. Third one, other ulta. You are a non-resident. You are coming to India on a visit. There 60 will be treated as what? 182 days. Is it clear? These are the three exceptions. But this 182 days has been amended. What is the amendment? Later we'll see. Don't write that. Later we'll see. 182 is amended again. Okay, we will see. So you will be a non-resident if you stay in India for only 182 days, not for 60 days, just for 182 days. So that Kerala guy, if he comes for 100 days, 100 days, 100 days, 100 days every year, will he be a resident or non-resident? Still non-resident. Why? 182 days you are not living in India. Understood? Correct. What is the rule? You should live in India in the previous year for 182 days. If a Kerala guy, non-resident, comes to India for and stays in India for, let's say, 150 days, 150 days, 150 days, 150 days, will you be called as a resident? No. Why? Did you stay in India for more than 180 days in the previous year? No. What is the second condition? What is the second condition? A2. 60 should be read as 182. 60 should be read as 182. Did you stay in India for last 4 years for more than 365 days? Yes. But did you stay in the previous year for 182 days? No. So will you be a resident or non-resident? Non-resident. What is the second condition? A2. You should stay in India for 60 days in the previous year plus last 4 years 365 days. I am a Kerala guy who is coming from Dubai, living there all my life, coming here, visit to India. Every year I visit 150 days, 150 days, 150 days in India. So A1 condition fulfilled or not? No. A2 condition, have I stayed for last 4 years before 24, 25? Last 4 years did I stay for more than 365 days? Yes. 150, 150, 150, 150 is how many days? 600 days I have stayed. But 24, 25 did I stay for 182 days? No. So these are all benefits given. Are you resident or non-resident? Non-resident. Understood? So these are the three what? Exceptions. One by one. Everyone understood, guys? So in resident, 2 conditions. Should I follow both or one? One. And in second condition, there is a relaxation. 182 has been made 60. But that 60 relaxation is removed for 3 type of people. One, employee going abroad for employment. Indian citizen going abroad for employment. Second one, Indian citizen but is a part of the ship. For them also. Third one, foreigner, not foreigner, non-resident, coming to India for a visit. There also 60 is to be read as 182. Is this clear, guys? All of you? Yes. Copy. Give you time. Copy. 3 exceptions, one by one. First 2 exceptions you write first here. A1 exceptions where A1 should not be read as 60 days. Exceptions, 3 exceptions where A2, sorry, 3 exceptions where A2 should not be read as 60 days. In that 1 and 2 you write down, then 3 I will give it to you, show it to you. Indian citizen, employment outside India, A2 should be read as 60, should be read as 182, or stay more than 182 days. Indian citizen, part of the crew of Indian ship, A2, 60 to be read as 182. So when 60 is to be read as 182, then obviously A1 only will remain. What is A1? Stay in India for 182 days in the previous year. A2 is useless. It is immaterial. Is this done? Now third condition, guys, third exception, sorry, third exception, yes. Indian citizen slash person of Indian origin who is a non-resident is coming to India on a visit. Stay in India for greater than 182 days. Greater than or equal to, sorry. And in A2, 60 to be read as 182. Got it? Very simple, guys. We still don't know who is ROR or NOR. Now I told you this part has been amended. After I explain the logic, you can copy the amendment later. Leave it now. Right now, we do not know who is ROR or NOR. So as I told you already, resident, non-resident. For a resident, at least one basic condition has to be followed, either A1 or A2. And in case of those three fellows, A2 is anyway not counted. Then it will only be A1. For non-resident, both basic conditions are not followed. But when will I be called as ROR or NOR? If we will be called ROR if both the additional conditions are satisfied. Both. You will be called as ROR when both additional conditions are satisfied. What are the additional conditions? We haven't yet discussed. And for resident but not ordinary resident, only one or none. As simple. Either you follow one or both not followed. In simple words, if you follow both, you will be called as ROR. If you follow only one or you follow 0, then you will be called as RNOR. That's all. Right? So copy this, simple. And then we will discuss finally additional conditions. After you write this, finally we will follow additional conditions, we will study. You should know what is ROR, RNOR. Guys, everyone understanding? Yes or no? Yes? Yeah. So, individual, resident, no. Any doubt means please let me know. To adjust to enter, you will take 3-4 days, guys, because it's different methodology. You will have to write many things. I'll explain, then show you, then I'll make you write, I'll dictate, I'll write, everything all mixed. You will take some time to adjust, but don't worry. Resident, at least one basic condition to be followed, A1 or A2. Non-resident, both conditions not followed. Non-resident, both basic conditions not followed. Resident but ordinary resident, both additional conditions to be satisfied. Done? Right, no problem. Write down. So it's very simple. If you are a resident, you follow one basic condition. Non-resident, don't follow one also. And after you become a resident, if you follow both additional conditions, ROR. If you cannot follow both, or if you can only follow one, then you are a RNOR. Done? Moving on, guys. Now coming to additional conditions. There are two additional conditions. Both you have to follow, no? Yes. See, these are the two additional conditions. You should be a resident in India for 2 previous years or more in the last 10 previous years. You should be a resident for 2 out of 10 previous years. And it's not or, and you should stay in India for 730 days or more in the last 7 previous years. I repeat, you should be a resident in India for 2 previous years or more in the last 10 previous years, and you should stay in India for 730 days or more in the last 7 previous years. It's all stupid conditions, but we need to follow. No choice. Got it? What are the two additional conditions? 2 out of 10 resident. One more, 730 days in 7 years. Both should be followed. If both are followed, you are a resident, ordinary resident. If you don't follow both, or if you follow only one resident, not ordinary resident. Additional condition will come only after basic condition is fulfilled. Otherwise, you don't even come near additional condition. Fair enough? Copy. These are all given in the law, guys. There is no logic for this. They have just given that out of 10, at least 2 if you are there, then you are called ordinary resident. But for that, you should have already fulfilled that last year 182 days criteria. Residential status can change every year in income tax, obviously. Because 1 year I can be 180 days, 1 more year 60 days, and that 60 days will be 180 days if I am going out for employment. So it can keep changing every year. Resident in India for 2 previous years or more in the last 10 previous years, and stay in India for 730 days or more in the last 7 previous years. Now what happened, you see, interesting point. You see here, this fellow, no, I told you the example of the Kerala guy who came and did that coconut thing. As per the third exception in whatever you have read, A2, that will fit to that Kerala guy. He is a non-resident, is an Indian citizen or a person of Indian origin, but is a non-resident. Why? He is staying always abroad. He comes on a visit to India. And then what did I say? If he stays in India, earlier it used to be 60 days. Now what have they made? 182 days. Which means this Kerala guy, what he was doing, no? He was staying in India for almost 180 days. He was staying every year, guys. 6 months he was staying in India to set up the full business in India. Every year coming and checking how the business, how procurement, how to do everything he was doing. 180 days he was staying. Planning and staying actually. First condition, is it fulfilled? No. Second basic condition, even though he may have stayed for 365 plus days in the last 4 years, even though he may have stayed for 365 days in the last 4 years, here, has he stayed for 182 days? No. So is he a resident or non-resident? And see the magic here, guys. If you are a non-resident, no. If you do that business in India and then export the stuff outside India, are you a resident, non-resident? Is it taxable or not? No, deadly, because you are a non-resident. If you were RNOR, would it be taxable? Yes. But you are a non-resident, so is it taxable or not? No. Escaping tax. Escaping tax. So, what do you think? Anything, all these three income, except, are you escaping tax or not? Yes. All people were planning this only. 180 days, 180 days, 180 days, always planning this. What to do? Cheating, no? So Nirmala madam decided to change that third one. 60 days was read as 182 days. They were planning like this, 180, 180, 180, they were staying. I had to change. So, in order to ensure these fellows don't cheat, I have to convert them to non-resident to what? RNOR. They can never be ROR actually, because they will not follow both additional conditions ever. They are always abroad. I should convert them to what? RNOR. If I want to convert them to RNOR, this 180 days have to reduce, 182 days I should reduce or increase? Reduce or increase? Reduce. I cannot make it 60 days because it is a exception. Are you understanding, guys? Exception, what is the exception? 60 will be read as 182. Now seeing that 182, you are playing around with me. 180, 180, 180, exactly you are staying like that. They were doing actually. That's why this change also came because of that. Nirmala madam observed that many residents who are going abroad, or many non-residents now, they have become non-residents, were coming back to India to set up business in India, staying in India for 6 months every year. 6 months here, 6 months there, 6 months here, 6 months there. And beautifully managing the business in India, selling it outside India, there also tax-free, here also tax-free. When will there be tax? When I convert them from NR to RNOR, correct? NR to RNOR means it will be taxed. So that 182 days should be reduced or increased? Reduced. So Nirmala madam in the year 2020 amended this. 60 was read as 182, no? She said, no, 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 60 will now be read as 120 days. 60 will be read as what? 120 days. So now these people are caught. First condition, have you fulfilled 182 days in the previous year? No. Second condition, A2, you should stay in India for minimum 120 days in the previous year. Have you stayed in India for 120 days? Yes. And the last 4 years you should have stayed in India for 365 days. Have you stayed? Yes. So you will be a resident. And I will automatically, I don't have to see additional condition also. Nirmala madam said, I'll automatically make you RNOR. Bringing these people under the tax net. Bringing these people under the tax net. Those who are not paying tax, now they have to pay tax. Did you understand? So what she has done, A3, that A2 third exception, 182 days was further reduced to 120. So 60 became 182. Then 182 was scratched, again brought back to 120 days. Understood? 120 days. So here, no, in this chart, here you write this. Point number 5, amended in Finance Act 2020. Yes, that I'll tell you. You just copy down, I'll tell you that, don't worry. 182 days to be read as 120 days. If NTI in India is greater than 115, I will explain that, don't worry. You just write down 182 days to be read as 120 days. One 180 days should be read as 120 days. But guys, then they asked Nirmala madam, I am just earning in India. NTI is what? Net taxable income in India. NTI is net total income or net taxable income. Both are same. Net total income or net taxable income where? In India. So they asked here, these income, no, these three incomes. Income number 1, 2 and 3. Don't you think so? 1, 2 and 3 are in India? Yes. Income number 1, 2 and 3. If that entire amount is just less than 15 lakh, will old provisions apply or 120 days apply? Old provisions. They are trying to tell that let me do it for only big shots. Who are the big shots? Who are earning from this plus this. All together they are earning more than 15 lakh rupees. Guys, export business is huge. They'll earn crores. If all the three put together you are earning some 1000 rupees, 10,000 rupees, 1 lakh rupees, will you make it 120 days? No. Then the old provisions only will continue. What is the old provision? 60 will be read as 182 days. Exception will continue. So this is only for those people who are cheating. And why more than 15 lakhs? Because 15 lakhs is the higher slab limit, no? Up to 15 lakhs if you are earning, okay, leave it, don't worry, no problem. So government is not bothered about small amounts of 15 lakhs. Government is bothered about big amounts, more than 15 lakh. That's why they said that amendment will apply only if your NTI, that is net taxable income or net total income in India, that is 1 plus 2 plus 3 is more than 15 lakhs. I will not apply it to everybody. I will only apply it to those whose income is more than how much? 15 lakh rupees. Understood? Yes. So that is why you have written down NTI is more. So to summarize, my dear friends, to summarize, I'll summarize this and you can copy. See, you'll understand. Amendment in Finance Act 2020, especially that Kerala guy, Indian citizen or a person of Indian origin who comes on a visit to India, if his net taxable income or net total income is less than 15 lakh. What is this? Other than income from foreign source. Means what? Indian income. 1, 2, 3, that Indian income. If Indian income is less than 15 lakh, then no change. A2 should be read as 182 days only instead of 60 days. No change in the exception. Is there any change? No. But if NTI is more than 15 lakh, A2 is modified. 60 days in previous year plus 365 days in last 4 preceding year. 60 to be read as what? 120. And should I see the additional conditions and all that? No. Government says you are deemed automatically to be what? RNOR. No need to check any additional conditions. No need to check any additional conditions. Did you understand? Yes or no? Yes. If your net taxable income or net total income other than what income? Indian income. Foreign income. Basically Indian income is more than 15 lakh, then 60 to be read as 120. If your NTI is less than 15 lakh, 60 to be read as 182. Everyone got it? Yes or no? This is an amendment. This is the adjustment. Okay, so it makes sense. All three incomes put together more than 15 lakh. Okay, for those people what I should do? 60 will be 120. If the NTI is less than 15 lakh, what I should do? 60 will be 182. No change in the exception. Everybody understood, guys? Yes or no? Yes. It's an open challenge. It's the most simplified way of understanding this. You check anybody, no one has simplified it like this, because I'm not boasting. What I'm trying to tell is my job is to simplify. It should make it as easy as possible. If you read the textbook or the Bare Act, no, you read the institute material, you will go mad. This residential status you will not understand only. Something and all they have given. So you don't, you leave it. This is the most simplified way, correct way with logic. Because these Kerala fellows and many people were doing this, guys. And in the memorandum explaining the finance bill, they have clearly mentioned the intention why they are changing. 60 became what? 120. Nirmala madam Narayan Murthy did not like this. He said, what are you doing 120 and all this? Let it be 180 only. No. Why are you changing so many things? He told. See Narayan Murthy. Let NRI stay for 182 only instead of 120, he told. Anyway, how much money you are making because of that? Kerala fellow, let him come and enjoy. No, what is your problem? Is what he actually told. He didn't like this point. He said, it shouldn't be 180, it should be 200, make it 240 days, don't make it less, is what he's saying. Because all his relatives are NRIs only, no? Correct. Daughter is NRI, son-in-law is NRI, son-in-law is not even NRI, son-in-law is a person of Indian origin is. See, that's why. Very simple. But his logic is everyone is coming. This, what you say is daughter-in-law, daughter, everyone is NRI. Right? That's why he's bothered. He's telling why 180, make it 200 days. It's good only for the country. His logic is also sound. He's telling people from abroad, NRI and all, if they are coming to India, let them come, no? Let them stay for 240 days. Let them develop the country. What is your problem? Let them make money also. What is your issue? That is his logic. But Nirmala auntie, will she listen? Poda, she'll tell. You do whatever. You work 70 hours a week. No problem. Correct? Yeah, I'll do what I want. Has she changed it? No. But I just want to show you what others are reacting. They are not happy with this. This was taken in 23, old article, but I'm just saying. They are not happy with this. But is it continuing or deleted? Continuing. Right? Copy. You should read tax in the correct way. I'll give you time to copy, guys. Copy. Amendment in Finance Act, COVID amendment. This is Finance Act 2020 amendment. Copy. Do you understand, guys? Simple. Everyone copied? You are still copying? Yeah, copy. No problem. Write down. Which one you want? Left side you have copied? This one? No? Okay, I'll zoom in a little so that will be clearly you can see. $360. Sorry, 60 days is now what? 120. It's all logical, guys. So if it is 60 to 120, 120 to 182, more than 182, if I do like that, see this will come. See, if person of Indian origin comes to India and his net taxable income in India is more than 15 lakh, if your stay is less than 120 days, automatically is a non-resident, no doubt about it. But if his stay is more than 120 but less than 182, then stay in India is greater than or equal to 365 days in the last 4 years, then he will be a resident, not ordinary resident, only if one is yes. Why? Because both the conditions should be satisfied. No, what is it? 182 days in the 180 will become 120 days, plus he should stay in India for 365 days out of 4 years in the preceding previous years. And if you have stayed in India for more than 182 days, then is a resident, and I have to check the 2 additional conditions. This is the final summary of the residential status. Did you understand? Yes or no? Final summary. Less than 120 days, non-resident. 120 to 180 days is that exception. I will be deemed to be an RNOR, deemed RNOR, assumed. If it is more than 180 days, resident. Yes, copy, guys, done. That's all, very simple. So now you have super clarity in residential status. Whenever I tell ROR, RNOR, you will understand now. Copy, no problem. Take your time. What is the doubt? Tell me. Which one? Which line? PIO. PIO is person of Indian origin. Person of Indian origin comes to India and is net taxable income or net total income. That is which one? Other than foreign income, obviously. Other than foreign income. It's more than 15 lakh rupees. Other than foreign income. So this is the full summary. less than 120 days in previous year, more than 120, less than 180 days, and all those things. My one question to you is, if I am leaving the country today, when in India I have to do, no, if I am going outside India today, will I count today in India or will I count today as outside India? Or should I see my flight timings and all? That's what I am asking. Middle of the day I left abroad, so I have to count the number of days in India, no? So today I will count or not? So today I am resident, today's day, let's say 20th, today is 20th. Today's 20th I will count as in India or outside India? What do you think? In India or outside India? The day of going and the day of coming. Hours should you say? That will be very dangerous, right? So that so much complicated, it's not there honestly. Otherwise it will be difficult to do. It's very simple, 12 to 12, midnight to midnight. 20th today, whether I go at 1 a.m., 12, 12:30, 2 p.m., 5 p.m., whatever it is, you either take it as in India or you take it as today only outside India. Similarly, when your day you are coming back, whichever day you are coming back, whichever time you are coming back, let's say at 11:59 p.m. you landed in India. So that full day you will take it as in India or outside India. What do you think? What do you think, guys? Full day, what you will take? What do you think? So guys, the day you are leaving, no, and the day you are coming, both will be considered as in India. General rule, both will be considered as in India. The day you are going and the day you are coming, both will be taken as in India. Exception is the ship. In that A2, one ship is enough, crew of Indian ship, they are going abroad. For them, what do you say? How will you do that? The day you pass territorial waters or what? There will be a doubt, no? For them, what will you do? Like today, I am a member of an Indian ship, I will get on to the ship today. I am in Chennai. Tomorrow, I am in Kochi. Then 2 days later, I am in Sri Lanka. Then I go to Singapore. Then I again come back to Chennai. Then again I have to go to Sri Lanka for something. And again I will come back. Overall, some 1.5 months I was in the sea. In some places I was within the 12 nautical miles. Within 200 nautical miles I was within the exclusive economic zone, and everything was there. What will I count? For ship it is different. For ship, the captain of the ship will write the name that you come inside one day, and the day you go he will write the name in one certificate called CDC, Continuous Discharge Certificate. Whatever days you are there in the ship, which is written in the CDC, in time and out time, in date and out date, all those dates you are deemed to be outside India best. 20th you are actually in Chennai, he has written it as the day you checked in, 20th March. 1 month you stayed. Next month 20th you are actually back in Chennai. Normal rule, what did I say? 20th and 20th both to be counted as in India, but for ship, outside India. Got it? So write down, guys, write down this point. The day of traveling outside India, the day of traveling outside India, the day of traveling outside India, and the day an assessee comes to India. And the day he comes to India. Will be counted, will be counted in the number of days, will be counted in the number of days, will be counted in the number of days resident in India, will be counted in the number of days resident in India. will be counted in the number of days resident in India. Full stop. The only exception is ship. The only exception is if the assessee, sorry, write down, the only exception is if the assessee, is part of an Indian crew in a ship. Is part of the Indian crew. Part of the Indian crew in an Indian ship. Part of an Indian crew in an Indian ship. Here, part of an Indian crew in an Indian ship. Here, the captain. Here, the captain of the ship. Here, the captain of the ship would release a continuous discharge certificate, CDC. Continuous discharge certificate. Continuous discharge certificate. Giving the check-in date and check-out date. Giving the check-in date and check-out date. Check-in date and check-out date. Right? On these dates, even though the ship is anchored in India, obviously, in check-in date or check-out date, both it will be anchored in India only. On these dates, even though the ship is anchored in India, it is deemed that assessee is outside India. It is deemed that assessee is outside India. It is deemed what? That assessee is outside India. Assessee is outside India. With this knowledge, come back to house property. I'll ask the same question. You have a house outside India. Now you will understand superbly. You have a house outside India. Now tell me, guys. House is outside India. Residential status, resident, non-resident. In residential state again, ROR, RNOR. Guys, wherever the house is, global income is taxable for ROR. Yes or no? So ROR, global income is taxed in India. For RNOR and NR, it's the same. If the rent is not received in India, then it is not taxable. Because it's not at all received in India, it's received outside India, not taxable. But if the rent is received in India, taxable, because it is income deemed to accrue or arise in India. Correct? We already discussed the same thing. Same thing is here. Now you understood this? Yes. If I had not done all those things, you'll be like, what is this? Now you know. Right? So this is the concept of which one? SSE, house property is outside India. Copy, guys. House property outside India. Coming back to house property now. For RNOR and non-resident, same treatment. For RNOR and non-resident, same treatment. Already discussed, revision. That's all. Non-resident, rent not received in India, not taxable. Rent received in India will be deemed to accrue or rise in India, taxable. I mean, it is in anything in India taxable for the non-resident. And RNOR is similar to non-resident only. Yes. Taxed in India. All global income is always taxed in India, no? You remember first column, tick, 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 tick. All global income taxed in India. For ROR. For RNOR and NR, rent is not received in India, not taxable. Rent received in India, taxable. Today's target is house property. If it is over, you can leave. You can leave it before the time also, no problem. I don't want to simply cram everything. This chapter is over, that's it. I don't want to start anything new. Guys, if I have more than 2 house properties, then remaining will be deemed let out property, right? Yes. So obviously, if I have, I'll just explain. If I have 3, so but what should I take? Third one means, which is the third one? Is it construction or it's my choice? Yes, that Nirmala auntie says I'll tax, but your choice. Thankfully, she has given the choice. It's not like first built will be considered as SOP. No. You have more than 2 SOP. You have one house in Malleshwaram, one house in Jayanagar, one house in Whitefield. Correct? In Malleshwaram, you and your wife staying. Jayanagar, parents are staying. In Whitefield, you and other wife staying. Right? Both are fully different areas, so nobody will know anything. Right? Yes. In that case, I have to do what? 2 SOP, 1 LOP. Whose choice? My choice. So what I should do in the problem? I should have 3 options. Option number 1 is what? 1 and 2 SOP, 3 LOP. Option 2, 1 and 3 SOP, 2 LOP. Anything. Option 3, other 2 SOP, 1 LOP. So I need to do it and then decide whichever is the best. Yes, obviously wherever I have to pay less tax, that is the best option. That's why I have to do all the 3 options. In all the 3 options SOP, all the 3 options LOP I have to do first calculation. And this is an important one. We will solve a question. In this question, we have to make first calculation assuming all 3 are SOP. Second one, all 3 LOP. Then we will do this combination 1 and 2 SOP, third LOP, because we have the figures already. All 3 SOP, all 3 LOP. 1 and 2 SOP, third LOP. 1 and 3 SOP, second LOP, like that. If all the 6 figures we get, then it is mix and match. And then whichever it is less tax, obviously I have to choose that. Got it? This is my choice, right? So write this down. This is which one? We'll do the sum later, but yes. Concept number 21. If assessee owns more than 2 SOP, this is important. They ask this in the exam. House property is very easy, guys. Easiest chapter. Salary is the easiest actually. SOP Malleshwaram, SOP Jayanagar, SOP Whitefield. 2 SOP, 1 DLOP. Deemed it is, deemed it out. So I have to do option number 1 and 2. 3 will be LOP. Option number 1 and 3. 2 will be LOP. Anything, any options I have to do. Finally, I will get my answer. Clear? Obviously, when we solve a problem, you will understand it better. We'll solve right now. SC owns more than 2 SOP, then this is the thing. So come to the question, guys. So in all concepts illustration, see this. Question number 34. These all concepts generally they keep asking here and there. Mr. Arav owns 3 houses and all are used for own residence. The relevant details of the previous year are as follows. Municipal value, fair rent, standard rent, municipal taxes, insurance premium, interest on loan. Tell me in this what expense you will not take. Insurance premium. Why? It will come part of standard deduction. Insurance premium you will not take, obviously. Interest on loan borrowed on 31/3/2000. What are the conditions of loan? Loan should be taken on or after 1/4/99. Is it 2000 is after 99? Yes, so no problem. It should be used only for construction. So obviously I am assuming it is used for construction. House should be completed within 5 years. That also I will assume. You are required to advise him about treating any of the 2 properties as self-occupied and the other one as deemed LOP in a manner beneficial to him. So I will tell you the structure. Will you please try? Right now, then I will tell you the answer. I will tell you the structure. First structure, what you should do? Computation of the best option. In the best option, okay, that we will do together. Don't worry. Do this, guys. Particulars considering all 3 are LOP. Then considering all 3 are SOP. First is computation assuming all 3 are LOP, that I will come to know. If all 3 are SOP, guys, what will be the answer? It will only be interest portion, yes or no? It will only be interest portion. If all 3 are LOP, that is 1. All 3 are SOP, that will only be interest portion because everything is nil, nil, nil. So here only I can tell, if all 3 are SOP, what will be the income from house property? Nil. Loss from house property 18,000, loss from house property 14,000. So calculation number 1 is what? Assuming all 3 are SOP. My only thing is loss from house property nil, 18,000, 14,000. Everyone understood this? Yes. If all 3 are LOP, then you should do that full structure. Column number 1 particulars, column 2, column 3, column 4, house 1, house 2, house 3, then same logic, municipal value or fair value, whichever is less, all those things. Will you try this? And then third one is what? Whichever is the best option. That will do. Just do this calculation, take 5 minutes, guys. Come on, all of you try, please. Yes, when LOP there is no actual rent, so what we should take? Expected rent only is actual rent. Expected rent only is GAV. So what will be the calculation? Municipal value or fair rent, whichever is high. That rent or standard rent, whichever is less. That will be expected rent. Expected rent itself will be GAV. Because actual rent will be not applicable, not applicable, not applicable. GAV less municipal taxes paid, NAV less standard deduction, less interest on loan. Then that will become income from house property, assuming all three are LOP. Guys, are you understanding what to solve? Yeah, first calculation is assuming all three are SOP. That is very easy. Only loss, directly loss only, no? How much? 0, 18 and 14. Then LOP you solve. Then it should be combination. This is the easiest way. Which is the best option? What, first to LOP? House 1, house 2 LOP. Okay, you just check the answers first. Did you get it first of all? See, first of all, tell me. You did like this only, no? House 1, house 2, house 3. Municipal value, fair rent, whichever is higher. Standard rent, expect whichever is lower. Actual rent, nil, nil, nil. Gross annual value 30, 42, 38. Ultimately, how much you got? Did you get this, guys? 16,800, 5,800, 7,350. Everyone got it? Yes. Now I have to do, I mean, anyway, the SOP I already know. That is anyway this thing only. Now this I have to do, guys. Option number 1. House 1 and 2 SOP. In whichever way you want, you can do. House 3 DLOP. House 2 and 3 SOP. House 1 DLOP. House 1 and 3 SOP. House 2 DLOP. Correct? So if you see, house 1 nil. They have only given in the question nil. House 2 and 3 will be, house 3 will be DLOP. So here whatever I have done house 3, that figure I have to take 7350. 7350 will come here. So here this is DLOP. Here house 1 is DLOP. Here house 2 is DLOP. This will be interest figure 0, 18,000 minus 18 minus 14, 0 and minus 14. Did you understand? Which is better? Option number 2 is better. Why? House 2 and 3 is SOP. House 1 is DLOP. Why is that better? Loss is higher. More the loss, better I can claim. Correct? So you should present it like this. First you do all 3 SOP, direct answer minus. All 3 LOP, that you will get the answer. Everyone got this first of all, 16,800, 5,000. Then you plot this in these options given. Whatever I put yellow is where I have plotted the LOP. SOP already given directly, so no problem. So option 1, option 2, option 3. You should present it like this. So you can copy down. Computation of the best option or combination. You have to present it like the presentation also matters, guys. Present it like this. House 1 nil, house 2 minus 18,000. Got it, guys? Writing? Right, no problem. Option 1, option 2, option 3. Everybody understood? Done? So what is the answer finally? Option 2. In option 2, very simple. The loss is more, 15,200. So what will I take that? I will take that as the answer. Question 33. 2-3 questions and done. 1 or 2 small concepts are there, that also will finish off. We'll take a break, of course. After this question, we'll take a short break. Come on. Question 33. Mr. Sharath constructed 8 flats of similar nature and let out each flat on a rent of 5,000 rupees per month. Mr. Sharath, 8 flats he constructed and each flat he let out at what? 5,000 per month. So what will be the amount? Just for your immediate calculation, 5,000 into 8, 60,000 per month into 12, correct? For the construction which commenced on January 2021, he borrowed a loan of 6 lakhs on 1/8/2021 at 24% interest. Construction was completed in March 2023. The municipal taxes paid during the previous year 24-25, 40,000. Includes arrears relating to earlier years, 10,000. What should I take? Municipal tax paid or municipal tax payable? Paid. 40 or 30? 40. Very good. Out of the loan borrowed, 3 lakhs has been repaid on 31st December 24. Pre-construction thing. When did the construction start? 1/8/21. When did the construction end? 31st March 23. My previous year is 24-25. So this entire thing is called pre-construction interest. But for post-construction I have repaid something in December 24. 3 lakhs. What is the rent? What is the amount I have taken? 6 lakh. In 6 lakh I have repaid 3 lakh. Repairs incurred for the flat during the current year 58,000. Insurance claim 16,000. To be taken or not to be taken? Ignore this point because it comes under standard deduction. Out of the 8 flats, 2 flats remained vacant for a period of 3 months and 1 flat remained vacant for a period of 9 months. So my rent received should be subtracted from this vacancy. So 3 months, basically I can take for full 12 months because 5,000 into 8 into 12 I can take, minus I can do these things. 2 flat remain vacant for 3 months and 1 flat remain vacant for 9 months. Determine the income from house property. So what is the construction thing, guys? What is the construction? Pre-construction, as I told you. So how many months? 1/8/21 to 31/3/22. And post construction also December I repaid. No. What is the pre-construction interest? 1/8/21 to 31st March 23. 1 second. No, you can just change this to March 22. Sorry. Construction is completed on March 22. So when is the construction completed? March 22. What is the pre-construction period? August, September, October, November, December, January, February, March. How many months? 8 months. So it will be, calculation of pre-construction will be 1/8/20. I'll just explain everything and then you can do it on your own. 1/8/21 to 31st March 22 will be how much? 6 lakh into 24% into 8 by 12. How much? 96,000. This 96,000 is allowed in how many installments? 5 equal installments. 19,200 rupees will be allowed from the year of completion of construction. In 22-23 only they have completed the house. Right? Yes. From the year of completion. What is the post construction period? Okay, 1 second. This is correct only. My bad. I only made a mistake. My sorry. Guys, even if you complete in March 23, what will you take as pre-construction period? 31st March 22. Yes or no? 31st March. My bad. My mistake. Sorry. It will be taken at which one? 31st March 22. We already discussed. Even though you completed the construction in March 23, you will take it on 31st March 22 only. We discussed that already. So it's correct. Question is correct. So what will be my post construction period? It will obviously from 2024-25, because 23-24 I should ignore. I am not considering. I am doing 24-25. No, here 1/4/24 to 31/12/24 I had 6 lakh. 6 lakh to 24% into 9 by 12. Why 9 by 12? April to December. December I have repaid how much? 3 lakh. So 6 lakh minus 3 lakh into 24%, remaining months January, February, March. So interest allowed in 24-25 will be 1,08,000 plus 18,000 plus this 19,200. Correct? And then that's it. 1,45,200 will be the interest allowed. 1,45,200 will be the interest allowed. Everyone got the interest calculation? Yes. Now the rent calculation I should do for both the 12 months also. Okay, first you copy this. Did you understand interest calculation, all of you? Yes. Copy. Pre-construction, post-construction. Very simple. You just need to make the overall rent minus the vacancy you have to subtract. That's all. So if you see 4,05,000, correct. Actual this you copied everything. Interest. See here, guys. Rent receivable from 8 units, 5,000 rupees per month into 8 units into 12 months. How much? 4,80,000. Less vacant rent. How much will be vacant? 5,000 per month into 2 units into how many months? 3 months. Plus 5,000 unit into 5,000 rupees into 1 unit into 9 months. So total 75,000. So overall 4,05,000 rupees. Receivable is received only, no? Is this unrealized rent or is this vacant rent? So vacancy is different from unrealized. So there what should I do? Overall, ultimately what I am doing, I am taking rent received only. Receivable minus vacant is received only, no? I should take received only. 4,05,000. And this I will anyway compare with what? Actual rent. Expected rent. Correct? I will anyway compare with expected rent. So this will come here separately. Expected rent, working note. Have they given anything about other things, guys? Have they given municipal value, fair rent? Have they given anything? No. So direct this only will be the actual rent. This only will be the GAV. So actual rent only will be the GAV. Receivable minus vacancy is received only. 4,05,000 is received. Everyone got 4,05,000? 4,05,000. Overall rent receivable minus vacancy will be my rent received. How much? 4,05,000. And then this will be put in my main thing. Did you understand here 4,05,000? Yes. You put that in the main thing. 1,10,300 should be the answer. This is the final calculation. In that gross annual value will be 4,05,000. Municipal tax 40,000. Net annual value 3,65,000. Deductions. For deductions I have already made one working note. Interest working note done. So whatever you wrote now is working note 1, working note 2, whichever numbering, it's fine. Then gross annual value 1 working note, interest on loan 1 working note, that's it. Easy question. But this has, vacancy is there, this has interest also, everything is there. Got it? Easy? Everyone? Yes. Just one more concept you write. Just concept you write, after that break. After that take a break, then one more sum and we are done. House property held as stock in trade. Guys, if you are a builder, that also you should see. House property held as stock in trade. After this concept, one more concept is there which is after the break, and one more problem after the break, and done. All problems you have solved. I mean, all in the sense, all concepts you have solved. And I'll give you that other material which will have the previous year's questions. You can solve that. We will solve together, one or two later. So house property held as stock in trade, builder. House property held as stock in trade, builder. Guys, if the builder is having stock in, house property, obviously guys, income from sale of house property is taxable as PGBP. Why? It's stock in trade. Correct? No, it is taxable as what? PGBP. And if I am letting out that house property, income from letting out of the house property is taxable as house property again. Taxable as house property. Guys, one more thing people were doing. They were constructing the house property. They were about to give it on rent or about to sell it, but they were not selling it only for a long time. 3 years, 4 years. Nirmala madam wanted to tax that also. Crazy she is. What did she tell? For 2 years I'll allow you, where your NAV will be nil. Net annual value will be nil because you have not rented it out or you have not sold. For 2 years if it is remaining vacant, vacant means you have not done anything, she will say that from the 3rd year onwards it is DLOP, deadly. What did she say for these people? 2 years you construct, 2 years you sell everything. You didn't sell also, you didn't rent also. So what will I do after 2 years? DLOP. So this is the amendment where the house property was held as stock in trade and not let out during the previous year. Where the house property was held as stock in trade and not let out during the previous year. Then NAV shall be nil for the period of 2 years from the end of the financial year in which the construction is completed. After 2 years, DLOP. So she is indirectly telling the builders, construct, sell within 2 years or rent within 2 years. You are not renting. What I will do from 3rd year? Even though it is vacant, I will make it DLOP, pay tax. Because this is to ensure that simply you will not build and convert black money to white money. How can I convert black money to white money? I can say its construction is still going on. I am spending this money, that money. I can raise fake bills and convert black money to white. Black money I have 1 crore. How to convert to white money? Fake bills you make, no? First floor constructed. This beaming added. On paper I am showing bills. And money I am depositing into the bank account. So black money is converted to white money. To stop that from happening, what did she do? This. Got it? For 2 years from the end of the financial year in which the construction was completed, it is called as NAV 0. After that it will be DLOP. Copy guys, copy these two. Yeah, copy. This is the other concept. House property held as stock in trade. Understood guys, everyone? Got it? So what is it? They are telling that 2 years you should keep. For 2 years I will deem it to be, its NAV 0. But after 2 years it will be deemed let out property. Deemed let out property. Not for others. Others and all I cannot charge. Only for the builders who are keeping a stock in it, because they were cheating by converting black to white. Simply they would build, drag it for 5 years. And in that 5 years, neatly converting black to white by creating fake bills. I have a lot of black money, I have to convert to white. How will I do? I'll open one building, make one building, and then say, first floor I am constructing, second floor I am constructing, I am adding the beam. Painting is actually 20,000, I'll show 2 lakhs. That's how I convert black to white. Billing, I'll put how much? 2 lakhs. And I'll put that, deposit that money 2 lakhs in my bank account. Conversion of black to white. Am I ready to pay tax? Yes, I'm ready to pay tax. But I am converting the black money to white money. Construction business is normal. Got it? So this is the thing. Last part, just write down the chart, guys. Then you can go for a break. I'll just write down the chart. This is the then I'll explain after the break. Okay, don't worry. This is called last concept. It is called deemed owner. Deemed owner. 1, 2, 3, 4, 5, 6 things. In these 6 things, even though you are not the owner, you are deemed to be the owner. 1. Transfer without adequate consideration. Second, transfer to minor child. Last concept this is. Third, holder of impartable estate. Holder of impartable estate. Fourth one, member of cooperative society. Member of cooperative society. That is apartment association. Lastly, last two, part performance. Part performance, TOPA. TOPA means Transfer of Property Act. Transfer of Property Act. Transfer without adequate consideration, transfer to minor child, holder of impartable estate, member of cooperative society, apartment association, apartment association, member of cooperative society, apartment association. Next, part performance, transfer of property act. TOPA. Last one, long-term lease. Long-term lease. Right, I will explain this after the break and then we will solve one sum and we are done. Okay, house property easy. This I'll explain. I have not yet explained the concept. I'll explain. So all the concepts you have done, guys, everything is covered, and there is one interesting question which we have to solve. After that, good to go. We have done vacancy. We have done for everything. I have given you concept capsule for everything. We have solved whatever relevant questions. That is good enough. And I told you previous year's questions have compiled. I will be giving it to you in a hard copy in 1 week. Then next time when we come, we will solve those questions also. Remaining, you can do it homework, you can check the answers, come back to me if you have questions, no problem. Right, so it is both of us have to work hard to ensure that we will clear. It's two-way, because you know, if I have to solve all the questions, it will take 200 hours. None of us have the time. So what we will have to do is all the concepts and few sums, then remaining sums, homework. Then you have to solve and come. Yes, tell me. 33 answer you want? Okay. No problem. Which one you want? Which part? Last part. Sorry, not this. This one, no, last part. 1 second. Okay. Can you see? This only, no? In which the last down, the first one, which one you want? Second part or first part? You are done? You wrote? Okay. So it is income from other sources, 1,10,300. Cool guys, take a break, 15 minutes. Alright buddies, let's see this portion now. Come back. Yeah, one by one. Deemed owner. What do you mean by deemed owner? It means you are not the owner, but still law is assuming that you are the owner. These are some of the cases, some points, that's all. First one, transfer without adequate consideration. People were very smart. Husband owned, let's say, 5 homes. Problem with that is what? If you have 5 homes, 2 will be SOP, 3 will be DLOP. I want to avoid this. What do I do? 2 I will keep. Instead of making 3 LOP, or let's say I have 4 homes, easier to understand. I have 4 homes. If I have 4 homes, 2 will be SOP, 2 will be DLOP. Now I want to avoid this. What I will do? I will keep 2, husband will keep 2. 2 he will transfer to his wife. Can you gift to your wife? Yes. Can you gift the property to your wife? Of course you can. So you have gift 2 property to your wife. Your wife will now become the owner. All 4 SOPs you have, 2 you and 2 now will be with your wife. For you, you will now take only 2, and for your wife she will take 2. So what should have been 2 SOP, 2 DLOP has now become 2 SOP in the husband's name, 2 SOP in the wife's name. Thereby income tax department is losing income tax. Tax planning they were doing. Allowed or not allowed? Not allowed. So they already have a chapter called clubbing of income. In clubbing of income, if you just transfer like that to somebody, the income tax department will say, no, it's cheating. But instead of going to clubbing, in house property only, they added a section. They said, even though husband has transferred the 2 homes to the wife, and wife has now become the actual owner. If you gift through a gift deed, wife is the owner, no doubt about it. But as per law, husband will remain the deemed owner. Husband will remain the deemed. Basically, they said reverse gear. You wanted to avoid tax. What did you do? Out of the 4 homes, you kept 2, remaining 2 you transferred to wife to avoid tax. Nirmala madam is doing reverse gear. You are telling my wife is the owner. Nirmala madam will tell, no, her wife may be the real owner now. But who is the deemed owner as per law? You. Reverse gear. That 2 homes will now be in your name only. And you have to take 2 as SOP and other 2 as what? LOP. Deadly. Reverse gear. That is called first one. Transfer without consideration. In transfer without adequate consideration, I will put a reverse gear. And who will be the owner? Husband only will be the owner. Understood? So who's taxed now? Husband. So only for house property and only between husband and wife. Sir, what about any other thing? Friend if I transfer, all that is covered under clubbing. Okay? Clubbing, others are covered. Husband, wife, where it is covered? Section 27, deemed owner. Correct? Section 27, deemed owner. I repeat, if I transfer to my best friend, I transfer to my other relative, covered under clubbing, later chapter. But only husband transfers to wife, wife transfers to husband, in those cases, it is covered under this section. And apart from husband, wife, one more is also covered, transfer to minor child, second one. Guys, minor child is not earning anything. Simply I will transfer the house to him to avoid income from house property. So reverse gear. So two reverse gear. One is husband transferring to wife, wife transferring to husband. Second one, me transferring to my minor child, less than 18-year-old child who is not earning anything, suddenly has 2 house properties and it is treated to be SOP. It doesn't make any sense. Right? Yes. Third one, holder of impartable estate. As the name itself suggests, impartable means it cannot be divided further. So even if you divide and go also, ultimate owner only will be the deemed owner. What is impartable estate? estate means property. A property which can never be divided is called impartable estate. Sir, but how is it possible? It will be there from the beginning only. When at the beginning only I will write that this can never be divided in the future. Actually, impartable estate concept came during the British Raj. Britishers came, took our own land only, and they gave back our land to different people. They gave back the land to those people who were very loyal to the British. I'll come to you and say, if you spy on that person and tell me what all he is doing, then I will give you one land. That land will belong to you. But you need to spy on them and tell me everything. You will go and spy and tell everything. So what will they give you? They will give you one property like that. That property is called, and they'll say, this property belongs to you only. Nobody has right over the property. This property is called as a impartable estate. Can you take it out of it? No. It's an impartable estate. You cannot touch that estate. So here also, if I keep on partitioning and somebody else I will give it to, ultimate owner will be me only. Like the father in the British Raj passed it on to his son, son passed on to other son. The son now in 2024 divides the asset and distributes to wife, children, friend, like that. Can he do that? No. Who is the owner? The son, because it's a part of something called as impartable estate. Got it, guys? First one is what? Husband transferring to wife, wife transferring to husband. Even though you have transferred, even though wife is the owner, law says no, husband only is the owner. Second one, transferring to minor child. Third one, impartable estate. You are holder of impartable estate, you are dividing and sharing with others, not allowed. Fourth one, those of you who stay in apartments, the entire apartment will have, like this entire, for example, apartment will have many homes. You just have one flat in that, that's all. Are you the owner of the apartment? Yes. Obviously. Owner of the apartment means that particular unit, flat. Are you the owner of that house? Yes, of course, you are the owner of that house. But you know what happens in the Karnataka Apartment Owners Association? Karnataka Apartment Owners Association Act, KAOA is there. In that act it says, when you buy a house in an association of person, so many people are there with their own homes, all of you should come together and start an AOP. What AOP? Association of person, and register it under the Societies Act. Then you own the house or the association owns the house? Association will own the house, guys. An entire building will be owned by the AOP. Then I will say, I have invested 1 crore and bought that house, what will I get? Nirmala madam says, you will get share in the AOP. So 100 people are there, I will have an AOP of 100 people. Each person has one flat and each person will get one share in the AOP. So if I have to sell the house, should I sell the house or sell the share? Sell the share. Understanding? Should I sell the house or share? Share. That's how everywhere it happens. Association owns the house. You own the share in the association. If you want to sell your house, what should you do? You should sell your share. My share, one flat, I need to sell. Understood? Now the question is, tell me, who is the owner of the property? Association. But who is getting the income? Association is getting or I am getting? I have one house, I am giving it on rent. Who is the actual owner? Association. Actual owner means on paper who is the owner? Association of person. But who is the deemed owner? Member. Understood? Actual owner is actually in the AOP, whose name is there as the owner? AOP, not me. But ultimately, who is the deemed owner? If I am giving it on rent, whose that income will be in whose name? My name. That's why this point is important. Member of a cooperative society. Member means shareholder. Shareholder of cooperative society will own that house, but actually on paper, who owns the house? AOP. AOP owns the house on paper. Legally, they only own, it belongs to them. If I want to sell the house, I can't sell the house. I should sell the share. My share I'll sell it to you, 1.5 crore, you please come be the owner now, no problem. But guys, if rental income I am getting, association, they will take it as income or individual will take it as income? Individual, because of this concept. What concept? Deemed owner concept. Concept of deemed owner. Next, Transfer of Property Act, part performance. So guys, many times it happens. Many times it happens. Tell me, you only tell me, when will I get the final ownership of any property? Is it when I pay advance, or is it when I take possession, or is it when the sale deed is registered? Obviously, you know that when the sale deed is registered, I will become the owner. So let's assume on 14th October 24, I entered into an agreement of sale, simple normal sale agreement. I paid 5 lakh as advance. On 1/1/25, I took possession of that flat and I paid some small amount, remaining amount I paid, some small amount. But on 10th April 2025, I registered the sale deed. According to you, ownership will transfer on which day? 10/4/25. But on 1/1/25, I took the possession and gave it off on rent. Give it off on rent. Tell me, when will I actually become the owner on paper? 10th April. When did I take possession and give it on rent? 1st January. January, February, March, 3 months I earned rent 1 lakh from that property. Who should actually get that money? Builder still, because builder has not given the sale deed yet. But lawmaker says no problem. Who is the deemed owner? Anybody who has taken possession of the property by paying some amount, he is called as the deemed owner, and tax he only has to pay. This is also given in the law called Transfer of Property Act. Transfer of Property Act also says the same thing. Do you understand, guys? When is the ownership transferred actually? Sale deed. But as per Transfer of Property Act, if there is part performance of the contract, what is part performance? Some amount I would have paid as advance, or some 50%, 60%, something I would have paid in bank account, not cash, bank account I would have paid. Then the TOPA says no problem, ownership will be transferred based on possession. But ultimate ownership you will still get when? Sale deed registration. But some ownership will be transferred. He can be called as an owner if he takes possession. Many sale deeds are not yet registered, right? But people are still, in possession. Correct? Sale deed will be registered later. Can you call yourself as the owner? Yes. When? The day you take possession. So, actual owner this day. Deemed owner from which day? 1/1/25. As per which law? Transfer of Property Act. Understood? Last but not the least, long-term lease. In a long-term lease, guys, they say lessor will be the, who will be? Lessor will pay, lessee will pay. Lessor, basically 99-year lease I will take, or 30-year lease I will take. You will be giving me the lease rental. Isn't it a rental amount? Yes. So in long-term lease also, for practical purposes, you may only be the owner actually, because 99 years you are taking. Shah Rukh Khan has taken that house Mannat on a 99-year lease, by the way. He didn't buy it. He took it on lease. Now you only tell me, guys, who is the owner? Deemed owner. Shah Rukh Khan. Correct? Now if he gives it on rent somewhere, who will be the deemed owner? Shah Rukh Khan. Who is the actual owner? That fellow who gave him on 99-year lease is the actual owner. But who is the deemed owner? Shah Rukh Khan. Because of these properties, now if Shah Rukh Khan has given Mannat on rent, Shah Rukh Khan has to pay tax, not the actual owner of that land. Understood? Got it, guys, all of you? These are the small points where it is called as what? Deemed owner points. They will never ask all this in the exam, but in the question, they will give you a question whereby he would have paid some advance and taken possession. Immediately it should strike you that ownership has been transferred. As per which law? Transfer of Property Act. Everyone got it? They'll not ask directly, explain transfer of property. No, they'll ask in the adjustments. Okay, now Shah Rukh Khan has taken Mannat for 99 years rate from somebody. Who is the deemed owner? Shah Rukh Khan only, no? If he gives it on rent, he only has to pay the tax, right? Tax, yes. That will not be called as sublease because he is the deemed owner. Sublease will be I take monthly rent and give, that is sublease. Okay. Done, guys. That is deemed owner. Last question in this very interesting question. Question number 37. Let's see 37. Very interesting question. Mark this as important. Mr. Aloo. Aloo means what? Potato in Hindi. Mr. Aloo and Mr. Kacha Aloo. Kacha Aloo means raw potato. Right? Mr. Aloo and Kacha Aloo constructed their houses on a piece of land purchased by them at New Delhi. The built up area of each house, 1000 square feet ground floor, 1000 square feet first floor. Tell me what is the overall square footage? 2000 or 4000? Read. Answer, guys. In on land, two brothers will construct house. 2000 square feet or 4000 square feet? Answer. Guys, see, constructed their houses. There only will go wrong. The built up area of each house. 1000 square feet ground floor. Equal area first floor. So, Aloo will get 2000 square feet. Kacha Aloo will get 2000 square feet. How much? I told you what is the built up area of the entire area land in the land? 4000 square feet. See here, each their houses. Each house 1000 square feet ground floor. 1000 square feet. So what is the area? 2000 square feet only, no? Now this is what is this area? 2000 square feet. On top floor same one area I will build. So what is my area? 2000 square feet only, no? That is Aloo. Each their houses and each house. Aloo will build 1000 plus 1000. Kacha Aloo will build 1000 plus 1000. That's what they are saying. Both will construct. Now see here, the built up area of each house. They built their houses on a piece of land. So on a piece of land, Aloo built ground floor, first floor. Kacha Aloo built ground floor, first floor. Two brothers. So 1000 square feet, 1000 square feet, 1000 square feet, 1000 square feet, two separate houses side by side they bought in that piece of land. So I am asking you, what is the overall built up area? 4000 square feet. That's what I am trying to tell. 4000 square feet is the built up area of the entire, all two brothers put together. Aloo started construction on 1423 and completed on 1424. Kacha Aloo started the construction on 1423 and completed on 3624. Aloo occupied the entire house on 1424. Kacha Aloo occupied the ground floor on 1724 and let out the first floor for rent of 15,000 rupees per month. However, tenant vacated the house on 31/12/24 and immediately Kacha Aloo occupied the entire house during 11/25 to 31/3/25. Guys, partly LOP, partly SOP, deemed to be full LOP. Yes or no? Deemed to be full LOP. Other information: fair rental value of each unit. Ground floor or first floor, 1 lakh per year. Sorry, 1 lakh per year. Municipal value of each unit, 72,000 per year. Municipal taxes paid by Aloo, 8,000. Kacha Aloo, 8,000. Repair and maintenance, ignore. Aloo has availed a housing loan of 20 lakh rupees at 12% per annum on 1423. Kacha Aloo has availed a housing loan of 12 lakh at 10% on 1723. No repayment was made either by them on 31/3/25. compute the income from house property. So guys, in this, first thing I need to understand is what? When did I complete? So this is the structure, most important. Alu 1000, Kachalu 1000. Alu started on 1423, Kachalu also started on 1423. Completed 1424, completed on 3624. Ground floor SOP. Kachalu 1724 to 31325 SOP. Right? You see? Occupied the ground floor on 1724 and let out the first floor. So ground floor 1724 to 31325 what? SOP. First floor also SOP for Alu. For Kachalu 15,000 rupees per month from 1724 to 311224, that is LOP. But 1125 to 31325 SOP. Is this clear? The structure? Copy this first. Copy. Everyone, I am just copying the question only. So to give clarity, that's all. Come on guys, write down. Got it guys? Now tell me guys, are you with me? Understood? So first you should do in the books of Alu, then in the books of Kachal. Alu is very easy. SOP, dead easy. Only thing you will get is what? Interest portion, if any. Alu is very easy. Kachalu, little bit problem, but still one question that I want to ask you is this. Alu, very easy guys. What is Alu here? If you see, how much is he paying? 20 lakh at 12% per annum from 1423. That full, how much will it be? Pre-construction, post-construction, will it come or not? Yes. Why? What is the pre-construction period? Yeah. What is the pre-construction period? Completed on 1424. So 2425 is, you leave it. So from 1423 to, so sorry, when is the construction, this thing, pre-construction? 1423 to 31st March 1423 to 31st March 24 will be my pre-construction period. Correct? 1423 Loan taken on 1/4/23 to 31st March 24. Why? Construction was completed on 1/4/24. That anyway I have to avoid. I told you, year of construction should be taken, not date of construction. So what is the pre-construction period? 1/4/23 to 31st March 24. 20 lakhs into 12% into 12 by 12. To be allowed in 5 years, 5 equal installments. On the other hand, so working note 1. So you can say house property in the hands of Mr. Alu. First of all, I am doing income from house property in the hands of Alu. In the hands of Alu. Working note 1 will be what, guys? Pre-construction interest. 1/4/23 to 31st March 24 will be 20 lakh into 12% into 12 by 12. How much will it be? 2,40,000. This 2,40,000 will be spread across how many years? 5 years. What is the post-construction interest? 1/4/24 to 31st March 25. 20 lakh into 12% of 12 by 2,40,000. So 2,40,000 plus 2 lakh plus 48,000 is 2,88,000. But is it 2,88,000? Is it allowed for SOP? No, restricted to 2 lakh. Alu is full SOP only. So write this down. Restricted to what, guys? 2 lakh. Correct? Why? SOP. And this working note will now form part of my calculation for Mr. Alu. Alu's calculation is easy. Nil, 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 2 lakh rupees. That's all. So for him, easiest. Gross annual value, nil. Municipal tax, nil. Net municipal tax, they have given in the question, he has paid so much. Will you take or not? No. Please, by mistake also, don't take this, guys. Here, Alu 8,000, don't take 8,000. Then deductions. Standard deduction 30%, nil. Interest on loan, working note number 1, 2 lakhs. Got it? Now, last part is Mr. Kachalu. Guys, for Kachalu, ground floor is what? Ground floor is SOP. First floor is deemed to be full LOP only, because even though you state for 2-3 months SOP, it is divided in the period. So, entire thing is what? Deemed. So basically here you should do this thing, particulars, SOP, LOP. What is SOP? Ground floor. What is LOP? First floor. Now my question to you is this interesting part. This only if you figure out, question easy, over. Fair rental value of each unit. Ground floor / first floor. So 72,000 is for full building or per floor? Per floor. That's all you should think. So if both were LOP, you would have taken municipal value as what? 72. Now you will take what? 0. For SOP it is 0 only, no? And for LOP? Do it, guys. Solve. 3 columns. Particulars, SOP, LOP. Please try. Particulars, SOP, LOP. Interest? Interest will it come? How much will it come? That will be as a working note. Interest calculation will be your working note, definitely. Pre-construction, post-construction. Try, guys. Please try. I want you to try this. Let's see how many of you will get the answer. What did I tell you? Particulars, SOP, LOP. Right? Municipal value, then fair rent, municipal value, fair rent, everything you should take. And then less interest. When you take interest, no, that what will I take? When I do interest, what will I take? Working note, you write working note and do the working note. Pre-construction, post-construction. Please try. Genuinely try. Take 5 minutes. Let's see how many of you will get it. Come on, all of you try. It's okay if it's wrong. I really don't care. It's okay if it's wrong, guys. But please try. Without trying, dangerous. No spoon feeding. You are jumped in the ocean. I am like the lifeguard waiting from outside. If you are sinking, I will help you. Please try. This is the only way to clear inter exam. Not by spoon feeding, not giving the answer, copying down. Doesn't make any sense. Try. Genuinely try, all of you. I have explained what to do. Do it. Take 5 minutes, guys, all of you. Then you need not take. It's just municipal value, fair rent, and whichever is higher, then that and directly actual rent. Whichever is higher, over. So here, guys, again I repeat, you see, when are they taking the house? 3624. When is the house getting constructed? 3624. So from how many months am I living? 9 months. In that 9 months I do SOP, LOP, I don't care, everything is LOP. But municipal value, fair rent value, all that is already there for 12 months. I should now bring it down to 9 months. How can you compare 12 months to 9 months? Not possible, right? You should divide everything to how much? To 9 months. So fair rent. You see, municipal value 72,000 into 9 by 12. This you would have not done. Fair rent 1 lakh into 9 by 12. This you would have not done. After that, everything is same. Yes, municipal tax also. Municipal tax, what do you think? Municipal tax is how much, guys? 8,000. Municipal tax, is it for the full year or is for construction you will get? For construction you will get, or you will get pay for the full year? Full year. So here will you deduct or not? No. The fair rent is for overall year, per year. Have they given here per year? No. That one question I'll ask you. Municipal tax, whether it was constructed mid-year, end of the year, whatever it is, tax you have to pay for full year, no. Municipal tax is for construction of the house, that's it. So that will not change. But there 50% you have to take. Why? 50% SOP, 50% LOP. Check, guys, this is the answer. Yes, loss 8,800 is correct. So this is a silly mistake, whatever you have done. You should be very careful. So till here you can copy. Municipal value 54,000, 72,000 into 9 by 12. Fair rent 75,000, 1 lakh into 9 by 12. 1 or 2, whichever is higher, 75,000. Standard rent not applicable. Expected rent, whichever is lower, Actual rent 15,000 into 6, because he got rent only for 6 months. Other 3 months it was not vacant. Please don't think it was vacant. What was it? Self-occupied. Everything is DLOP. Municipal taxes 50%, net annual value 86,000. Standard deduction. This is a very easy question, but we will always make mistake if we do some silly mistakes. That's all. Not reading the question will ensure that we will not give the correct answer. Interest on loan, working note. I'll show you. Income from house property 69,000. What mistake had you done? Interest. Okay. Oh, you got 86,000, no? You told something. Profit 86,000 you told. Interest module subtract. Okay. Interest you have to subtract. Standard deduction 25,800. Interest on loan 69,69. Everybody understood this? We have to do the interest. I'll show you the interest calculation just for your verification. So it's a very easy question, whatever we have done, but silly mistake. But the silly mistake, will you lose all the marks? No. Here half mark you will lose. That's all. Sir, will I lose full marks? No. Half mark, 1 mark you will lose. If it's a 5 mark, 6 marks question, 1 mark you will lose. For other steps they'll give marks, no? Yes, so only this half mark will go. But why lose that mark? That's okay, they don't care about that. Stepwise. This step is wrong. Other things are all okay. No problem. Fine. 1 mark you will lose. Last bench here. Sure? Next. I can't see you. Understanding? Sure? There? Okay. If you have any doubt, ask me the interest, guys. Interest. Pre-construction interest from which date to which date? 1/7/23 to 31st March 24. 12 lakhs, 10% into 9 by 12, 90,000. 90,000 divided by 5 equal annual installments, 18,000. Pre-construction interest 1/4/24 to 31st March 25. That is how much, guys? 1,20,000 rupees. Then divide it. Total interest is 1,20,000 plus 18,000. 69,000, 69,000. So we have done with house property. We did residential status also. We finished. Super. So other things are there. The full chapter is not over. Only residential status of individual is over. Company is there. Then you have other things that you leave. Later we'll see. But I'm talking about residential status of individual is over. That we have finished, no? Yes. So today's homework, you have to study that residential status of individual at home. Full revision of house property you have to do. Half an hour, I will finish it, I can assure you. That's it. And then, whenever possible, each one day, just try to solve one concept capsule. And by next week, I'll give you the material, guys, answer, Q&A. Then you keep solving. Suddenly, you should revise and then solve one question. We still have to solve few questions in the other material. I am waiting for that Q&A, that all previous year's question papers. Better to solve those because those will come in the exam. It will have these questions also. This is a PDF, you just keep solving, but main question booklet must be the one which I am going to give you. Okay? How did you find house property? Easy, difficult? Easy. Go home today, coolly study residential status and this. Okay? Thank you.